Right, good morning everybody. Can everyone hear me okay? Awesome. I can't really see anybody currently, so it's good to know that you're all out there. A very warm welcome to Manchester, the University of Manchester's Whitworth Hall, a fantastic building, I'm sure you'll all agree, a mere yards over the road from where the world's first programmable computer was invented. So yeah, very much an auspicious place to bring you all together to talk about FinTech innovation in the north of England. My name's Joe Roche, I'm General Manager of FinTech North. So yeah, on behalf of the FinTech North team, a very warm welcome to our Manchester conference. Always one of the most exciting events of the year. A few bits of housekeeping first before I get underway. There's no fire alarm expected today, so fire exits are to either side of the stage or back out through where you all entered the building. Toilets are downstairs. There's also a ladies' toilet just down the corridor and a gents' toilet halfway down the mezzanine. For most of today, we'll be in this room, but for the main networking breaks, we'll be through into Christie's Bistro, which is the cafe down the corridor. Please go through there, please chat to some of our exhibitors. These organisations have helped make today happen, and we couldn't have done it without them, so really encourage you to go network with some of those people in that room. So huge thanks to some of our sponsors. We've got Oak North, our headline sponsor. We've got Pulsant, RSM, Attendist, MasterCard, Cyber Alchemy, Intercash and Barclays as our brand sponsors. Big thanks to the team at the University of Manchester for looking after us today, also one of our brand sponsors. Big thanks as well to Bruntwood SciTech and Merge for also supporting the event. First of all, can I just get a quick round of applause for the FinTech North team, Ryan and Rachel as well, for doing all the hard work on today's event. Couldn't do it without you guys. I can't see you, but you know, I know you're out there somewhere. So yeah, as I said, I'm Joe, General Manager of FinTech North. I just want to explain a little bit about the work that we do, and then I've got a really important message to give as well to the community. As an organisation, we exist to bring the Northern FinTech community together. We exist to develop the sector in the north of England, supporting entrepreneurs, startups and scale-ups with profile and connections right across the community. We're here to align that development with what's going on a national and indeed international stage and be a bit of a conduit between the regional and the national, and the presence of organisations like Innovate Finance, the Bank of England, the FCA really indicates that today. Just moving on, you won't be able to see this graphic very well. I didn't think I'd be complaining about sun in Manchester today, but here we are. I think somebody must have moved the building, basically. But anyway, you can hopefully see this on the repeater screens, and we will lose the sun later on in the day, so you will get some better visuals on this screen as the conference progresses. But in essence, we are an events organisation. We bring a community together for events like this. That's the main way we achieve some of those objectives that I mentioned there. We also host trade missions, webinars, seminars, socials. The main value that we provide to our partners and sponsors, it goes back to that profile, connections. Those are some of the main things that we can provide. So if anybody here, any organisations are interested in working with FinTech North, with getting engagement with the North's amazing FinTechs, please chat to me, please chat to Ryan and Rachel. We'll be able to help you, and maybe we can work something out and work together in 2026, which will be awesome. Again, you might struggle to see some of these organisations, but some of our wonderful partners are on screen right now. We wouldn't be able to do the work that we do without the support of these like-minded organisations who are here to champion regional innovation, shine a light on what's going on in places like Manchester, and generally show everybody that you can have a great career in FinTech, tech, financial services right here in the north of England. So yeah, really important message I wanted to impart here. We recently lost our chairman, Chris Sear. Really emotional time for us at the team. And I just wanted to ask if we could have a minute's applause for Chris Sear in memory of him. So if I could start that right now, that would be awesome. So the FinTech North Director, Julian Wells, will be speaking a little bit more about Chris shortly, but it gives me great pleasure to introduce our first speaker of the day. From the University of Manchester, Professor Marcos Zachariadis. So can I have a round of applause for Marcos, please?
Thank you, Joe. Welcome, everybody. Good morning. That's better. Just a quick welcome on the behalf of the University of Manchester. Well, my name is Marcos. I'm the founding director of the Centre for Financial Technology Studies here at the University of Manchester, based at Alliance Manchester Business School, just on the next block. And I'm a professor of financial technology and information systems here. So just extend a warm welcome here for the FinTech North Conference, which has been taking place now here at the University of Manchester for a few years. It's become kind of a tradition. So it's a pleasure to be able to host this here and show our support also for the FinTech agenda here at the north of England. Just a couple of things about what we do also. I mean, as you probably know already, University of Manchester is one of the top universities in the UK. We're a research-intensive university, so we really, whatever we do, we ground basically on the cutting-edge research and rigorous studies that we do at the university here, and want to use that in order to create impact at the policy-making level, regulation, but also business, and also use that to bring insights inside our class and train the next generation of leaders in financial services, specifically when we talk about the role of technology in finance. At the center, we launched the center about 3 years ago. It was actually here at the FinTech North Conference taking place in Manchester that we first announced the founding of our Center for Financial Technology Studies. And ever since we've grown, I'd say dramatically. We've managed to hire at least 5 or 6 new staff members, fully dedicated professors, academics working on the role of technology in financial services. If we include a lot of the affiliated staff throughout the university, the postdoctoral scientists, the PhD students that we have working on dedicated topics within the context of FinTech, we're more than 20 people. And we cover a lot of topics, you know, anything from distributed ledgers to blockchain, to the future of money, digital cash, open banking, open finance, FinTech for good, and lots of different topics. I would encourage you to also try and visit our website online and see if there is anything that interests you. We're here today, as Joe mentioned before. You will hear from us more throughout the day. A couple of my colleagues will be speaking at different panels, specifically Andrew Buckley will be on a panel on payments innovation, talking about some of the research that we've done on CBDCs in partnership with Digital Pound Foundation. And also from Chloe Fox-Robertson, who will be speaking more about inclusivity and diversity within the context of FinTech. But there's more of us here. We also have quite a few students, so try and spot them around the room, see what they've been doing for their FinTech electives in their MBA or different courses. And, you know, if they look nice, yeah, and they know what they're talking about, you can also hire them. But yeah, that's as far as we go. I think also I'd like to point out that we have our business engagement team here. So it'd be great if there's anything that you'd like the university to collaborate with you, try and help, for example, some problem, try and see if we can figure out a way to help with some of the research that we do. Please do reach out to them. They're located downstairs at committee room B, I think. And Rachel Kenyon is here in front. That's the lady there raising her hand. Please do grab her and her team and see if there's any way we can help. Again, a warm welcome and hope you enjoy the conference. Certainly the weather agrees with us today, so it's a pleasure to be here and also see you all. Thanks very much.
Thank you, Marcos. It's awesome to have the support of the University of Manchester. This is very much our spiritual home in the city. So huge thanks to Marcos and Rachel and the team there. Brilliant to see so many of you here today. I would implore you to support one another, network, collaborate, form partnerships, all of that good stuff that us Northerners are really good at right across the day. I know the community are so good at that, and that's the kind of day that you're going to have today. Very much the value is in the room right here, so we'd really implore you to really get stuck into the networking. So our next segment is something that we're launching today in memory of Chris, our chairman, who lost his battle with cancer a couple of weeks ago. We've decided to launch the Chris Sear keynote, which is something a bit of a tribute to him. Chris was often controversial, never shy of throwing some punches when he used to deliver his welcome speeches at FinTech North, and we thought it would be best to continue in that spirit and invite people to deliver a keynote address in that vein. So next year you'll see some of those speeches right across all of our conference calendars. We're really looking forward to launching that as a tribute to Chris. And I'd like to hand over to my director, Julian Wells, to just say a few words about Chris and memorialise him more formally, and then we'll carry on with the conference content after that. So yeah, thank you.
Thanks, Joe. Morning, everybody. That is bright. Let's hope I can read my notes here. Okay, so it's my honour today to give the first of the Chris Sear welcome address talks. As Joe said, they might be keynotes, there might be welcome addresses, there'll be something on the agenda each time. So just bear with me 1 second. So, good morning, everyone. Welcome to FinTech North. Brilliant to have you all here, and thanks to all the partners and sponsors that make today possible. Those of you that know me will know that when I speak, I don't really run off a script. I tend to avoid that, but today I am doing, and the reason I'm doing that is a mark of respect to Chris Sear, who's FinTech North's first and only chair, and because he shaped so much of what this community has become over the years. I think that the words used in this opening address, it was important that they're carefully chosen, hence why I've written them down. Chris meant a great deal to this community, and to me personally and all the FinTech North team. He believed deeply in what FinTech North could be, bold, principled, and genuinely regional, as well as national. And he gave time, insight, and passion to helping shape FinTech North and to championing fairness and transparency across financial services much more broadly. I had the privilege of working closely with him, and I learned a great deal from his advice, his challenge, which, as Joe said, was significant, and his belief in what this community could achieve. And he signed off his farewell message to the FinTech North community with the words, "Thank you, farewell, enjoy life, and be happy." So thank you, Chris. We'll honour that spirit today, and your legacy will live on in so many ways, including this speaker slot at our future conferences, as Joe's explained. So on to some more sort of the topics of the day. To open, let's have a look at the economic backdrop. So are we at a turning point? Let's hope so, although I'm not sure many of us in the room are feeling too excited about tomorrow's budget. But let me briefly set out the context that we're operating in at the moment. So the economic environment is cooling, has been for a while, but maybe it's not cold. Growth is modest at best, inflation's eased, but households and businesses are still making really careful choices. So we're also in a rate environment that's come down from its peak, but hasn't quite settled down to a new normal yet. And that brings uncertainty, but it also brings opportunity, particularly in areas such as lending and credit. And if Chris were here, I'm sure he'd correct me and refer to responsible lending. So the policy backdrop's shifting as well. Smart data, payments reforms, AI frameworks, these things are all shaping the next phase of competitiveness for the economy. And they're also creating excitement in respect of potentially game-changing reform in areas such as home buying. So FinTech doesn't sit outside all these economic conditions, but it responds to them. And historically, moments like this often produce some of the strongest innovators. And a great example of that is Zopa, one of the original FinTechs, who came to prominence in the wake of the credit crunch, and those of you that are old enough to remember. And they've recently opened a Manchester office, which is really fitting timing for today. So what about FinTech more broadly? Where are we now? I guess a constant theme of talks I've given this year has been that this sector's stabilised, it's matured, investment has stabilised at a more rational level, the hype cycle of fintech is behind us. Scale-ups have been maturing, such as today's sponsors, Oak North, and firms with strong business models are prospering. Secondly, the UK remains Europe's largest and strongest fintech ecosystem and a really desirable target market for international fintechs. But global competition has intensified, and we'll hear from Peter at Innovate Finance later. But as a nation, we've slipped to third in the global list now. We need to compete on agility, talent, regulatory clarity, and real-world application. And thirdly, and importantly for today's conference, the regional story is now central to the fintech sector. This year, Whitecap Consulting published the North of England FinTech Report 2025 and found that there were 400 fintech firms across the north, and that the sector's generating an estimated 5 billion of GVA to the regional economy, which is really significant. That's a scale and level of impact that simply didn't exist a few years ago, and it reflects the depth and diversity of capability across Manchester, Leeds, Newcastle, Liverpool, and the wider region. So UK FinTech has grown up. It's more balanced, more disciplined, and more regionally distributed than ever before. And despite some of the doom and gloom, there are opportunities to be excited about. So looking ahead, some clear areas. Open finance and smart data, expanding beyond bank accounts and payments, with mortgages and SME finance first up on the FCA's agenda for its first 2 tech sprints, as I'm sure we'll hear about later on. AI as an operational infrastructure, from things like underwriting to fraud detection, onboarding, complaint management. AI is bringing efficiencies and enhancements that are challenging our ways of working, but also changing consumer expectations. Embedded finance, widening the use of embedded payments is going to help drive growth in fintech, allowing fintech solutions to reach any sector where the transaction sits inside the customer journey. Digital identity and trust, foundational to reducing fraud and enabling faster, safer transactions across so many areas of financial services. And there's significant work being done in the north relating to areas such as property data and trust frameworks. Tokenization and digital assets. I think tokenization might just prove to be the FinTech word of the year in 2026, as we see a shift towards regulated real-world assets and new settlement models. And then finally, financial inclusion and cost of living responses. So amidst the challenging economic environment, we'll see ongoing and increasing demand for tools that support affordable credit, savings, and SME liquidity. So the next phase of UK FinTech will be built on data, AI, trust infrastructure, and distribution ecosystems. But there's also going to be challenges to face up to. Funding remains tough for early stage firms. Regulatory expectations continue to rise and are very demanding. Fraud is escalating rapidly, fueled by deepfakes and identity theft. And there's talent gaps in areas such as AI, engineering and risk. And FinTech careers need better supporting from an early stage, something that FinTech North are taking action to support. And scaling a FinTech remains difficult without a strong route to market, which for most FinTech firms means partnerships. So these things aren't barriers, but they're constraints that will shape the next generation of winners in FinTech. And at this point, in the spirit this keynote is intended to be delivered, slightly provocative, I'd like to table a couple of radical ideas for the government that might significantly move the dial for FinTech entrepreneurs, which is a group that Chris here was always extremely passionate about supporting. So firstly, let's make it easier to become a FinTech entrepreneur and introduce a fully funded 12-month salary for every FinTech founder to de-risk the decision to start a FinTech and ensure that great ideas aren't limited by personal wealth, postcode, or privilege. And secondly, how about a national FinTech innovation tax credit tailored to meet the needs of FinTech R&D, such as compliance, fraud, and financial inclusion? And to be really radical, let's offer enhanced relief for firms based in the regions outside London for these points. So, to close off these opening remarks, in Chris's spirit, let me close with three quick thoughts. Firstly, the UK's advantage is our problem-led, commercially grounded innovation culture, and we need to build from this. Second, the regions, especially the North, now sit at the heart of the national FinTech story. And third, 2026 will be a landmark year for open finance, AI, digital identity, and tokenization. So I want to finish in a way that Chris often did in his opening remarks over the years. Chris believed events like this only matter because of the people in the room, and he believed passionately that every speaker deserves a question, especially the entrepreneurs showcasing their businesses. So in his spirit, enjoy the day, be bold, be curious, talk to people, ask questions to the speakers, especially the FinTech entrepreneurs, make new friends and make new contacts. Thank you, and have a fantastic day at FinTech North today. Shall I carry on, Joe? Yeah, so I'm actually chairing the first panel of the day as well, in a late change to the agenda over the last few days. So I'd like to invite the panelists up to the stage for the Staying Ahead panel, which is focused on the North's FinTech outlook and the road to leadership. So if you guys could come up on stage, that'd be great. Thank you. So when the speakers have sat down, I'll ask them each to introduce themselves, but we've got Stuart Howarth from Senior Director of Debt Finance from Oak North. We've got Rachel Kenyon, Business Engagement Manager from University of Manchester. Gemma Daros, who's Head of Acquiring, FinTech and Public Services in UK and Ireland for MasterCard. And Anish Sandhu, who's co-founder of Scholar Saver. So I'm actually going to stay up here because I've got the questions in front of me. Could you guys just briefly introduce yourselves to kick things off? And Rachel, let's start with you and work our way down the panel, if that's all right.
Yeah, thanks,
just a little bit of background about yourself and your role.
Of course. It really is bright up here, isn't it? Hi, everybody. Feel like really in the spotlight. So, yeah, I'm Rachel Kenyon. Marcos mentioned me and my team. I'm part of the university's business engagement and knowledge exchange team. What does that mean? We help people in the real world, as it were, practitioners in whatever sector, to connect in with our academic researchers, to inform our research through real-world challenges, and to make sure that our academic endeavours are having some impact on the world, whether it's your business problems or launching new products, or whether it's grand societal challenges. We've got academics researching across pretty much every discipline who could be useful to you, and our team is there as like a very highbrow, still a black relationship broker that will help match your need with our academic knowledge and expertise. So if you're interested in finding out what that means, as mentioned, some of my team are downstairs in Committee Room B all day long. They are there, and they'd love it if you dropped in to the drop-in so that they're not just there talking to themselves. So please do go and speak to them if you don't grab me later on.
Hi everyone, Gemma Daros from MasterCard. I look after acquirers, fintechs and public sector for our services business. And services within MasterCard is the area of the business which offers essentially value-added services. So that's almost anything beyond the core payments, so things like fraud and cyber protection solutions, data and analytics, loyalty, marketing services, and importantly, innovation and co-creation services as well. We work actively with fintechs, not only in London where MasterCard is based, but all over the UK. And really happy to be here today and looking forward to the discussion.
Yeah, good morning everyone. Stuart Howarth. I'm a Senior Director of Lending at Oak North. Oak North established back in 2015, and since then we've been active in the region, lending over 600 million since then. Since our launch, I guess, we've been really focused on sort of standout businesses in the region, scale-ups, whether that be kind of tech-enabled manufacturers, healthcare innovators, or kind of service-led, fast-scaling businesses. And I guess just to emphasise what Oak North really focuses on, it is the scale-up, so less the start-up, and really bridging that gap between the start-up into the large corporate. We're really in that scale-up mode. Why do we do that? Well, we see that as the missing middle, I guess, for UK growth. That's vital for, I guess, innovation, exports, and job creation.
Hello everyone, my name is Ashish and I'm from ScholarSaver. We help students manage their finances so they don't drop out, because it's a real huge problem out there in the universities. Like every 27 seconds there is one dropout that's happening right now, and it's a huge problem out there, so we are trying to solve it. We incorporated last year, so we are a startup based in Liverpool, and yeah, we help universities save dropouts.
Brilliant. Okay, so you can see we've got a varied panel here, and there'll be a chance to ask some questions once we get a bit of a way into this discussion. But for now, I'll kick things off. I've just mentioned in the opening remarks about the regionalisation of FinTech and how the North's really strong with 400 FinTech firms. That the majority of those firms are in the Northwest, and Manchester's the biggest hub in terms of number of FinTech firms in the north of England. So I'd like to invite you guys from your perspectives to just comment on what you think's driving the momentum at the moment in FinTech, and if you've got any thoughts on the north within that answer, then that would be great. So Gemma, I can see you nodding, so I'm going to go to you first. But you got a bad sign. If you look like you're ready, I'm going to start with you. Yeah.
Sure. Yeah, I asked for that. So I think, there's lots of dynamics at the moment, but I think AI, artificial intelligence, is a big one. It's been around a while, but I think we're at a really exciting and important point in its progress, and how the use of AI in a much more mainstream, everyday life. I think we're really hitting that point now, and moving into next year. I think there's an enormous amount of opportunity for disruption, leveraging AI, and taking forward new business models using AI in a different way. So if I had to pick one, I think that's certainly one that I would call out. For the North in particular, so Julian's already touched on the great infrastructure that already exists, but I would just call out, but perhaps this would be more for you to comment, is the great talent that's grown in the North. So I think it's around 40% of students come to university in the North. I don't know the stat that then don't stay in the North, but I think the amount of talent that comes from this region, and this change and quite pivotal point that we're in with the use of AI and FinTechs is a really exciting mix, and 2026 could be the year.
So I can
Good
build
segue
on
to
two
you,
of those
actually.
points. I've come armed with stats because I'm over 40 now, so I can't remember stats. I have to have them printed down. I'm not really going to go into the FinTech things because I'm not an expert in FinTech, and lots of other people are here today. But since Gemma mentioned AI, Manchester has been named the UK's most AI-ready city in various indices, and it attracts the most funding and has the highest concentration of AI companies outside of London. So that's quite key as one of those adjacent sectors that is, as you mentioned, or very relevant to FinTech. And generally, 50%, by the way, is the number of grads in the Greater Manchester, not just from UOM, but from the Greater Manchester universities that stay in the city after graduation, and that's been going up and up. It used to be that people would graduate, go to London a few years, and maybe come back, and increasingly they're staying because of the opportunities here. But the rate of growth at Greater Manchester as a whole is the fastest growing city region in the UK. It's been, over the last decade, grown at twice the national average, 3.1% growth. Is more than double the national average. So there's a real opportunity, and at core to that growth are sectors like finance and FinTech, digital, cybersecurity, and AI. So all very relevant adjacent sectors that are really strong in the Greater Manchester area.
Okay, Very good.
And I
Thanks,
think
Rachel.
nothing really to add. I think actually, I think we touch on it greatly in the sense of the talent pool that's here in the region. I think what we're seeing, I guess, as a FinTech ourselves, is actually talent recruitment and retention becoming a little bit more difficult, because actually you've got some of the some of the bigger FinTechs as well now relocating head office, back office functions up into the region. And I think that's a great sign of the times, actually, that we're getting that kind of, we're on the map. People see it as genuinely the hub of innovation and talent retention where you can get now. Clearly that has an impact if you've already got an established base in the region, and therefore retaining talent becomes a little bit of a challenge. But I think that's just great in terms of the wider northwest, northern kind of ecosystem for talent in particular. The AI point, I think, is, I don't think anyone's really grasped it yet in terms of just how quickly it is really evolving and moving, and I think that will just accelerate. Like, as the more and more conferences you go to, the more and more people you speak to around AI, I think that will be the element that really drives, and I don't think we're thinking 5 years, I think we're thinking 2 years for some of this to really accelerate.
From the perspective that I see, it's kind of like the fintech firms are like huge here, like in the northwest region. Outside London, like it's the biggest hub, like the Manchester specifically, and we have like 100,000 students based in Liverpool, Manchester, Lancaster, and this is the highest pool of, like, you can see as the founders, upcoming real like first hires. You can see if someone is opening a fintech firm, they have the highest potential to hire someone from the northwest region. They are kind of cheaper if you compare it to London, because overall the stats in London is like you have to pay expensive rent, then you have to pay the coffee is expensive and everything else. So yeah. So when it comes to that, it's like expanding every year. It's like around 12% year on year. The stats is like year on year 12%. It's increasing. Most of the students are coming, and it's growing like in the regional fintech cluster. Yep. So that's pretty much it from my side. Yeah.
Well, hearing you talk there, Stuart, about like becoming more competitive for recruitment, I do consistently hear that people are still able to recruit faster and at higher quality than they expect to when they come to the north. I don't know. Do you still manage to fill all your roles in a timely manner, even if it's becoming a bit more competitive in the market?
Well, yeah, I think you do. I mean, there's the two different types of roles, I guess. There's a kind of entry level straight out of university, and we still get a lot of people, to Rachel and Gemma's point, in terms of staying in the region, and therefore, it's about nurturing that talent and developing that talent to retain kind of within the organisation. And then actually there's the kind of higher, more experienced talents, and I think we are seeing, especially in our office in Manchester on 3 or 4 occasions now, where people are relocating from London because there is that better quality of life. And actually, it's not around absolute pay, it's around opportunities and standard of living and actually being able to kind of go and have a walk at the weekend. So I think there's a lot that is helping sort of drive, Manchester in the northwest is a really great place to be. And I think that is then driven by kind of the investment that's going on in the region, which is helping then all of that. And it then flows, because then you get better quality people staying then. They're then the innovators, they're then the people who are starting fintechs, they're the guys who are getting these businesses from in a startup phase, maybe taking some seed capital. So you then build that up into then more mainstream banking and all the way through to what now we've got is some pretty big businesses in the region.
Yeah. Great. That theme of scaling, we'll move on to that now. But I think, more broadly, on the back of the industrial strategy, a lot of regions, and definitely this region, are sort of prioritising their growth planning and investment in financial professional services more broadly, and FinTech's got a real part to play in that. So you've just been touching on it, Stuart, but Gemma, we'll sort of maybe move to you to comment on this next topic first. So, scaling up, scale up fintechs are what every region wants. They're kind of the creators of the jobs. Oak North's a great example on the panel here. I think I'd just like to talk about what are the opportunities and challenges of scaling, what things can help those organisations. And I know you guys work with a lot of FinTech firms through many different programs that you have, but maybe share some thoughts.
Yeah, absolutely. So scaling up, really important, not easy, and we get a lot of questions from the fintechs that we work with or that approach MasterCard about scale and support needed for scale, guidance for scale, thoughts, ideas. I think I would probably say just a few themes that come up is, what do we mean by scale, and where is that scale going to come from? So it might sound like a sort of simple question, but I guess for small startups working probably in a very lean way, the time, the people, the resources to answer some of these questions. So does scale mean more of the same? Does scale mean entering new markets? Does scale mean working in a new segment or a new industry? And what's the size of that market? And is that market big enough to support the scale that the fintech has in mind? And I think some of these questions, I know nobody ever has a crystal ball, but having some of these questions very well thought through up front, using data to the extent possible is something that we really work a lot with our fintechs as well to help answer some of these questions. Because then when it comes to things like what's the investment needed in the tech stack, for example, or what's the investment needed in people, or what's the investment needed in offices, it can help do that in a much more targeted way, which I think in that scale-up phase, certainly what we see over and over again is being very clear about what's that product market fit, what's the size of that scale phase market that the fintech is targeting, so that those decisions, certainly around where the available investment goes, can be extremely targeted. So probably a roundabout way to say, great to focus on the data that's available, and really giving that thorough thought to where's the scale, what market is the scale going to come from, whether that's segment, geographic, etc.
Sure. Ashish, maybe like your perspectives as a founder that's scaling.
The thing is, like 78% of the funding that goes to the UK region, maximum goes to London, and the Northwest is receiving very less as such. Like it's around 700 million, I guess, if I'm not wrong. So it's around like $700 million pounds that's coming over to the Northwest region, which is kind of low for the founders itself, because there are various startups, there are various ideas, and each idea has the potential to become the next unicorn, decacorn, and so on. The investment is something which gives any startup the rise, because you cannot build something at scarcity. You need something to build something, and that's one of the outflow, I'll say, from the Northwest region. However, things are going better over the time, and we have some accelerators, we have incubators. In the universities itself, we have the entrepreneurs in residence, we have the entrepreneur hubs out there in each and every university. So these are the stepping steps which will help up to like start the startup. However, when it comes to like scaling it up and going down with like furthermore hires and everything else, it needs kind of investment in that department.
Okay, sure, good. And I guess from your perspective, in terms of some of the things Gemma was talking about, that sort of focus and product market fit, you've got a really clear focus in that sense, haven't you? that must have been there since the start with your business.
Yep. So we actually started with the idea itself, and it was started at the university. We saw students who were really struggling out, and that was the initiation that we got through for understanding why the students are dropping out and what are the major reasons behind it. So it came out like with the data itself, like 51% of the students were actually financially struggling out there, and they had no idea who to talk to. They were hesitant to talk to their seniors, they were hesitant to talk to their parents, and even to the university, because they are kind of scared, like maybe their grades will fall down, or maybe they'll get penalized somewhere. So we had that product market fit based upon the research, based upon our own understanding, and then we got ourselves some beta testers. We have a huge wait list. So we can see that, like the product market fit is there. But to scale it up, the thing is all about funds.
Okay. Stuart, how about from your perspective? I mean, you described yourselves as a scale-up earlier, and I guess you've been around a while now, and people probably don't think of Oak North as a scale-up, more of an established organisation, but maybe you could talk about some of the characteristics of scaling, and also when you're lending, the things that you'd look for in businesses if you thought they were a good risk.
Yeah, great. Thanks, Julian. I think the one thing that really echoes from the conversation so far is actually there's a real access to capital is a real issue, and I think Ashish talked about it then in a polite sort of way, but actually getting access to capital for founders and for scaling business is still really difficult. And I guess if you look at it from the centre of Manchester, where you've got quite an influx of lenders or investors who are that, but if you want to be up there in Cumbria or in Preston or anywhere like that across the north, then actually probably that awareness doesn't really travel that far either. And I guess we talk about that as our own brand and our own name within the organisation. I think we're well known in and around the centre of Manchester, but the further field you go, the kind of less well known you become. So I think where we've tried to bridge, or where I don't know, we've really tried to bridge, is that gap really for scaling businesses. And I think really our own success is driven on demand that is in the market for capital to enable kind of founders, entrepreneurial businesses, entrepreneurially ambitious management teams really grow and scale. And that's worked really well. And I guess being kind of new in the market means you also don't have a lot of legacy process and systems, and therefore you can use AI to really kind of turbocharge, because actually what founders and what scalers really want is not only access to capital, but they want it in a quick and transparent fashion. And I think that becomes, the days of waiting 6 months and another set of management accounts to make a decision is an opportunity lost. And I think that becomes really apparent when you speak to kind of, fintechs and ambitious teams, that actually it's around that deliverability. And I think that's what we've always tried to really deliver in our process, which has worked really well for us so far. And I think the last thing just on that is, our co-founders are not bankers, they are entrepreneurs. They've been through the journey themselves. So actually that's the whole genesis of Oak North, was because they found scaling capital really difficult. So I guess they get it, and they kind of challenge us to not think like bankers, who most of us are because we come from industry, to really get out there and really try and support kind of these businesses where they've got very solid, clear fundamentals in terms of the credit risk, but also in terms of the unique bespoke lending need that they require.
Very good. How much do you lend each year now? What are your numbers like?
To December 24, we lent just over 2 billion. We've lent 14 billion sterling to date, I guess, in just over 9-10 years now. We'll probably do 2.5 billion this year. So, small in the grand scheme of things, but, definitely plugging a gap in the market there.
Yeah. And just while you're on, how many people have you got in Manchester now?
I think we've got about 50 people now in Manchester, across a wide range of kind of operations and lending practices.
Great. Good. Thanks, Stuart. Rachel, from your perspective at the university, what, like supporting scale-ups or helping entrepreneurs scale what they do? Ashish mentioned the universities have innovation support. What does it look like from your point of view?
Yep, so we actually have something called the Scale Up Forum, which is something that we set up between the business school and my team, which was looking at what are the challenges to actually scaling your business. And whatever you're selling, whether you're a digital security company, a FinTech, or if you're manufacturing gin, that's one of our members, the issues that you encounter when scaling your business from startup are the same. So we set that up as a sort of peer-to-peer network where we'll allow people to talk to each other about, well, yeah, I've had that and here's my experience. But also, when we hear what those challenges are, we bring academic speakers who might have done past research that can inform them and answer and address some of those challenges. So that's one of the ways that the universities help bring people together. And then more broadly in the region, there's something to be said for the value of clustering and collaboration. Not just it's friendly up north, but also Manchester is the home of the cooperative movement. It's known as being a very cooperative and collaborative city. I see this not just through this job, I'm also on the board of Pro Manchester, which is a business support and networking not-for-profit organisation. And a lot of people there speak of the value of people being really willing just to make introductions to other people in this region in a way that you don't get in London, and that's quite specific and unique to here. One of the barriers that we do here, has been mentioned, is the investment and the gap between London and the southeast and here. And one of the things that we're doing, I talk about collaboration, that the leaders of the big organisations in Greater Manchester, the universities, the Combined Authority, other organisations like that, they talk to each other a lot and they think about the city and the region as a whole rather than just their individual institutions. So we're looking at innovation zones. I think we're going to move on to innovation zones specifically, aren't we? And
talk
how we
about
can,
it now. Talk
yeah,
about
sure.
It now. Yeah.
I mean, because FinTech North's been doing a great job for years of building the profile across the north of England of FinTech as a sector and helping attract through that investors. So yeah, innovation zones. We've got a new one on the old UMIST site, which was the north campus of the university for a while, next to Piccadilly Station. That's going to be the biggest innovation district outside of Cambridge. It's called SISTER. It's a weird one to get your head around, but it's actually an acronym, which I've got it written down because I can never remember. Special Institutions for Scientific and Technological Education and Research. Very snappy, isn't it? It came out of a paper that was published from UMIST in the 60s. That site is going to be, it's physically next to the university, but it's not exclusively a University of Manchester site. It's a joint venture between us and Bruntwood and L&G. We are next to it, but it will also be there as a site for startups, spin-outs, established companies, not just companies coming out of the university, but it certainly will be a site that academic spin-outs might go to. And it will have that link to talent coming out of our university, Manchester Met, our neighbours, and also bringing people together in that innovative space. And that in itself will be working to bring investment. We've also got the Manchester Innovation Manchester-Cambridge Innovation Partnership. So that's looking at the complementarity between Cambridge and Manchester with the tech specialisms and the advanced areas of research and R&D in Cambridge, and the complementary areas around digital security, advanced materials, and those sorts of areas in Manchester. And partly Cambridge is really saturated. Manchester has more scope for growth. So through that partnership, we help to companies in those sectors to grow and attract investment beyond the southeast and the Golden Triangle.
You mentioned spin-outs there. We don't typically see a lot of spin-outs in the fintech space. Have you? I don't know if there are any in Manchester or not. There aren't many anywhere, I don't believe. But how could we get more of them, though?
Oh, that's a good question. So academic spin-outs we're talking. I'm not aware of any from that we would say is FinTech from our university. We've got some in those adjacent sectors like digital security and AI, but not in FinTech specifically. I don't know, that might be a question for Marcos and his team. Have we got any research that's potential for a spin-out, Marcos? We can chat about that later.
We can give you the mic in the Q&A, Marcos, if you like. I don't think that... Can say anything? Or not? Yeah? Let's give him... So I think it's a hard area in fintech. I don't think anywhere's got a lot of fintech spin-outs, by the way. So this is not a regional issue.
No, that's right. I think a lot of the spin-outs come from departments like hard science, like engineer or physics, where obviously it's a bit more natural to piggyback on some kind of research that is on a particular material or progress in science overall. I think in the context of FinTech, we have seen some of the student projects, not necessarily coming from the academic point of view, but some of the students that were quite passionate about the topic, the things that they learn at the business school, for instance, or different parts at the university, and then they try to implement these. So they must suit center of enterprise. We had, I think, a couple of ideas that have been kind of incubating in some ways. One of them was around blockchain. The other one was around this experience for a new banking kind of service. But we have, from the University of Manchester specifically, because we've tried to do a survey for the center as well, we've noticed that there is quite a large number of students who've went on and done really well as founders and also exited the market with hundreds of millions of deals. I can point different examples, but one I use also in my classes is Credit Kudos, which was sold to Apple a couple of years ago. And that was like one of the success stories also in the UK. So we have quite a number of students who actually, because of the stuff that they learned at the university, they went on and founded FinTechs. But I wouldn't, and that's the tricky part in terms of the definition, we wouldn't necessarily call these spin-outs.
Yeah. Cool. Yeah. Thank you. Thanks for that impromptu contribution. And the average, in the research we've done over the years at Whitecap, the average age of FinTech founders is usually in the 40s, so it doesn't sort of lend itself necessarily to spin-outs. At this point, let's see, well, we've got plenty of time for questions. Does anybody have a question that they'd like to ask any of the panel or multiple members of the panel? Please put your hand up if you do. Yeah? And if you wouldn't mind just saying your name at the start and where you're from, thanks.
Hi, Stuart. It's James from Smart Hole Technologies. I just have a question about Oak North, and I'm thinking about another bank, Tide, which was also founded in the same year, and they chose to go down the e-money route and not supply their own bank accounts. So I'm wondering if you had any, well, of course you did have more additional regulatory burdens, but whether you thought that was a worthwhile process to supply your own bank accounts.
Great question. So,
it's a great question,
yeah.
and I don't have the answer to it, so that's even that stumped me. I presume that I was more driven by kind of raising capital, of which, we started off as a lending bank, and therefore to balance the balance sheet, we were raising, I guess, retail deposits alongside equity on that side. So actually that probably was a better balance for us in terms of retaining that we needed for regulatory purposes, rather than kind of the Tide, I guess if we'll sit here now, and I guess even if the Oak North founders thought about how, if we'd have done something a bit more like Revolut, if you look at their recent valuation based on a sale last week, then I think everyone's probably kicking themselves in a journey that, whilst we pat ourselves on the back and think we've done a great job, but, valuations in that kind of more retail space, much higher than what they are in terms of the more traditional lending space, which is the area that we focus on.
Cool. Yeah, good question. A lot of people choose e-money as the faster route to market, don't they, in the short term? Anyone else like to ask a question? Yes. Thanks. Thanks, Rachel.
Hi, Joanne from Attender. You spoke about retaining talent, and there's obviously a huge gap in the number of vacancies around fintechs. I can't remember what skill. So there was something like 140,000 skills when I went to an event with Skills England. But on the flip side of that, in the software engineering sector, there's huge concerns at the moment about the number of jobs rapidly dropping, especially at the entry level. So how are the universities and the wider fintech community dealing with that? Because on the one hand, we've got this challenge at the higher levels, but there's an entry-level problem for, especially around software engineering, because of AI, and it's pitched as because of AI. So, how are we going? what's the way to navigate through that to make sure that we have got innovators that have got the skills and the experience for tomorrow and coming through over the next few years? Because if we're not employing those juniors, how are they going to learn?
That sounds like it's coming to me, doesn't it?
Yeah.
So I have to start by saying our team doesn't have a great deal to do with students and teaching. We're much more there on the research side of our activity. So I'm not brilliantly placed to know about issues that our grads have in certain sectors. What I do know, what I can definitely say is under our new president and with our new strategy that we launched last month, Manchester 2035, we are really looking at cross-disciplinary teaching and giving our students more opportunities for applied learning. So we've got various master's programs where we're looking for applied project briefs from industry partners that students will work on real projects, opportunities to do more internships and to do more cross-disciplinary modules. We've got something called the University College of Interdisciplinary Learning, where you might be doing a degree in chemistry, but you might do a module in digital trust and security, and you'll get points, credits for that contribute towards your degree. So we're looking to do more and more of that and make sure that our students are getting those transferable skills and working outside of their immediate discipline area. And alongside that, we're also introducing a lot more what we call lifelong learning. So we're trying to adapt and be better at seeing that people are changing, having to upskill and reskill mid-career. Careers are not on the same trajectory and stable pathway that they used to be. So we're offering more of how can we repurpose some of what we might have through our degree and master's programs into CPD and put offerings out there that people can access mid-career and engage with the different areas of different disciplines than they might have studied. We've recently, we've just done a pilot and we're launching in early 26 one on micro-credentials on digital trust and security, which is something relevant to whatever sector you're working in. So that's one of the latest things that we're putting out.
Cool. Thank you.
I can add something to it. So it's like, just as Rachel said, the thing is, you have to kind of elevate your skills. And to elevate those skills, the best solution is to kind of do it yourself. So maybe the easiest solution is to upskill yourself instead of just going for the lower job. Because currently, what will happen is in the future, most of those jobs that are currently at this level will go, and this will be set as the base level now. So to reach this base level, you have to start by doing it yourself, as it used to be previously, before. If we talk about the factory time and the factory system, so no one knew how to operate those machines and everything. And this is kind of similar. AI is much easier on the other side. If someone has a bit technical skills, as you just mentioned, on a junior level, so they can at least manage to reach that medium level, because AI is not hard to operate in, whereas it's kind of easier segment to get into. So it's more you can ask the AI itself, how to upskill myself based upon this, and it kind of helps. So it's always better to upskill yourself to that level, because the jobs aren't going, it's just the portfolio is changing.
Okay. Sure, Gemma, thank you, Ashish.
I'll just add as well, I think it's a great question, and even for those who are mid-career or on a journey in their career, there's constant change in the industry and a need to have that continual skills, keeping up with new skills, etc. So we also look at going into schools, for example, talking about careers in payments. We have a number of programs with STEM for girls and so on. Also, we have what we call MasterCard Academy, which is training courses internally, but also with our partners and customers, which give access to courses in various topics. So I think it's a great question. We think about it a lot as well, and as ever, that sort of collaboration between industry, universities, public sector, is really important to make sure that the skills that are coming through match with the skills that are needed to keep everything progressing, especially in an area of payments. And you mentioned at the outset, Julian, where we're facing into things like fraud, cyber threats, making sure that there's the right skills from a technical perspective is really important.
Yeah, thank you. Thanks for that question. I think that's such a hot topic that we all think about a lot, whatever line of work we're in. We'll do one more question at the front, and then we'll start to wrap things up for this panel.
Oh, yes. Hi, I'm Paul from the University of Manchester, studying MBA now. I think you touch an interesting topic that is the scale-ups. So I was curious, because there's a question that is, what's the market, what is a scale-up, okay? So at least, is there a way or drivers to understand what makes a scale-up market for the fintech? I mean, is there a market inside fintech that is, I don't know, lending tech, or neobanks that have drivers that make them to be more scale-ups companies? I think this question could be more related for you, Gemma. So I don't know if you can answer the question. Thank you.
Sure, thank you. So just to check, so sort of what makes...
what drives indeed the market to make more scale-ups besides AI?
Yeah, I see, okay. So, I mean, I think, I hate to give these vague answers, but I guess it depends to a point. So I think wherever there's a market that is underserved, that's always a great place to start. So, for example, we've seen huge success in some, very big name fintechs that started with servicing SMEs, for example, where perhaps they didn't have access to as many financial services or capital. So I think, where there is an area that is not that well served today, for whatever reason, that's a good way to see a path to scale. So that would be one thing that I would mention. And then I think where there's disruption as well. So wherever there's disruption, obviously that can be challenging, but often also brings opportunity. So whether that's through regulation, whether that's through technology, whether that's through the economic or political setting, wherever there is change, that can be a good opportunity to think about, okay, what could now scale that may not have had an opportunity to do so before, or what gap has been created that wasn't there before. So that's just a couple of examples, but I think I wouldn't say certainly from, I've seen that there's any perfect recipe for scale. Obviously there's all of the typical pieces that you'd expect, a good business model, the right target market, the right product market fit that we've just spoken about. But I think, really focusing on an underserved market segment, community, and looking for that right time, whether that's through disruption or changes in technology, is two places that I see work well.
Okay, thanks. Great answer, Gemma. Thank you. Thanks for the question. So we've only got a couple of minutes of this panel left now, so I'm just going to really briefly ask the panelists each, as we think ahead to 2026, what's the thing that you think might change the most over the course of the next 12 months? And Ashish, let's start with you and work our way down.
I guess most of the funding that's been allocated to London might shift towards the northwest region, or maybe just the northern region itself, because most of the founders that we see, like the ones who are scaling it up right now, like even we can see Revolut, Monzo, Skyscanner, and everyone going up, we see that those are not typically from the London hub.
Okay. Yeah.
And many of them are from the outskirts. So the funding is kind of getting outside. And in the next year or so, it's all about diversifying the portfolio. So most likely the funding can go around, and because the North has the talent, the innovation, and the catalyst to change it.
So more spread of funding. Stuart, what do you think?
I think we're in a great starting point, first and foremost, I think. And then from there, really, if we want to really kick on from here, then it's really about kind of, for us, it's about kind of linking up the technology the kind of the capital and the talent altogether, and encouraging that to actually go faster and go harder. I think if we really want to be kind of a leading kind of powerhouse in fintech, then I think really what we're really focused on is really sort of moving that innovation into kind of economic capital and development in that sense. So it's actually about really driving real end kind of productivity out from that, from our perspective, and we see that probably in the next 1 to 2 years being actually the kind of the tipping point, maybe driven by AI, but definitely driven by kind of an entrepreneurial spirit.
Okay, so a sort of collaborative approach to creating economic value, to summarise. Yeah, nice. All right, Gemma?
Yeah, I would pull on a point that Stuart made as well. So I think AI moving into next year, great opportunity, great time, lots of change. So I think next year is a really good time to shape the future of AI in a number of different use cases. And as we mentioned at the beginning, I think with the talent and scale in the fintech community that's already in the north, it's a great place for AI to continue to grow and shape daily lives.
Brilliant. Thanks, Gemma. So doubling down on AI, Rachel?
I mean, I chuckled when I saw this question in our notes, Julian, because famously academia doesn't move terribly quickly, and 2026 is 5 weeks away. So not that much for us is going to change. One real opportunity that I wanted just to highlight, and you mentioned it earlier, is the government's industrial strategy. So we anticipate there's a lot of funding going to be available there. Some of it will be directly available to businesses, business growth. Some of it will be funding calls that will be specifying its R&D collaborations between business and research institutions, which will include universities. So there's opportunities there to get some government funding to really invest it in new R&D, and hopefully through working with university partners. And the pillars within that, FinTech is one. So that's right there, but also digital tech and cybersecurity. Obviously AI, but also frontier innovation and regional growth. They're all there in the 8 pillars, and so there's opportunities around not only your own business innovation, new products, new markets and growth, but also through the clusters and the innovation zones. So that's one to be looking out for funding calls coming out, and contact us when they do and you want to work with us.
Fantastic. Okay, we're going to close the panel there. Thank you very much to all the panelists. If we could give them a round of applause. Thank you, guys. Fantastic. You guys can go and grab your seats now. So we've finished on innovation there, and I think that when we talk about innovation, quite often find ourselves talking about regulation and the importance of balancing innovation and regulation to drive good outcomes for consumers, but also help fintech firms and the financial services sector advance. So I'm going to introduce the next speaker. It's always brilliant to have the FCA at the conferences. We've got Laura Dawes, who's head of authorizations. So Laura's going to come join me on stage now. Thank you. There we go. Just be clear. Thank you. Take this away.
Good morning, and thank you for having me this morning. It's a real pleasure to speak to you. Just over a month ago, we held our first regional sprint in Leeds. And at that event, we had a little bit of a debate as to whether I'm actually from the north or not. I was born in Grimsby, and lots of people say it's in, lots of people say it's out, but that's not why I'm here to talk to you today. On the ride up today on the train, I was contemplating how many times I travelled to or through Manchester when I was younger to see my boyfriend. It was a journey that I did so often from Alfreton and back in a weekend that I could do it in my sleep. And on occasion, after a night out at Hacienda or Cream in Liverpool, I sometimes did. Now, I'm showing my age there, I accept. As a regulator, especially as someone who's been a regulator for as long as I have, it could be very easy to think that a firm's journey to authorization and success is as instinctive as a train journey you've done 100 times. But I know that that's not always the case, especially for innovative firms like the ones that you run. You may not always know the best route from idea to authorization or which bit of the FCA will help you get to where you want to be. You don't need reminding of the stats about the success of FinTech in the north of England, but they are worth pausing on. FinTech North's own research that you've heard about today shows that the sector is adding $5 billion per year to the regional economy, and that is set to rise by 2030. There are over 400 FinTech firms in the north, employing close to 20,000 people, supporting real growth and making a difference to the economy. But there is always more we can do to support growth, and we at the FCA are here to help innovative firms no matter where they are on their journey. Early this year, we launched our 5-year strategy designed to deepen trust, rebalance risk, support growth, and improve lives. Innovation is key to delivering this strategy, and it's mentioned on nearly every page of our strategy document. And that's really quite deliberate because it's a driver of growth, as we've seen from the research. Innovation itself has long been part of the FCA's story, from the launch of the first regulatory sandbox in the world, might I say, and our tech sprints. For over a decade now, we've been helping firms navigate regulation, demonstrating that not only about compliance with rules, but helping to catalyse innovation. Over 1,000 firms have benefited from our innovation services since we launched them, and we offer a range of other ways in which we can support firms to start up, grow and scale at every stop on their journey. So if you're planning your journey to regulation and you have a question about regulation and how it applies to your innovative product, then our Innovation Pathways service is designed for you. We can help you understand our rules, the implications for your business model, and what you need to do to launch or expand your business. And let me give a practical example of this. We were recently approached by a new trading platform who weren't sure whether they would need our authorization to bring to life their innovative idea. We provided early engagement through our Innovation Pathways, outlining the route they needed to take to authorization and giving steers on prudential requirements. This allowed the firm, working with us, to refine their offering and become authorized, working with the firm to innovate, not against it, as sometimes regulators have been accused of in the past. And if you're ready to test a new product, then our regulatory sandbox allows both new and existing authorized firms to trial innovations with real customers in a controlled environment. And building on that, we've recently launched a supercharged sandbox in partnership with NVIDIA. That touches really on the topic of AI, which has been brought through by many of the comments on the panel this morning. But that partnership means firms have access to advanced data sets and high-performance computing, which is helping firms build, test, and scale early-stage AI solutions. We've accepted 23 firms into the first cohort with a strong interest from startups and early-stage innovators. So when you're ready to go, we also support firms that know they need to be authorized but don't necessarily need to test with us and don't really have questions about what they need to do to be regulated. We have a new service which has been expanded this year as part of our strategy, the Pre-Application Support Service, handily known as PASS for short. That provides dedicated assistance to help firms navigate our authorization process with confidence. We offer free pre-application meetings, tailored guidance, and practical advice on preparing your application for authorization, and that's open to all wholesale, payments, and crypto firms. And we've extended that more recently to firms thinking about offering targeted support as part of the Advice Guidance Boundary Review. PASS helps firms identify and address gaps in their applications early on, and we can discuss business models, review draft applications, and highlight common mistakes that firms make which can delay us approving their application. And we know this helps reduce costly errors and smooth the journey through the authorization process. and it's particularly helpful for those who are new to regulation or launching innovative products and services. And since we expanded this to crypto firms, we have seen some real success in the times in which we can authorize those firms coming down. So when you're on your way, you've made it, you've got authorized, you've launched to the market, that's not where our help ends. A key part of the support that we offer as a regulator is through our early and high growth oversight team. That team is designed for newly authorized and rapidly expanding firms. It provides enhanced, tailored supervision in those crucial first years for a firm. We help firms understand their regulatory obligations, establish effective governance right from the start when they are starting their business. We also identify and address risks early with the firms before they can crystallize. And the support we offer is practical and focuses on a partnership with the firms that we're regulating. Firms receive regular one-on-one engagement from supervisors who offer support and guidance to help firms truly succeed as they're starting on their journey. That can include discussions, again around business models or operational resilience, something that's a key focus of ours, as well as topics like financial promotions, consumer protection, and risk management. And that open communication we build as part of that working means that we work with firms and spot challenges before they become major obstacles, working together to fix them to the benefit of firms, consumers, and the wider market. The team also supports firms who are rapidly expanding, deal with the pressures that this can bring. We help firms think about how to implement appropriate controls, strengthen governance frameworks, and maintain high standards as they grow. One example of the support we've given recently was to a fast-growing payments and credit broking firm undergoing a major transformation. We supported the firm as they brought key operational activities in-house, where they'd previously outsourced, and worked with them to ensure new product features they were able to offer met our standards. We also supported the firm as it implemented some remediation plans, where it identified risks, and as a result of that support and working together, the firm was able to scale its operations confidently and launch new features and improve customer experience. The work the team does supports the UK's most dynamic and ambitious firms, allowing them to thrive, but at the same time, ensure that regulatory standards are upheld. But we know, as anything else, that the services we offer as a regulator need to evolve alongside the industry, ensuring that we continue to provide what firms want from us and also when they need it. We know that one of the areas where firms can face a particular challenge, and it's been a topic today, is moving from startup to scale up. And that's why we, alongside the Prudential Regulation Authority, recently launched the Scale Up Unit. The unit complements the work we already do by providing fast-growing, innovative, regulated firms with a dedicated point of contact. The idea being that it will help tackle some of the challenges that firms that are rapidly scaling can face, particularly from a regulatory perspective. The team will support on areas like regulatory processes, product innovation, and sector engagement, and will bring together teams across the FCA and the PRA using the different skill sets that we have in order to support those firms. It will also seek feedback directly from scaling firms, so from people like you, about the impact of new policy proposals and feed that directly into the FCA and PRA's policy-making process, ensuring that the challenges that our policy might give rise to for scaling firms are taken into account and considered as part of that policy development. This unit was officially launched by the Chancellor in Leeds last month, at our first regional sprint, and it will initially focus on firms that are regulated by the FCA and the PRA, such as banks, building societies, and insurers. The deadline for applications to be part of that first group of firms to get the support of the unit is at the end of this month, and we will be engaging with firms from December. But we're also working on how we roll the support out to the solo regulated firms, which are much more numerous in number, and we'll be saying more about the work of the unit and the support it will be offering to that group in the spring. So, in conclusion, the title of today's session was From Compliance to Catalyst, Regulation as a Driver of Innovation. I hope that by taking you on a whirlwind journey through the support we offer, that I've demonstrated that the FCA gets the role it has to play in driving innovation in financial services. We want to be a catalyst. We want to help spark ideas, support you to set off and stay on the right track so that you get to your destination safely and quickly. No matter where you are on your journey as a FinTech, from planning the route, buying your ticket, boarding the train, or close to arriving at your destination, we can help. Our door is open and we want to hear from you. And let me see if the clicker works. Yes, there we go. And one way you can actually share your views with us is actually on the 5th of December. Our CEO, Nikhil Rati, will be hosting a Q&A and networking event right here in Manchester. And we would love to hear from you in relation to the key issues for Manchester's financial services sector. And if you use the little QR code there, you can sign up. And one final thing before I finish, we actually have our own equivalents of what I would call the train line, where you go to plan what service you need, where you're going to go. We actually have an FCA webpage called FCA Support Services. If you Google it, it should come up. And on there, you can find all of the details about the different support that we offer firms at different stages of their journey. And it's phrased in a way where you can sort of ask a question of yourself, what am I looking to do? And then dig into the relevant support that might be useful to you at different stages. So thank you very much.
Thank you, Laura. Yeah, a pleasure to be joined by the FCA at our Manchester conference. So to keep things moving, looking forward to hearing from our sponsors and event partners, Cyber Alchemy. If I could ask Ali Malik to join me on stage, please, and to talk to us all about supply chains in FinTech. Looking forward to this. Round of applause for Ali, please. Thank you.
Hi all. So my name is Ali. I am from a company called Cyber Alchemy. Today, I'm here to highlight an invisible risk to your merchants and your clients. I believe the FinTech industry works based on trust. Our customers trust us with their data, with their money, and we trust our APIs to be secure and available at all times. We also trust our developers to deal with our customer data with the care that it actually deserves, make sure nothing is leaked, no data is disclosed to anybody who shouldn't have it. But very dangerously, we also trust our suppliers. We believe that our suppliers will take care of the customer's data with the care we do. And I am here today to tell you that's not the case. I have an example to show you as well, through which you will see how a supply chain attack could be performed and what type of data could be leaked from there. Okay, very briefly about me. As I said, my name is Ali. I'm from Cyber Alchemy. I spent about a decade in cybersecurity. Essentially, in a nutshell, I simulate a hacker, an attacker that attacks your system, highlights the loopholes, the problems, the issues, the vulnerabilities that you can actually fix before a malicious actor comes along and exploits them. So that's what I do. Also, lecture on cybersecurity in a couple of universities as well, but my emphasis is really working with financial industry testing their applications in their softwares and highlighting the issues that could be used to exploit those systems. Now, I see a trend in FinTech industry that we love compliance, and rightly so. Compliance is important to sell the products to our customers and operate in this industry. But whenever I'm speaking to individuals, I always feel they think compliance is equal to security, and I think that's not accurate. You could have like every checkboxed check in PCI DSS. You could have 15 different certifications. You could have a mountain of paperwork. But do you really think an attacker would care about that? Do you think an attacker will see a PCI DSS certificate and think, nah, I'm not going to do anything with them? Or another type of high-level certification, 27001 or anything like that, will look at it and say, oh, no, I think they are secure. Let's leave them alone. That's not the case. They can look at your assets and see where the weak links are, and they will actually exploit it. They don't care about your certifications. They care about the actual security of your devices. They care about the security of your network's APIs and the devices that you send to your merchants. In the fast-paced FinTech world, we see more and more that we outsource a lot of things. For example, we will outsource a company to get an API developed. We will get another company to develop an SDK. We will buy a hardware, and then we'll put everything together and ship the product out. Because it's not easy nowadays to develop something from scratch. And that's what most of the companies I speak to, they do. They build the product, the Legos, right? They snap things together, and they ship it out, right? The problem with that is because there are so many different moving parts, it introduces vulnerabilities at each level. And what you need to understand is you are as secure as your weakest link. If there is one vendor that is not secure, that's not providing you a secure product, that can get your whole business vulnerable to multiple attack vectors. Another myth I hear whenever I talk about products or APIs, they say, oh, we bought that API, that mobile application, that software from a vendor, that's $1 billion organization. They have like multiple 500 certification. We are completely secure. Not really. Their certifications are not going to save their products from attackers. Now, it's easy to say those things, but we actually do that. And to just put a case study in front of you, one of our clients who was vigilant about the security and wanted to make sure their terminal systems that are going out, their POS devices, which are used to make the payment, are as secure as possible. So they have sent those devices to about few thousands of their customers within the UK, and they were processing hundreds of thousands of transactions on those devices. So they sent one of those devices to us and said, can you have a go at that and see, is it vulnerable? Is there any issues and problems with that? So it had a banking level encryption on it. But the problem is you can very easily bypass the encryption. We did not break the encryption. We found a way to bypass it, just work around it. And by doing that, we were able to gain access to anything somebody would type on that POS system. That include PINs, that include support workers' password, that includes Wi-Fi password, that includes anything you type on that device, we will gain access to it. And also the card information. Whenever you swipe a card, we can get unencrypted information from that device. This slide might look complicated to you, but it's extremely simple. So in the very first screenshot, we bypass the kiosk system that actually locks that Android device to one application, the banking application. We simply bypassed it, and underneath, it was an Android system. We tried to install malicious applications on that device. You see in the screenshot number 2, it asked for the password. I did not know the password. I simply Googled and find out the default password somebody set 10 years ago. I typed it in, and I was in. Easily installed an application that allowed me to record every key press on that device, and also installed a remote control software on it. By using that remote control software, the black screenshots on there, it was possible for me to see if there was any camera on that device. And there was. There was a camera at the back of their device. Also found there was a mic on that device. So I could activate the camera, I could activate the mic, I can record the voice, I can take the screenshots, I can get the card information, I can get the pins. So literally, I could get anything from that device. So when we discuss that with suppliers, they always say like it's a configuration issue, very low level configuration issue. It's not a problem. We're going to change the password and things like that, which is awesome. But the problem is for them, it's a configuration issue. For you, it's your license. I don't think FCA or PCI will take very kindly to you using a device that can allow somebody to harvest card details, somebody to harvest passwords, right? It's your business at the end of the day. So it not only damages your reputation, but it also halts your business operation. By that I mean, now imagine that organization have to recall hundreds of thousands of devices they have sent across. Or those transactions, are they legal transactions? Is there an issue? Did somebody scrape the card data and use those card details to make a transaction? Nobody really knows. Now, there are solutions to this. I just didn't want to scare you all with this problem and go away. I just wanted to give you some solutions that you can go and ask your suppliers very simply if they have those things in place. The most important thing that in FinTech we don't understand is who is our supplier. We feel that the middleman who sells the product to us is our supplier. Not really. You have to dig deep. Is your supplier in China? Have you getting all your products from China, or are you getting from Silicon Valley? Where is your product coming from? Which country it originates from, right? You have to find that out, and you have to understand what are their security look like, not the middleman security. Yes, good if they are secure, but what is the security look like for the people who produce the product? Understand the security risks posed by the supply chain. By that I mean, you need to create SLAs through which you can govern what type of products you are allowing within your organization. Are you allowed to conduct your own pen testing? I have seen products that were bought before and they did not allow the organization to conduct their own pen testing. It's a black box product and you're going to use it as it is. You cannot perform any sort of testing on it. So you need to find out if you are allowed to test those products. What are their patch cycle? Do they patch weekly, monthly, 3 months? When was the last pen test conducted? When was the last assessment conducted? Those are the questions you should be asking them. And also, security is never going to stop. If a product is secure today, it might not be secure in 2 months' time, right? So it's a moving target, and you need to keep moving with that to make sure you are as secure as possible. So this is where cyber alchemy comes in. We use the attacker mindset, working in the industry, working with people like yourself. We can act as an attacker, simulate as an attacker, and test your system and find the loopholes and vulnerabilities in your supply chain, in your APIs, in your mobile applications, in your website, and highlight them to you so they could be fixed before a real attacker exploits them and cause a reputational and financial damage. To us, business always comes first. We always find a way through which you can fix the product quickly and ship it out as soon as possible to serve the customers and keep things moving. Security is not a blocker, it's an enabler for us. And we make sure that everything is moving as swiftly as it can. So that is about it for me. If you want to read the whole, I didn't want it to be too technical. So if you want to read the whole case study, there's a QR code up here. And also my LinkedIn, if you want to get in touch, there is a QR code up there as well. And we also have a stall in the other room, so please feel free to visit us. Thank you very much.
Right, everybody, we'll get underway now. Just going to continue this theme of resilience and security. We're going to be talking a little bit about risk in this next segment as well. So if everybody could take their seats, that would be awesome. So the next segment is going to be focused around critical risk, why FinTech must evolve data governance to defend against fraud and financial crime, We're absolutely delighted to be joined by some of our sponsors and partners, Pulsant, RSM, and also always a pleasure to be joined by CFIT as well, one of the industry bodies for FinTech. So yeah, if I could ask Claire and my panelists to join me up on stage, that would be awesome. Thank you. Could we get a round of applause for our speakers, please?
I'll come and join you in a minute.
Yeah, if you want to take that. Yeah, next.
I'm just going to come and sit here afterwards. Right, good morning everybody. It's great to be back in Manchester. I always enjoy coming to this conference. I love this venue. And I just wanted to say before we start a few words about Chris Sear as well. Have fond memories of Chris, especially in this place, as those of you who know him well know he wasn't the most politically correct of people, and always had a great quip about the large organ standing beside me, and used to nip up the back and go and have his photo taken with said large organ. So I just wanted to remember him in that way. Always makes me smile. My name is Claire Black. I'm Chief Operating Officer at CFIT, Centre for Finance, Innovation and Technology. Bit of a mouthful. But basically, we are a public and privately funded organisation. We were born out of the Khalifa Review into UK FinTech, and we bring together government, industry and regulators, get them all in a room together, I call it supreme cat herding, to try and solve some of the really sticky problems that are blocking innovation in financial services. So it's great to be here today to discuss why FinTech must evolve data governance to defend against fraud and financial crime. And it's very timely, actually. We did a big coalition earlier this year looking at how corporate digital ID could potentially help fight against economic crime. It's now become the UK's most common crime, costs the economy more than 6.8 billion a year, and that's probably increased since March, I would imagine, and it's evolving faster than most organisations can actually respond to. We're in a moment as well where AI is dramatically amplifying sophistication, speed, and scale of fraud. It's creating new forms of synthetic identities, hyper-realistic documents, we heard a little bit about that earlier, and then automated social engineering attempts. But at the same time, AI is also helping us to combat against these things as well. It's a very important tool to do so. And it makes data governance not just, I would say, a regulatory requirement, but a frontline defence, and that's something that's we're going to be discussing in a moment. So we're going to explore why traditional models no longer work, what the next generation of governance could look like, and how those technologies like AI, digital verification, smart data initiatives, we're doing quite a lot of work on that at CFIT as well, how that can transform how we protect ourselves, how we protect our companies, and ultimately our financial system, which is quite key to how the economy runs and grows, especially as it becomes more and more embedded in everything we do. So I'm joined by two excellent panellists to my left, Erin Sims, who's Forensic Director at RSM Consulting, and Mike Hoy, CTO at Pulsant. And I'll ask them both just to do a quick intro before we start.
Hi, really nice to be here today. I'm Erin Sims, I'm a director within RSM. So RSM are a full service accountancy and consulting firm. So my particular role is to help our clients deal with their fraud risks, looking at prevention, detection, and then onto investigation. So, I deal with the bad guys of Ali, who we spoke earlier around kind of how those kind of bad actors get into systems, how they defraud our clients, business victims. So, yeah, looking forward to the conversation. Thank you.
Working. Good morning, everyone. I think just about. So Mike Hoy, Chief Technology Officer at Pulsant. We're a UK infrastructure provider. What does that mean? Ultimately, we've got 14 data centres that are connected around the UK with a high-speed, low-latency network, providing sort of a physical home, but also virtual infrastructure for our clients. And we do have some of those data centers actually in the north and also here in Manchester as well. So really, I guess from our point of view, we're the, depending on your viewpoint, maybe the less exciting side of the technology piece, but we're where data sits in the UK. We've got views on ultimately where UK sovereignty, helping clients understand where their data sits, removing dependence maybe on sort of US tech, but also on our dependencies on London. So I often talk about moving the internet north and giving choice to our organisations, our clients, and where they store and process their data. Looking forward to it.
Great, thank you. Is this working? No, very gifted mics. I'll go and stand back there again. It's all right, I'll go and stand back. As I was saying, fraud and financial crime are increasing at great pace, probably at a pace that traditional controls can't match. So I just wondered, as a sort of intro into the discussion for each of you, what do you think is the single biggest reason that the current data governance models are no longer fit for purpose? I don't know, Mike, would you like to start off?
Yeah, I don't mind going first. Certainly not as the financial expert, but I guess what I do see is technology innovating very quickly. There's some sort of great topics already touched on a little bit on this morning, but technology can move very fast. Governance, maybe less so, and certainly sometimes policy as well. So I think what needs to happen to kind of move forward is we need to start thinking a little bit more digitally about our governance. I talk to organizations about infrastructure as code, and we work with SaaS providers and so on and so forth in our sites, and development's sort of fairly common discussion, but we don't really think about how we look at governance in the same light. So certainly maybe governance as code as something that we should start be aspiring towards, I think would be a good step forward.
Great, thank you.
Yeah, and I think if we look backwards, the data governance has always been built around like regulation, around compliance. So and unfortunately, those fraudsters, as it was mentioned earlier, won't see a certificate and think that okay, let's stay away from these. And kind of to your point, you mentioned earlier, Claire, around AI being used as a double-edged sword, and if we haven't got our data in order, actually, it really can't be used as well as AI defensive against the proliferation of attacks that we're seeing where generative AI has been used.
Yeah. Absolutely. I know from CFIT's perspective, leading on from that coalition that I mentioned around if we had a digital company ID, could that help reduce fraud? We've proven that yes, it can, and also that it can help lessen the compliance costs as well on the banking side for doing that sort of thing. But a key part of that, and we've split out into sort of 3 different working groups. One of those is looking at the trust and governance framework on which all of that hangs, because obviously that's quite key for the whole thing to work. So in the context of that company ID, the creators or orchestrators of the data would have to adhere to that framework so that when they're saying that, yes, this company is a real company, it's who it says it is, that has to be, that sort of process would have to be accredited and audited independently each year. And as we're having these conversations, we're talking to DCIT and DBT and OFDIA. I can't remember what half of these things actually stand for. Lovely, Department of Business and Trade. But the problem is, to a certain extent, is that some of these go across different government departments, but they don't necessarily talk to one another. So that's what we're trying to do in establishing that trust and governance. And I know we were going to come on later on about interoperability, not only within our own country, but also when we go cross-border as well, because increasingly our world is global. The transactions that we do, they are cross-border. I just wanted to look at and talk a bit about generative AI and how it's reshaped the fraud landscape, Erin. So are you seeing new patterns around those sort of synthetic identities, the social engineering, and how are we sort of coping with dealing with those?
Well, my role has certainly changed a lot in recent times. We're seeing absolutely synthetic ID, so our biometric data is being compromised. It takes only 3 seconds of audio to clone someone's voice. So that's why we would have seen the celebrities being deep faked in terms of video, in terms of audio. So seeing really isn't believing anymore. And when we're looking and thinking about onboarding, actually it's making sure that we can apply that real-time verification. And with digital ID that you mentioned, actually a lot of time, energy, focus is around the onboarding, around making sure that verification process is accurate, because as soon as the fraudster gets a foot in the door, actually there's a lot more damage that can be done. And looking at the moment, fraud is the most frequently reported fraud, at over 40%. Can I see that growing with the rise of generative artificial intelligence? Yes, absolutely, unfortunately. And that is just the fraud that's reported. So we see a lot that is unreported. So the true number that you cite, the true amount of fraud is, I suppose, still to be determined. And I think it was UK Finance in their half-year fraud report noted around the increase in fraud as about eight fraud reports in each minute in the first 6 months of the year. So it is completely changing the landscape. Social engineering techniques are far more realistic, hyper-personalised. So that old school pay and spray email with your errors littered all over it, they're long gone. It's far more convincing.
And what sort of tools are you using or telling your clients to use or advising that they use in order to combat that type of more sophisticated fraud?
Yeah, and it goes back to the point earlier where AI is being used as that double-edged sword. So it's absolutely used as a defensive, but only if that data is there, and data is... we've talked about is spread across departments, across industries, and fraud is operating across ecosystems. So it's not just focusing on where that is within that one organisation. And what we see, unfortunately, is that the front line of defence, the weakest link, is often the person. So when those social engineering techniques do come into play, that's where you can have the best tech in the world, and it's the person who's ultimately holding the key.
Yeah, absolutely. Mike, any thoughts on that?
I think the data point's really interesting, and it gets I guess it gets magnified a little bit to the previous session on supply chain. I think if you think about your data, number of organisations I speak to that don't really know their source of truth, they don't know where their data is, but they also don't think about the data being held by your suppliers and other organisations. And what's sort of, I guess, interesting and scary in the same point is generative AI is really good, and some of the things it's developing and showing us it can do with the access to the data it's got, absolutely amazing. There's probably, I think I was reading a statistic somewhere, there's sort of 9 times more data that's held in private sources than available on the internet. So imagine, what can happen if it gets access to private data. So I think there's a security element key to that. But actually, I guess what encourages me is as we start to come off that AI hype cycle and the use cases start to come through, more sort of private use of AI, inference AI and so on and so forth will become more mainstay. I think that gives us an opportunity, if we get our data right, to your point, and understand where it's at, put it to good use. And I think, there's a lot of sort of catching up and learning to do on this front. So.
Absolutely. And I wanted to bring us on to that sort of question around interoperability, trust, secure data sharing. It's something that we have as a sort of common theme running through a lot of all of our coalitions. It's in the UK where we are very good at building, I would say, those building blocks, that digital infrastructure. We possibly need to own it a bit more, I think. We were, as Laura alluded to, first to build the digital sandboxes at the regulator level. That's been replicated throughout the world. I think there are over 70 of them dotted around the world now. We were first with open banking as well, but again, it feels as though it's got a little bit stuck, and we're maybe being, other countries around the world look at that model, learn from it, improve it, move it along one. But that everything sort of comes down to this, the trust, if we are sharing, is it being shared securely, especially in financial services, but also in some other sectors where it's highly regulated, it's highly sensitive information, so that's quite key. But Mike, what are your thoughts around that?
Yeah, I mean, I think it's like all of these things. It's an evolution that moves forward. It'd be great if you could kind of start again and say, right, we've got some really interesting stuff happening with digital distributed ledger technology. I was quite encouraged by the sandbox work that's going on. That's I think was spoken to on the FCA update. But yeah, the reality is this is where we are, and we're going to have to kind of move into into that space. I think having a future where we all have ownership of our data and we've chosen who we share it with, I can see that is definitely possible, but there's a long way to go to that. So how do we kind of move from the people we trust owning our data at the moment to actually being fully in control of it? Moving from that, I guess, need-to-know basis to actually your ability to share it securely and being in control. I think it's quite exciting to see what's going to happen, but we're not there yet, and I think there's a little while to go.
Erin, do you have any thoughts on that?
I suppose I mentioned earlier, fraud operates across ecosystems.
Yes,
so to your point around sharing information and what we share and to the level that is shared is really important if we're kind of going to focus on the signal and sharing that to be able to break down the fraud risks in the different areas.
And we touched on this when we were having our prep conversation around, the sort of potential threat to UK sovereignty. What are the implications for that going forward? It feels to me that we're starting to realise that data sharing, these foundational building blocks of our digital infrastructure, are areas where we need to be really, really highly strategic about them. We've seen other jurisdictions around the world, including the States, China, they're much more strategic in their approach to those. So is it that much of a threat?
I think it is. I mean, there's I think some of the stuff in headlines you hear about, there's probably some reality to that in terms of data being harvested, even encrypted data being harvested, because at some point, that could potentially be broken. And but to a certain degree, if it's happening, it's already happened. I think what's really important to organisations is actually have a good understanding of where your data is today. To my earlier point, I think we tend to go with ease of access. We tend to go with I've got some functionality working, and we haven't really thought about where the implications of that from a data point of view. I love the comment earlier about just because you've got a certificate doesn't mean you're secure. I think that was it's really interesting. So I think, kind of bringing that, doing that exercise that you do understand where your data is, you do understand source of truth, is going to put you in a better position as the technology moves forward. And I think that as you start to go through that piece, knowing not only where that data sits, but where it not only where it sort of resides, but actually are you in control of it? Which organisation has access to that data under current legislation, and is that right, and are you comfortable with that? I think having those discussions is really important.
And then thinking about sort of the liability as well, because I think a lot of firms, they don't necessarily realise that they are classed as data controllers in certain areas and therefore have liability for that.
So I think it's a really good point. I mean, we talked about sort of the steps that suppliers take to protect your data. Do they actually understand their role in your data as well? And I think there's often when you see an incident happening and those questions and the sort of post-mortem go on, they probably didn't realise their role with that as well, which is also quite a scary place to be. So I think the more we can kind of educate people, the more clients can start to take responsibility for the data that they're generating on behalf of maybe their clients as well and where it sits. These are all important things to consider.
And what do each of you think are those sort of key blockers at the moment to getting that information to move, to be more interoperable, to move to share data more securely? We've said that, and you've alluded to it a couple of times, that people need to be more aware of their data, what data they've got, how they're treating it, how they're storing it. Are there other sort of areas that are blockers?
I think it's the environment that we're in. Data, we have to be very risk averse, and I think obviously within the UK our legal system has enabled us to be like that, and we are seen to be excellent in relation to that topic.
Respected for that
we have to be. I think there needs to be those appropriate channels to make sure that data can be shared in as real time as possible. And Mike mentioned around kind of the applicability of the blockchain and kind of being able to use kind of information sharing, kind of data ID checks, that real-time verification, without being able to kind of move forward and be as agile as the fraudsters and bad actors, then we kind of do risk not being able to disrupt those criminal activities.
Yeah.
Yeah, I think that's right. I mean, there's what you tend to find today is because there isn't, or maybe some of our sort of governance and policy kind of is quite restrictive. You tend to kind of develop technologies that are one-to-one, or you know, I'll trust this organisation, we'll set something proprietary up, and we go. It does need that kind of, you know, you talked about open banking, and it does need that open access to be able to do that. So I think, you know, the future and potential of blockchain is quite exciting, and how we can kind of get there with that. But yes, you've got to, I guess we've got to move from that proprietary access, and I'm fairly sure that piece is secure here, but how do I kind of think wider and bring that back to a control way of you being in control of your data and securely sharing that with the organisations that you trust?
Yeah, it keeps coming back to the trust ultimately, doesn't it? It's a really key part of it. In the sort of financial crime life cycle, there are obviously lots of different touch points and entry points, exit points. Where do you think where the weakest is? It onboarding, payments, I don't know, supply chain interactions, cross-border trade? Which do you think are the most vulnerable to those sort of weak or outdated data governance structures?
I think from my perspective, what we are seeing is on the onboarding part, where synthetic ID, organisations onboarding using kind of outdated verification methods, looking at, you know, documents that can be constructed very quickly using generative AI, and not necessarily that kind of real-time verification, which uses multiple sources, so kind of more than like 3, more than 4, you know, different areas where we're looking at the biometric data, we're looking at kind of further background checks, and I think not every organisation is applying the same methods as well. Yeah. So where that information, you know, one bank, for example, could have a whole host of intelligence which is not being completely shared with another bank where the attack kind of can have very similar MO. Yeah. And I think the next one would be payments in terms of the next area of risk, for sure.
Thanks. Mike?
Yeah, I mean, I think we've had a great example of, I guess, payments and supply chain there, but my view is that supply chain attack and that supply chain risk, do we understand what sits underneath the technology that the service that's being offered? And I think that's probably, you know, probably for me is the weakest link with this. We see lots of really innovative technology coming, some really exciting, you know, applications and services that are great, but actually, I guess in the world we're in now, some of this modernisation is great, but the reality is a lot of things actually haven't changed. There still has to be data sitting somewhere. There has to be processors computing that data. You have to transit that data somewhere. Those underlying technologies haven't changed. I think that they often get forgotten about, and I think the innovation that you see at the top is then sometimes starts to get a little bit weaker underneath. So absolutely understanding, you know, that supply chain, asking the right questions, where's the infrastructure that's supporting that application sitting, and so on and so forth, become really key.
Yeah. I was in Las Vegas, I think it was about 3 weeks or so ago, one of the big payments conferences out there, and there was a lot of discussion around agentic AI, also around stable coins, but we won't go into those today. But it's, you know, around that sort of liability and the trust framework as well. It's if you've now got AIs coming into the system and potentially buying goods and services or acting on behalf of someone else, again, that adds another whole layer of complexity into the trust, the governance, and the liability.
I think yeah, that's exactly right. And I think that's where, as I say in if it's the right phrase, but governance as code comes in, because AI is still an engine that will make a decision, which computers have done for years and years. If we feed it the right information, then you can kind of you can make sure it kind of behaves in the right way. So I think having, without us putting the effort in up front to kind of make sure we've got that governance sort of implicitly implied in the decisions that the agentic AI or the agents are taking, you will see problems. So there has to be some effort there, and it is encouraging. I think some of the frameworks that we're talking about now, some of the ease of access, I think will start to encourage some of that innovation in the right way. So hopefully, we're heading on the right track with it.
Fingers crossed. I also wanted to look at sort of the other side of data governance, not to be all doom and gloom, because it's not just about stopping fraud. That is a key part of it, but it's also, about the new opportunities it unlocks as well. There's a lot around, smart data initiatives, automated compliance. Can it lead to more personalized services? With my other hat on, I do a lot of work in the accessibility and inclusion space, notably with Project Nemo, that's looking at an initiative that's looking at increasing accessibility and inclusion of disabled people into financial services, not only being employed in financial services, but also using the products. And, smart data technology plays a big role in opening that up. So I was just interested in what you both think around that and, role of AI in that. I know we were discussing in our briefing call whether we thought that financial services as a sector was more in advance than potentially other sectors in terms of its adoption and use of AI, both sort of internally within organisations, but also in product and service offerings. I think we concluded that it probably is, but I'd be interested to look at that again.
Probably more stats, I guess, coming out, though. I think we did a little bit of research. I think finance is certainly higher. I think, what is it, about 85% versus sort of 75% of financial organizations are actually embracing and looking at AI and how it can improve that. So I think as an industry, it is leading on that front. I think the smart data piece, for me, comes down to, again, that ability to own your own data and everything with a sort of immutable transaction that goes with it is going to be quite interesting. We're seeing innovation on that front, but we're certainly not there. And you'd almost like that to be a switch where you could just switch it all on and go, all right, we're all working, everyone knows how to use it. But the technology keeps developing. There's an education piece that will have to come with it, and they're the key challenges. And certainly, making that, as you say, accessible and everything else. There's still a fair way to go on that front. So.
Absolutely, Erin.
Yeah, I think Bloomberg did some research and in relation to AI and financial services, and financial institutions kind of came out on top in terms of the application of AI, agentic AI as well, and the kind of the benefits that would bring, both from kind of fraud prevention, but in terms of that personalisation, in terms of financial inclusion, education. So it was kind of far more broad than, the topic that I tend to focus on a daily basis.
Yeah, I was chatting with a colleague stroke friend about this panel actually, and she does a lot in of research and goes around and talks to boards and corporates about integrating AI and the ethics around the use of AI in corporate life. And she also agreed that she thought FS was probably ahead in terms of adoption, but she did say that doesn't necessarily imply they've done it well. So it's one to take away and think about. We're nearly at time, so I just have a final question for you both. If you could redesign the UK's data governance landscape from scratch to defend against AI-enabled financial crime, what's the one thing you'd prioritise over everything else? You can have a few.
I guess if you, in that sort of world where you can have anything you like, but I mean, technology over the years does centralise and then decentralises. If I could do it, if you had your time and nothing was there, you'd actually start from a decentralised model, and I think that's, probably said to my earlier point, if I could flick a switch and we could get there, it would have been a great place. But yeah, working on the fact there isn't a central repository for stuff, that would be a good way forward.
Totally agree, and I think kind of in looking forward, you've got to look back, and if we are looking forward, we need to make sure that it's a fit for the future set up and a fit for the future landscape that we're approaching when it comes to, you know, more agentic AI attacks, quantum computing, and again, focus on that decentralized system, secure sharing.
Okay, well, thank you both. I think it's clear that data governance is no longer, if I use financial services parlance, a back office issue. It's definitely right there at the forefront, and you know, everybody should be thinking about it, doing something about it, looking at their data, asking all those questions. The friend who I mentioned earlier said, one's takeaway, not everything that can be automated should be. Keep humans where trust, taste, or liability lives. And I thought that was a very good note to end on. So please join me in thanking the panel.
I think I'm legally bound to. Is that still working? Yeah, I think I've been asked to make sure you. I sort of plug the. We've got a webinar coming up later in December on, I guess, continuing this conversation as well. So it'd be great if you want to scan the not so little QR code and register for that. It'd be great. Thank you.
Yeah, we'd love to see some of these guys registered. If you just want to give that a scan on some of the repeater screens, that'd be awesome. Round of applause for Claire as well for doing an awesome job chairing that for us. Thank you. Thanks very much, Mike. Nice work. So yeah, moving things on, and thinking about centralising and decentralising, that gives me a good segue into Simon from the Bank of England joining me on stage. So yeah, thank you. Round of applause for Simon, everybody. That's just your, have you got any slides? Yes. Yeah, it's just that one to move on. Thank you.
Great. So, hi everyone. It's really great to be here. Really great to be in such a fantastic city and such an amazing venue. And thanks to FinTech North and all the sponsors for inviting me here to talk to you. So, my name's Simon Scorer. I'm here to talk to you about the Bank of England's work on the Digital Pound Lab. So, we've launched the lab this year. The lab is an experimental platform designed to engage with industry, and it supports our ongoing digital pound work and also our broader retail payments innovation work. And hopefully it will provide an enduring capability for future experimentation. So, firstly, before I get into the lab, what is a digital pound? So, the Bank of England and HM Treasury have been jointly exploring the case for issuing a retail central bank digital currency, or CBDC, which we refer to as the digital pound. Now, the digital pound project forms a key part of the UK's broader strategy for innovation in payments, and it reflects the bank's long-standing responsibility to provide universally accessible retail central bank money, and our recognition of the challenge that an increasingly digital society presents to this responsibility. So what is a digital pound? A digital pound would be a digital form of cash issued by the Bank of England. It would complement physical cash, not replace it. So £10 in digital pounds would always equal a £10 banknote. And it would be designed for everyday payments, in-store payments, online payments, person-to-person payments. And it aims to preserve trust in central bank money while adapting to the UK's increasingly digital landscape. Now, it's really important to note that no decision has been made in the UK on whether or not to issue a digital pound. Our work is aimed at helping determine whether we should or not. And as I said, if we did launch, a digital pound would complement cash, which we'll continue to issue as long as people want to use it, and it would coexist with privately issued money as well. So where are we in our work? We're currently in what we call the design phase for the digital pound. This is scheduled to conclude in 2026, and this phase will culminate in a decision on what the next steps are. And that decision will be grounded in a comprehensive assessment and a proposed design, which we're calling the blueprint. And our work here is deliberately evidence-led, combining engagement and experimentation. And so within the design phase, experimentation plays a really central role to the work we're doing. And emerging technology is an important part of our work on the digital pound. Through hands-on experience, we enrich our policy and design decisions with evidence rather than relying on theory alone. And the lab that I'm about to talk about is a key part of that experimentation and collaboration. It gives us a safe way to learn quickly with industry and to feed those lessons back into our design work. So that's why we launched it earlier this year. So, the Digital Pound Lab is an experimental platform designed to enable industry to develop and explore innovative digital pound use cases, and also to understand potential business models involved in those in a safe and supported way. So in essence, it's a technology sandbox where firms who are interested in exploring potential digital pound use cases can come and develop potential use propositions. making use of the underlying capabilities that we provided them in the lab. The lab provides a simulated environment to test potential capabilities. It's not a regulatory sandbox. There were no real customers, no real money involved. It's a technology experimental platform. And this is our largest scale experiment so far in the design phase, bringing together technology exploration as well as structured collaboration with industry. And as I said earlier, my goal is to generate evidence, to understand what works, what doesn't work, which capabilities of a potential digital pound genuinely might unlock new retail payment use cases. And so feedback from participants through this process is vital and will help us assess the requirements for any future platform for innovation that a digital pound might be able to provide. So this QR code should take you to our website where you can find more details about the lab. But I'll talk about, so most of the stuff on these slides is on the website as well, so feel free to peruse that at your leisure. The lab has 4 core aims that we've stated here. So firstly, co-creating use cases. So facilitating industry partners to explore and test real-world use cases for both existing types of payments as well as exploring new and novel payment ideas. And then understanding the potential business models that go alongside those use cases, working with the participants to understand the viability. And more broadly, supporting innovation, so assessing the requirements necessary for digital pound to provide that platform for innovation, and gathering feedback to help inform what infrastructure or capabilities are really valuable in generating innovation. And more widely, this will inform the bank's emerging thinking, contributing to our emerging work on digital pound technology, as well as digital currency technology more generally, benefiting not just the digital pound work, but the UK's wider retail payments innovation strategy. So I don't know how well this slide will come up on here, but this, there's a version of this on the website as well, so you can take a closer look. But this shows the overall architecture for the lab. Its design is based on the platform model for CBDC, which we've set out in previous publications. This is a model where the central bank provides core infrastructure that the intermediaries, which we call payment interface providers or PIPs, can then build on to deliver services to users. So this diagram shows the key components. I should highlight that the design of the lab does not necessarily indicate final design choices for future production digital pound. As I said, this is an experiment and it's intended to help us shape and test and inform any future design. So I'll call out a few things on this diagram. In the large blue blocks on the left-hand side, you'll see the API platform. This is the core of the system. This exposes a set of APIs that allow access to the core functionalities of the lab, which are held on our demonstration ledger. Now, it's worth noting that this demonstration ledger is built on a traditional relational database. It's not a blockchain at the core of this system. But we do have the smart contract platform alongside this, which I'll talk about in a second. But it's worth noting the core of this system is not based on blockchain. We're also developing a range of sample applications. So this includes sample PIPs and wallet applications, which will be available to participants. They're optional for participants to use. Participants can also build their own wallet applications if they prefer. But we're providing these to help try to speed up and make experimentation faster and more accessible for participants who are interested. We're also developing a few other sample applications, a mock e-commerce website so that we can explore different checkout experiences, and a sample chat application to look at how users might be able to connect their wallets to third-party applications like chat applications. And then in the pink box, as I said, you'll see the smart contract platform. This clearly is blockchain-based, and this sits alongside but outside of that core API platform, and it enables the creation and execution of smart contracts. So the smart contract platform is part of the lab, but purely for the purpose of experimentation, to simulate transactions with DLT systems. But it's not something we consider would be provided by the bank as a core part of a production digital pound. It's really there as a vehicle for experimentation. And it's intended to support exploration of interoperability between centralized and programmable ledgers, or between blockchain and non-blockchain systems. And then finally, at the bottom of the diagram, you'll see the box for participants. This is the real key part. This is where interested parties will be able to come in and build their use cases, connecting with and making use of the features and components that we've built. So we're hosting all the components in the top 2 boxes in our own environment, and the participant box is where organizations come in, develop their use cases in their own development environment, interacting with our lab components. So this slide shows just a selection of the capabilities that the lab will have. So the lab offers participants a range of capabilities to support them in exploring different use cases. Participants will be able to pick and choose which capabilities are most suited to their use case, hopefully providing a flexible toolkit to support experimentation safely, allowing participants to focus on developing their use cases rather than the core infrastructure. And as I said earlier, the aim here is to really generate feedback. which of these features do participants find useful, what might enable them to do things differently, what might we need to add, what might we need to take away. So it really is there to kind of generate that feedback. So just running through these capabilities in turn briefly. So firstly, obviously, there's some core payments capabilities. So supporting omni-channel payments across point of sale and e-commerce, supporting different forms of payment initiation, so using QR codes or NFC-based contactless payments, also supporting request to pays, where a payee can send a structured request for payment to a payer. And there'll also be some basic account management features, so opening accounts, balance lookups, managing aliases, etc. On the right-hand side, you'll see conditional payments, where we're exploring different forms of user-controlled conditionality on payments. So this includes allowances and approvals, as well as different types of locks. And the key difference between approvals and locks is that the approvals grant permission, but they don't put the money aside, they don't ring-fence it, therefore it remains spendable. Whereas locks put the money aside, it can't be spent until the money is released, either because a time limit has expired or because an agreement's been reached between the parties. And then we talk about eSIP connections. eSIPs in our world are kind of external service providers, so non-payment providers, but that might want to provide other services to users. So what we've got here is the ability to connect your digital pound wallet to a third-party application to use for payments in a streamlined way without compromising on privacy. So an example here is potentially being able to connect your wallet application to a chat application to enable payments from inside the chat app, but maintaining authentication and control from the PIP. And now to support this, the lab includes a trusted credentials framework. So this allows for confirmation of payee and payee authentication. It can be used, for example, in ensuring that the QR code that you receive is digitally signed, so you can be sure it's from who it says it's from. It also allows for the authentication of users through third-party applications in that, as an example, in that chat application example. There may also be examples here around agentic AI payments is another kind of interesting potential application here. And we've been really clear that privacy would be a core design feature of a digital pound, so the use of trusted credentials could help protect the consumer and ensure that the bank upholds its promise on privacy of not seeing who you are or what you're buying. And so you'll also see in the bottom right that privacy is a major commitment for us, so we'll be testing out other privacy-enhancing technologies and one-time wallet addresses. So then moving on to the capabilities of smart contract platform. As noted earlier, this sits alongside but outside of the core API platform. And it enables the creation and execution of smart contracts, and also includes a block explorer for viewing transactions. This should help us to explore different models of interoperability between centralized and programmable ledgers, where smart contract logic is stored and executed on the smart contract platform, but the settlement of the digital pounds occurs on the core ledger. And the mix of capabilities across both the API platform that I talked about and the smart contract platform on the slide now are really intended to support the design of both existing everyday types of payments as well as the exploration of new and innovative use cases in payments. So in terms of where we are in the lab as a project, and also how you guys and other organizations may want to be interested in getting involved. So there were 2 phases of participation. So the initial phase, what we called phase 1, is already underway with the first small batch of participants. Phase 1 is planned to run through to around the end of this month. It might run through to the end of the year. And firms in this phase are exploring use cases that we have defined, which were largely aimed at understanding how digital pound could improve existing payment services. And as you'll see from this, a longer phase 2 is due to follow for around 9 months through to July next year. And the focus here really shifts to industry-defined innovative use cases. So we're really interested in the sorts of use cases that industry are interested in exploring. We don't think we're going to be the ones that can come up with all the exciting, novel, new use cases. So we're really in the market for ideas and keen to support anything people are interested in exploring. So applications for phase 2 are open now and will be reviewed on a rolling basis through to March next year. As I said, it's open to innovative and novel ideas from participants. We'll be onboarding firms for phase 2 in waves. So the first group of phase 2 participants are due to be onboarded into the lab in the coming weeks. And our expectation is that firms participate in the lab for around a period of 3 months, which we think is long enough to develop and demonstrate the use cases that they can build. It's also important to note that we'll aim to showcase the findings towards the end of both of these phases to allow firms to highlight what they've built and what we've learned together. So we're currently in the process of making plans for a phase 1 showcase sometime early next year. So watch this space for more details on that to follow shortly. So as I said, on phase 2, applications are currently open, open to any organisation from a wide range of sectors. So anyone from technology, payments, banking, any other retail payments or retailing generally, anyone that's interested in hands-on experimentation with potential digital pound use cases. So if you have a novel retail payment concept, this is your chance to test it in a safe and simulated environment. So as I said, applications open now, being reviewed through to March next year so that people can come in and complete their work by July next year. And there's full details, including terms of participation and the process for application on the lab website. So just to recap, the Digital Pound Lab is a practical platform for innovation, providing a safe space for collaborative experimentation, fast learning, and transparent sharing of insights. Phase 2 applications are open now, and it's really an opportunity for interested parties to apply to explore innovative use cases in payments, shape future infrastructure, and work alongside the bank and industry peers to influence the future of payments. So thank you very much for listening. You can find more details on our dedicated lab webpage, including terms of participation, how to apply. This QR code will also hopefully take you through to a form which will allow you to register your interest. So if you want to sign up to kind of be notified about any developments in the lab, fill in this form and someone from the team will be in touch with further details. I'm also very happy to stop and talk to any of you here today during the lunch break or whenever if anyone has any questions or is interested in finding out more. So thank you.
Huge thank you to Simon, that was fascinating, and obviously, yeah, brilliant to have the Bank of England here today alongside the FCA, always really additive to all of our events and our activities, so thank you very much. So moving on, continuing that sort of theme of risk in banking and collaboration, gives me great pleasure to introduce the next segment, which will be entitled Banking on Progress. If I could ask Lewis from S&W, Darren from Barclays, and Ellie from from Started to join me up on stage, that'd be awesome. Round of applause for our speakers, everybody. Thank you.
Hello everyone. Is this on? I think it's on. Welcome everyone. It's great to be back at another FinTech North conference today. We are the last slot before lunch, so I promise not to keep you longer than the 20 minutes allocated. I'm Ellie Kirkman. I'm the agency manager at Started PR. This is my 7th FinTech North conference, and it's always a pleasure to come back and share great discussions with people. This year we've seen several advancements in the banking world, from enhanced automation through agentic AI, to changing customer experiences. And, you know, it's safe to say that moving into 2026, we're still banking on further progress. So joining me today, we've got Darren Earnshaw and Luis Hernandez. It would be great if you could both introduce yourself briefly before we get into the conversation.
Yeah, I'll go first, if you guys can hear me, hopefully. Yes, I'm Lewis. I'm from S&W. I'm an associate director. We provide consulting services to our clients. So I've been in financial services for about 20 years almost, but in the regulatory consulting space for about 15, working with retail banks, commercial banks, insurance firms, but also a lot more recently, of course, you know, fintechs, and you know, that and understanding how that collaboration works with some of those more traditional providers as well.
Thanks, Lewis. So I'm Darren Earnshaw, Technology Director with Barclays. And if you don't know Barclays in the Northwest, we have a very large technology campus near Knutsford, which houses 6,500 people, covering all aspects of technology. So one of our major campus sites in the UK. So in terms of my role at Barclays, I've been involved in various things in my 19 years at Barclays now. From building some of our core IT infrastructure as part of launching new banks around the world in Pakistan, Indonesia, Middle East and Africa. Been involved in building some of our next generation consumer banking platforms. Currently working on some of our acquisitions in terms of big integrations. So that's my role at Barclays.
Thanks, Darren. You mentioned there next generation consumer banking. And when you think about next generation consumer banking, where do you see the most exciting opportunities for innovation right now, and how are fintechs helping to accelerate this?
Yeah, so how many times are we going to mention AI today? So for me, AI is super powerful, and where I see it's exciting change in the landscape, consumer banking, is around hyper-personalization. So we've talked often about trying to make a more personal experience for customers, and it's tended to be, to date, the Uber Premier Banking type service where you provide this. Now with AI, we can all have that bank manager in our pocket, that super personalization that knows you as a person, knows what you're looking for of products, not just trying to sell you things that have no use and benefit. So hyper-personalization through AI is a big one. I think we're going to see more and more of that over the next couple of years. I think payments, there's a session later on payments, so I won't cover too much of that, but global payments and real-time payments, there's now 70 countries in the world that are offering real-time payments, and some of the stuff going off in Asia with India UPI that process 650 million transactions a day. The scale is phenomenal. So some really exciting stuff happening in the payments world. Simon's just talked about digital currencies. We're not the only central bank looking at digital currencies. I think there's about 90% of central banks now looking at it. And I think stablecoin would be the other one that was, in terms of the next couple of years, it'd be interesting to see how that develops, but potentially creating that link between level of trust and between cryptocurrencies and central bank digital currencies. So stablecoin will be interesting. In terms of fintechs, I think for me the key thing they bring, acceleration, rapid development, but also complementary to legacy banks in terms of identifying niche services, those market opportunities that they can bring, and collaborating with some of the legacy banks. So I think Scholar Saver that was presented this morning, really interesting in terms of something it's offering to us as customers. So that for me, that's where fintechs play a great part in that role.
Yeah, there are definitely an incredible range of fintechs supporting banks on their innovation journeys now. Lewis, to you, we can't forget about the need for compliance within this. When a bank partners with a fintech, what compliance expectations immediately come into play?
Yeah, I probably should have said actually. So I'm in consulting, but I'm a compliance consultant. So I get to bring kind of the other side to this conversation, and just some of the things that need to be thought about, and perhaps some of the care that needs to be taken. So yeah, so what kind of compliance expectations should perhaps a fintech think about when partnering with a bank? I think, one is just understanding the scale, and that might sound easy enough, but actually until you've kind of been in the industry, and I'm sure Darren can talk about this, could talk about this at length, but the scale of particularly a legacy bank, and as a result, the requirements and the size of compliance functions, the requirement, the levels of governance that are required, and I think just understanding that with that comes, there's kind of third-party risk management to think about. Banks have a real need to understand, if a fintech is involved, they're likely a critical vendor, the due diligence that needs to take place, the hoops that will have to be jumped through so that the bank can satisfy itself that it's working with someone that it can trust, the operational resilience requirements that are in place. Again, it's perhaps a bit easy to say, but banks are considered too big to fail, and there are lots of rules in place now to avoid that happening, but they bring an immense amount of scrutiny on large banks, and that includes stretching out to supply chains, distribution chains, but also to vendors that are involved. And so I think understanding that the compliance that is involved, the steps involved to bring on board a new vendor to ensure that a partner or a vendor is remaining compliant and remaining someone that you can trust to work with is incredibly important, because that's just something that's just kind of part of the BAU. It's not a one and done and you've got on board and everything's great. No, it's going to kind of continue. Maybe just a couple of other quick things. There's greater scrutiny on AML, financial crime controls. That again needs to feed right through to everyone involved working with the bank. There's a lot more of a focus on consumer protection, consumer duty of working with retail banks. And again, if you're a fintech or vendor providing a service, perhaps your involvement with retail customers might have been relatively straightforward, or maybe not. There just may not have been that kind of as much involvement at the coalface, so to speak, with an individual consumer. But for banks, again, you're at scale, and it's just the requirements from a consumer duty perspective are quite strong and are always worth taking into account as well, and understanding kind of where you would fit into that process.
And to Darren, how do you build sort of regulatory considerations into new technology and product development from the very beginning?
So I think it's, as you said, Ellie, it's thinking about it at the very beginning is the starting point. So, you know, we often talk about regulatory by design to actually, you know, think about it at the outset. If you try and do it as an afterthought, you're too late. So I mean, we would try and think about it up front as part of product development. Do your research, make sure you're clear what legislation applies. But you need to think about it as you continue to develop the product. So we would build regulatory reviews as part of our sprints to validate where we're at, where we're going with it, and how it's been developed. Tech expert advice, and certainly for fintechs, often the idea you first have about what you're going to build changes over time, and you need to be aware of that from a regulatory perspective. Are you moving into a different regulatory area, or moving from a non-regulated product to a regulated product? So it's about making it part of your, really embedding it as part of your design process. And then there's other things you can do, such as make use of the FCA sandbox and take advantage of those things. So it's doing it up front, and then constant review and revalidation as part of what you're doing.
Yeah, 100%. And I guess my next question, each of you will have varying vantage points here. But for each of you, where do fintechs on your entrance often most underestimate the regulatory lift involved with partnering with a bank?
Probably for me, isn't it, first? So Lewis touched on it, and great presentation earlier from Ali. For me, it's operational risk. So often fintechs have done a good bit of research around PSD2, PCI DSS, you know, those regulations that apply. Often consumer duty is lacking a bit in terms of some of those considerations. That tends to need a big uplift, but the bigger one by far is operational risk. It's the security aspect, but it's also reliability, stability, availability. That single point of failure is absolutely fundamental for us. You know, and Barclays process 40% of the UK payments, so we're not going to easily introduce a single point of failure into our supply chain that involved in payments. So that level of scrutiny isn't just a tick box to the regulation, it's over and above, and actually it's something the regulator is really interested in. They're keen to understand what the concentration risk is in large banks being all based in a single AWS region, and what that means in terms of the risk to the UK economy. So it's that scale thing we've talked about. That's the big factors. For me, it's operational risk. You can never, and that's where there is a bit of meeting in minds, and where we need to work together to help achieve that.
Yeah, no, I think, just to add a little bit to that, I think as well it's just the depth of the ongoing oversight. So as much as it's kind of getting, you know, the bank being able to understand what the risk is that's posed and trying to avoid, you know, for example, the concentration risk. But once, you know, there is a partnership, once you've got through that initial due diligence, I think it's kind of really understanding that kind of the ongoing kind of oversight and scrutiny that's required to make sure that actually on a day-to-day basis, you know, everything is still switched on, everything's still working, and then that involves, you know, a partnership where, you know, a bank will require the ability to go in and carry out regular audits, or, you know, has to carry out regular audits. Perhaps the regulator might need to visit on the bank's behalf to satisfy itself that things are taking place as they should, and it's just really kind of going into these things with that kind of real open mindset, and that real kind of understanding that you're not just kind of providing a service and it's a little bit of a black box, and, you know, there's an element of trust that everyone works on. It's like, no, you have to. It has to be an open book, because that's the environment within which, you know, an organisation of the size of a legacy bank operates and the scrutiny that it comes with. And I think just a kind of understanding that you are taking a step up into that environment.
Yeah, 100%. I think the future is incredibly promising in terms of looking at how open we can open the book. But we can't talk about the future of banking without mentioning the rise of AI in financial services. As Claire mentioned previously in the panel just before ours, there are concerns about trust and governance in the rise in AI in financial services. It's becoming increasingly more useful, especially in sort of credit lending decisions, increasing speed. But Lewis, to you, what does the responsible use of AI look like in this context?
Yeah, I think, it's already been mentioned and already been talked about today, but just briefly, I think, accountability and governance is really important. It's an easy thing to say, but, understanding who is actually responsible in the business for the outcomes that the AI or the model will produce, who's actually on the hook for that, and that's a big part of the regulatory landscape for the FCA, not just with bigger organisations such as a bank, but even with smaller scale firms. The senior managers regime, does require someone to be, to be on the hook, but also to make sure that the processes and controls are in place. And so someone being accountable, there being the right level of scrutiny, not just from one person, but perhaps from the board or perhaps from an exec committee, and making sure that everyone is understanding what we're aiming to achieve from these models, from the use of AI. And that there's not information stored in one person's head who's had a great idea and has built a model, and that's that. And I think we have seen, certainly in my experience, we've seen that, maybe not specifically with AI, but just with the use, the greater use of, algorithms to make decisions, of machine learning, where you do have, smaller firms who have come up with these great ideas. We've gone in and we've tried to partner with them, try to help them. They've got a problem with perhaps of FCA scrutiny. And then it turns out actually nothing's really written down, or the person who has built the algorithm or the model or whatever it might be is very protective of what it does. And so, I think being able to have that transparency as well, so kind of, moving away not just the accountability, but also the transparency, being able to explain what it's doing, being able to either to a partner, to a regulator, to whoever is coming in to use, but just also to the board, to the exec committee. Can someone go in and speak to, because you can't explain it to the board, you're not going to be able to explain what it's doing to customers at the other end of the process as well. And then I think maybe just the final point is just around resilience. Again, back to that point of the operational risk. Can it keep doing it day in, day out? And what do we need to worry about in terms of, perhaps drift, in terms of how it's reaching its decisions, or whatever, how it's the information that's being provided out the end of it, how does the model kind of drift over time as it creates a bigger data set, for example, and what controls are in place to make sure that you kind of just coming back to it and just understanding, actually, yes, this is still what we want it to do, and or we know we need to tweak it and we're going to go a slightly different direction, whatever it might be.
Absolutely. And on that transparency piece, Darren, I just want to come to you. What approaches are large banks and fintechs taking to ensure transparency, fairness, and strong governance in AI systems moving forwards?
Everybody's doing everything with AI, and everybody's taking a slightly different approach. It's that nature of where we are, I think, on the journey on this. But the approach we've taken is innovation on a massive scale. So innovation, experimentation, encouraging everybody across every role in the bank to be curious and explore things, at the same time putting really strong governance and guardrails to make sure that we're really clear what we're pushing out there in terms of full products. So we've got hackathons and all sorts of things that we're running internally, partnerships with other third parties, but then we've embedded AI in terms of into our enterprise risk management framework, strong audit reviews and validation to try and make sure that we're really clear what it's doing, and that's building in some of those safeguards to address the hallucinations that we know AI will have, to make sure the data sets are diverse, they've got built-in protection. So that's the sort of stuff we're doing, and which I think is similar to a lot of the other mainstream banks. with fintechs, the lens, certainly from a regulatory lens, is less strict, and there's ability to do a bit more freely to see what you can get from it. But those are things that I think are important to just, data and the quality of the data, the diversity of the data set, and being really able to explain to customers, firstly, under legislation, you've got to tell customers when you're using AI, so that's important, and be able to, as Lewis said, to be transparent and explain the results you're getting from it. That's what you've got to make sure.
Absolutely. We've only got 2 minutes left, so to summarise, I did just want to ask you both, what excites you both the most about the future of banking innovation, taking into account the risk?
Shall I go for it? So the one I said the outset around hyper-personalisation through AI, I think that's really exciting. One that we've not mentioned so far today, quantum computing. It might not seem that exciting, but actually in terms of what it represents from a market risk and credit risk modelling perspective, I think that's quite exciting as well.
Yeah, and I think from my perspective, actually, as kind of fintechs bring, I think that, the great ideas, the technology, the ability to be more agile and adapt to what's changing. We've seen kind of historically, I think, because of the layers of governance and compliance and structure that perhaps, banks have been a bit slower sometimes. But I think, the two combining, I think, is a really exciting, there's a really exciting potential there. But I think what it will also bring is a lot more trust. I think we all look at, we all think kind of in our personal lives, when we decide who to give our money to on a regular basis, to deposit our money or whatever it might be, to look after our kind of current account, our mortgage, whatever it might be, we want to go with a bank that we trust. And, a lot of the legacy banks have an element of that trust. And so it's really exciting, I think, for fintechs who, perhaps to kind of, take, kind of get on and use, kind of rely on some of that trust, but also to help build it. But it's just obviously important that we have the right guardrails in place, as Darren has said. But I think it's just really interesting. I think the more that we can build that trust, the financial services sector has had, I think it's fair to say, if I put it quite tritely, a lot of ups and downs over the last couple of decades. And I think, the more that you can use technology and AI to help build that trust with kind of the general public and with retail customers should really kind of, I think, help everyone, kind of benefit from that increased trust and just people being happy to put their money with you and knowing that it's going to be safe.
Absolutely. I think that's a great note to end on. We've not really got time for questions, but I'm sure both of you will be around for lunch. But yeah, thank you both for joining me, and enjoy the rest of the conference, everyone.
Thank you.
One of my favourite memories, it actually takes place at this conference 2 years ago. Actually, there's two memories. One, I cannot repeat. It is not suitable for work. You get a couple of beers into me later, I might tell you what that's about. But the other took place in this very room, and Claire actually alluded to it earlier. He was always a great one for pranks, and that event 2 years ago, he was in quite a particular cheeky mood, to say the least. And as Claire said, he liked to climb up on the organ behind and take a picture. Now, let me just provide a little bit of context for all of you under the age of 45 who are not UK comedy buffs. There was a troupe of very smart gentlemen called Monty Python's Flying Circus a few years ago. And one of the company, Terry Jones, used to make this appearance quite regularly as the naked organist. There he is. And that's your context. So guess what Chris did? No, he didn't take his clothes off. Although when I did question what he was doing up on the balcony behind us, I did perhaps suggest to him that he went back and do exactly that. And I had to sort of strong-arm him into not doing that at all. Anyway, that's how I want to remember him. I'm sure it's how any of you that knew him would love to remember him as well. And Chris, wherever you are, and I feel like you may even be here, watching us all, thank you so much, mate, for all the laughs, as well as all the arguments that we had as well. So, moving on. He'd probably say, don't Google naked organist on your work laptop, but that meeting's next week with HR. But before we get to that, Innovate Finance. I've run through the agenda already. I'm going to touch on the capital work, some of the policy work, some of the recent progress. I've already told you who we are and what we do, those of you that were coming in. But our key mission is to advocate on behalf of the sector here, to champion and promote UK FinTech, and to inform, lobby our regulators, our government ministers, and other key stakeholders as to the value of what we have here in the UK, which is truly a wonderful sector. We have a number of brands now that we operate under. We're actually running our CEO forum today in London. There is a potential plan to take that on the road in the future. That's happening down the road today. But we also, in this last year, have taken on a couple of other pieces as well. I'll touch on those in a moment. And later, in fact, next week, we've got our Pride in FinTech Powerless celebration as well coming up. Some sort of sense of who our members are. They range from small startup FinTechs all the way through to the high growth unicorn scale-ups in between, and some institutional partners as well. It's a very varied ecosystem and a lot of opportunities because we have such a vibrant ecosystem as well. 5 missions. Those of you that were here last year will have seen this one before. Our 5 missions around the promotion of skills and talent, working closely, actually, with the University of Manchester. Good afternoon, Professor Marcos. Working closely with the investor community, supporting FinTech as a force for good, as a force for positive societal change. Our regulatory and policy work I'll come on to in depth in a moment, and the international connectivity and scaling piece, which is my piece, which we run through, and those are typically some of the ecosystem partners that we work with. Let's get straight into this because I'm already watching the clock and we're running out of time. The global investment into UK FinTech has flattened in recent years, but it's still substantially higher than what it once was, and perhaps very indicative of a maturation of the sector. Over the course of 2024, the UK retained its place as the number 2 place, second only to the United States, in terms of where capital investment is flowing globally into a FinTech sector, which is a fantastic place to be. Unfortunately, in the first half of this year, whilst global investment into FinTech continues to rise, the UK slipped actually to number 3 on that table, partly due to a number of big deals that were done in the UAE, but actually more emblematic or more of an example of perhaps the competition that we are increasingly facing globally for that FinTech crown, that leadership crown that we have. And whilst we remain number 1 in Europe, the gap is closing. But you know, we've had some very substantial deals take place in UK in the first half of this year, and we're optimistic that we should be able to retain that number 2 place when everything rounds out at the end of this year. So watch this space, because Innovate Finance will publish our annual global report onto the FinTech pipeline and investment in January. But as you can see from the table, we do remain ahead of our European competitors and partners, although you know, some of that gap is closing, as I say. And there have been a number of substantial deals in our sector this last year. Those are some of the global deals there. And here are some of the top UK deals that have been done. As you can see from this particular slide, a number of different sort of variations and segmentations within FinTech as well. So some AI-driven, data-driven businesses, some more sort of traditional B2B payment platforms, and some more companies in the financial services and payment space. So quite a variety of different types of companies getting funding here in the UK, which we're very supportive of, and I think leads to that vibrancy and sort of diversity across the sector here. Here are some of our members that were fortunate enough to raise capital in this last year as well. But it's been quite and that's a QR code, by the way, that links to our investment report should you want to dig deeper into some of those figures. It's been a substantial year in terms of policy change as well. And this kind of leads into what we can expect for the next 6 to 12 months around some of the work that's happening behind the scenes and some of it out in the open around the policy and regulatory landscape. You'll recall, of course, we had an election 18 months ago. Happier times, I think, for Sir Keir there. And we had this amazing, whopping majority of 180 plus seats for the then incoming Labour government. But as we've all been reading, that's turned into something of a double-edged sword for the government in recent times. Very early on, they faced quite a substantial rebellion on social reform and a coterie of 80 plus rebels on their own benches, which kind of cuts down the sort of workability of having such a landslide majority, which has led to some quite interesting discussions, as we're all aware, those of us that watch the news and read the papers, around how we can shape the political agenda and ensure that financial services and fintech in particular remains heart of that. We published our own plan for government last year, which focused around the development of a smart economy underpinned by smart data, the development of a secure economy underpinned by online safety and fraud prevention and fin crime prevention, as we were hearing this morning, and a leading innovative economy underpinned by regulatory change and skills. We believe that bringing all this together would culminate in a 320 plus billion pound growth for our total GDP over the next 3 to 4 years, with the introduction of a digital pound, which again we heard so much about this morning, accounting for 75 billion of that. That's something that we still believe, and we're very pleased with the progress that we've seen in terms of some of the work that's been done to incorporate this political agenda, this policy agenda, I should say, into some of the government's thinking, particularly around the industrial strategy. Some policy wins this last 6 months, 12 months for the fintech sector. A streamlined payments regulation, a joined-up scale-up unit supported by a number of institutions to support businesses seeking to scale here, fully digitalised capital markets, reform around BNPL, fintech prioritised in that industrial strategy as a proper verified sector for the first time. Payment strategy reflecting a payment multiverse. No, that's not the sequel to the next Marvel movie. And an FCA amended and later withdrawn name and shame proposal, which was actually as a result of direct lobbying on behalf by Innovate Finance on behalf of the sector. Looking ahead to the next 6 to 12 months, and I'm very conscious I speak to you less than 24 hours before the budget, we've put forward a number of budget proposals, levelling the playing field for challenger banks, tax stability for entrepreneurs, and fiscal incentives to reignite the UK IPO market, being the key three ones there. We feel that we would love to see movement on. But we're also keen to see progress, and acknowledge that progress has already been made by government in supporting stable coins and digital asset reform and R&D tax credits, plus a cross-governmental straightening out, please, of the message around digital ID strategy. We would love to see those things as well. So we sort of fingers crossed on behalf of you all that at least some of that makes its way through, if not to the speech tomorrow, but certainly to the Red Book afterwards. So we're keeping our eyes peeled, and we'll obviously come back and update you on that. Again, this all leans towards this sort of sense of the sector being a jewel in the crown for the economy right now. And if we can get all these pieces in place, then I think we're going to be in a good place. But of course, it's a very competitive environment, if that's the right phrase, for getting your messages across, when we all acknowledge, of course, so much has to be done to fix other aspects of the economy and the country at large. So a lot of challenges for the Prime Minister and his government right now. We will support them where we can and advocate and lobby where we feel we should. So what's next? Well, we will continue to work closely with FinTech North and the FinTech National Network. We've got a number of events coming up, which we'd love to see more companies from outside of London attending. We did take our Pitch 360 competition on the road this year. We look to perhaps do something similar next year as well. I've mentioned our forthcoming Pride in FinTech and Women in FinTech celebrations. And of course, we've got the big one in April. Once again, IFGS on Tuesday, the 21st of April. There's a plug for you. It's the flagship event for UK FinTech Week. We'd love to see you all there. I have gone on, and I'm sorry, Rachel and team, but I just want to thank again the FinTech North team for all their support this last year and for inviting me to speak to you all, you good folks, today. Thank you very much.
Thank you, Peter. Always great to have another member of the national network come along to our events and us go along to theirs. So yeah, great having you here today. This next session kind of kicks off our payments focus for the afternoon. So could I invite Anna and the panelists to the stage for the discussion, and also really encourage you to ask questions. And yeah, as has been mentioned, Chris Sear always wanted people to be curious and ask questions on the day. That was kind of something he always really talked about. So yeah, ask our panel some questions if you have them.
Okay, sorry, you brought a chair for me and I'm going to stand here. But I couldn't resist. Come closer though. Yeah, perfect, thank you. Okay, welcome everyone. So good afternoon and welcome to the Northern Hive, powering payments innovation. So sounds pretty exciting to me. I'm Anna Chandler. I'm a self-employed fractional marketing consultant and growth advisor, and delighted to be moderating the panel today. As we know, the payments industry is at a fascinating inflection point, so we're seeing change happening simultaneously on multiple fronts, whether it's new infrastructure like stablecoins or tokenized assets, or growing adoption of pay by bank and VRPs, smarter cross-border payment flows, or the way consumer apps are redefining instant payments. Expectations around speed, transparency, and user experience have never been higher. And at the same time, businesses are navigating new regulations, technologies, and new global competitive pressures. So it's intense, and some days overwhelming, some days exciting. But what's really exciting as a fellow Northerner is, these days, 4 years in, is that a lot of innovation is happening right here in the North. So Manchester, Leeds, Cheshire, are becoming genuine hubs for payments and financial technology, so attracting talent, supporting fast growth companies, and producing fantastic creative thinking businesses. And today's panel is a great reflection of that, and that diversity. This panel is an opportunity to understand not only what they're doing and why the North is such a fertile ground for this kind of innovation, but yeah, I think we need to get going. So I'll just welcome the panelists. I will let Cher, Lawrence, Amy, and Abby, and Andrew introduce themselves very quickly.
Great, yeah, thank you. So I'm a senior product manager at Acquire.com. For those that aren't aware, we are a payments business that powers recurring commerce. So we are London-based, but I'm from Yorkshire, and I spent years living in Manchester. But we work with a number of different businesses in the North to optimize their payment processes. So maximising the likelihood of every payment being successful, and when payments do fail, working very closely with them to help recover those lost payments.
Good afternoon, everyone. My name is Andrew Buckley. Excuse me. I'm here at the University of Manchester, also Birmingham City University. I better get that water. And I'm also a non-exec on the Payment Systems Regulator. It's interesting that you saw that note, that comment that the abolition of the PSR. It's interesting that on page 1 of the speech it said abolition, and page 3 it said consolidation. So you read into that what you wish. I'm also managing director for an impact investment fund, angel investor, etc. But my background is in payments.
Hello, I am Sher Kanaga. And I'm the CEO and the founder of a payment institution called Frontier Pay. We are based in Leeds. The company has been going on for about 16 years, providing payment services and innovative solutions on payments to SMEs in the UK and also in Europe. I'm very excited to be joining this panel and looking forward to hearing diverse perspectives and adding my thoughts and ideas to contribute to this discussion.
Hi guys, I'm Amy, CEO and co-founder of Collective. Collective is a group payments app, so if you are the mug in your group of friends or your colleagues who always tries to get money off everyone else because you're doing the whip round, you're organising the sports, or it's you who's remembered whose birthday it is, then we make it easy for you to get money off of your friends in less than 5 seconds, no app download needed. Yeah, that's who we are. We've just breached the £100 million worth of payments taken. We are a team of 9, so 2 million customers. We're doing all right so far.
Thank you so much for having me on the panel. My name is Abby Bryant-Spolar. I'm the Director of Partnerships at Circle for Europe, Africa and the Middle East. For those of you that don't know, Circle is a global financial technology company, most well known for being the issuer of USDC and EURC, which are fully reserve-backed stablecoins. And we work with partners globally to help move money as easy and quickly as it is to send an email across the internet. We currently, as of today, have $74.7 billion worth of USDC in circulation, and we're working with over 1,000 partners today, including enterprise institutions, global banks, fintechs, startups, you name it. So it's great to be on the panel. Thank you.
Perfect. Thank you, guys. And Amy, yes, I am that mug. You just reminded me somebody owes me dinner, so I'm going to message them after. Let's dive straight in then. So as I've already said, we've got exponential change happening, consumer behaviours, regulation, technology infrastructure, global market opportunities and challenges. I'd like to hear from everyone on the panel. Let's start with you, Abby. From your own vantage point, what are the biggest forces shaping the payments landscape right now?
Yeah, I think I just mentioned it briefly. So I think the expectation for consumers today is, that their money and the payments that they're making are moving as quickly and as transparently as possible. We see, if we take communications, for example, people expect their funds to move as seamlessly as communication, as quickly as data, and I think that is massively changing the expectation of the types of businesses they interact with and the services that they're interacting with. And then the other thing that I would note is we're definitely seeing it at Circle is sort of enterprise adoption for us of stablecoin technology, but more broadly of FinTech for end users. I've been in the crypto space for 7 years, and 7 years ago, the types of players that we're talking with today, I could only dream of that we're talking to. Every business is really thinking about their strategy, and I think that's massively shaping the payment space.
Should we go down the line? Do you want to go next, Amy?
Yeah, definitely. 100% agree with Abby on the consumer kind of expectation of the speed of movement of payments. That's definitely a big thing, especially if you're a busy consumer. So I can only speak from a consumer fintech perspective, but we're all busy consumers. And if you're trying to chase somebody for money and they're not giving it back to you, you need to make that as seamless and as frictionless as possible. But yeah, people receiving money into Collective obviously do expect that to be there immediately, and that does put a lot of pressure on the different kind of fintech stack that we use. I'd also say one of the kind of biggest challenges and opportunities is the kind of embedded finance nature of consumer payments. So a lot of our customers don't think of a Collective as a finance app at all. It's in their tools folder on their phone, or it's to do with their school life or their work life, because what we're actually saving people is time and helping them to do like an admin job that they need to do, which is to organize other people. So so I think gone are the days where consumers think of the bank and payments as a thing that's over here on the high street, and it's now more a case of an expectation of speed of payments and an embedded nature within their lives.
Great, Cher?
I absolutely agree. What we've been obviously going on here. Movement of funds is obviously as critical as it has been, and payment landscape is changing rapidly. From payments to embedded finance or embedded banking, we as an institution have taken this very seriously, and the type of services as an institution we're offering which involved real-time access to payment rails, transparent FX, and multi-currency accounts, which obviously is shaping the movement of funds, whether they are local payments or whether they are international. Consumer want you to move funds as quickly as possible. And for that, they need rails, instruments, which are efficient and cost-effective. So yeah, and it's a very dynamic industry and changing rapidly.
Perfect, over to you.
So from my perspective, I think that we're a bit of a pivotal moment in money and payments. Probably there's this phrase, you only see these kind of moments in the rearview mirror, you don't see them when you're in them. But over the next three months, 4 months, something like that, you're going to see the UK government, the FCA, the PSR, the bank, bring out regulation on stable coins. There's consultation. And I should say at this point, nothing I say represents the views of the PSR. I'm purely here as an academic. But you're going to see that big change. You've seen the US government with the Genius Act really going down the stable coin, and Circle's done an amazing job. I mean, the share price has done an amazing job. So you see a big change there. You see the European Union, in my view, likely to go for a digital euro for lots of reasons. The UK, it's not clear. There are a number of different ways. We heard about the payments multiverse. There may be different. You may have tokenized bank deposits, which is sort of one view. You may have a digital pound. You heard somebody from the Bank of England earlier on talk about the trials there. Or you may have UK stable coins, or you may have all of them. But either way, you're going through a moment of change. And if you think about that graph that we saw earlier on of money going into fintechs, the big change that drove fintechs was the mobile phone. You know, the rise of Revolut and Monzo, that was a new technology which was harnessed, took a while, but was harnessed by these fintechs using e-money or prepaid licenses to get around to manage the costs and the regulation. And that was a huge change, and that's been with us, and people made a lot of money. Some people lost a lot of money. And so in my view, I think the big thing that's on the horizon, or we're living through today, is this new digital money, and I think fortunes will be made and lost.
Yeah, I guess from my perspective, we obviously work with a lot of businesses that have recurring models, so collecting repeat payments from customers. And we do a lot in the financial services space. And historically, you know, if you are selling an insurance product to a consumer, or maybe you have a lending product and you're collecting repayments from that customer, if payments start failing, you would have a customer service agent kind of call out to that customer, have a conversation with them, and kind of take action from there. To the point it was made earlier about like changing consumer expectations, that's something that we certainly see, and it's a huge focus for us as an organization, is how we can kind of meet those increasing consumer expectations for when issues do occur. So a really good example of this is earlier this year we did a consumer research where we spoke with 500 consumers that had taken out a loan in the last 12 months. And what we found was that close to 2/3 of them said that if they had their loan repayments failing, they did have those funds available, but just in another account. So ultimately, you're trying to collect the payments from the wrong account at the wrong time. So internally, we kind of thought about, you know, how can we allow these customers to kind of self-serve and make amends if those payments do start failing. So what we built was this kind of automated payment link solution. So now if a payment does fail, we automatically send a link out to that consumer with a link that they can click and then kind of make a payment through that link. And the benefit there is really for the consumer, it kind of provides them a self-serve tool to bring themselves kind of back on track. And then for the businesses that we work with, you know, it reduces the time and effort needed to kind of contact these customers, and allows them to spend their efforts where it's more needed, perhaps on those customers that, you know, in a vulnerable situation or can genuinely no longer make those payments. So one of the things, we're really focused on doing is how we can support recovery of failed payments in a seamless way to kind of match the increasing demand of consumer expectations.
Okay, perfect. Thanks, Lawrence. And so what I'm hearing there is a real big combination of building on the customer experience and making it as seamless and as efficient and quick and easy as possible. And then this clarity over regulation that's going to help the businesses build in order to improve those customer journeys. So if we can just circle back to Abby, no pun intended. So Circle is both a payments company and a key piece of global blockchain infrastructure. So what innovations in stablecoins, tokenized assets, or multi-chain payments are most relevant for merchants and businesses today?
You'd be amazed how often at work we laugh at ourselves for saying we're going to circle back. So at Circle, we see that we're building the next generation of money movement. We don't look at it anymore as crypto. Often when you say, oh, I work in crypto, you get like a variety of responses. But for us, really, like there's a real convergence between what the technology is going to enable and then how that passes through to our partners and to their end users. So for those of you that aren't that familiar with stablecoins or USDC or EURC, essentially, part of the technology that we have built over the last 13 years, I believe USDC was released 8 years ago. They're essentially stablecoins that are backed one-to-one with reserve cash and secure government securities in trusted financial institutions. So we're building a mechanism that builds trust and transparency, which is often some of the concerns when you start talking about crypto assets. And the real magic with that is, once you put together the sort of trust and the compliance aspect, Circle has always been compliance first. We do a lot of work with policymakers, regulators around the world, and that's kind of how we've built our business. So once you add that together with what's possible using blockchain technology, we really see this as a sort of, as Andrew said, like a real turning point for the way that we move money. The kind of key piece of innovation that we've been talking about this year and something very relevant to this conversation is the launch of our Circle Payments Network. We launched, I actually joined Circle on the same week the Circle Payments Network was released, so my LinkedIn was very, very busy. But essentially, the Circle Payments Network is a global settlement layer for merchants, for fintechs, for banks, and essentially it provides a marketplace where you have a two-sided marketplace where you're able to send funds, whether that be, I'm sending from Hong Kong to Brazil or to the US to the Philippines. And essentially, you're utilizing the sort of USDC in the middle of that transaction to speed up the ability of the transaction to settle. So in some of the tests that we did, I mentioned Hong Kong to Brazil because that was one of the tests that we carried out. And we were able to on-ramp in Hong Kong dollars, convert that to USDC to form the transaction. That was sent to the beneficiary institution, who then off-ramped into Brazilian real. And in total, it took 72 seconds. So that's seconds, not minutes. And I think like that, to me, is incredibly exciting when we think about the possibility of moving money cross borders and what that could enable, both for businesses but also for consumers. If anybody's tried to send money across borders before, it's not easy. I actually lived in a very rural town in Southeast Asia, in Thailand, around a decade ago, and trying to send money from my Thai bank account to my British bank account to pay my student loan was impossible. So, the use cases that this type of technology with our payments network opens up is limitless. And we're, really excited about what that could mean for movement of money and for the businesses that get involved.
Perfect, thanks. And Amy, Collective is tackling a deceptively complex problem, group money collection. So what has to change in the payments ecosystem to make these small, frequent social payments frictionless at scale?
Well, I think there's quite a lot of barriers to the larger segment of consumer payments, which, like you say, is the smaller, more frequent transactions. Even just the pricing structures of the payment processes are such that the bigger payments cost less money, just on a cost perspective. I think probably from a customer perspective or from a product perspective, that settlement, that movement of money, when you're a fintech startup, So we don't have an e-money license or anything like that. So we have quite a few middlemen that hold on to our money along the way, or our customers' money along the way. And that means that the consumer isn't necessarily accessing their funds as quickly as they could be. That has improved since the 6 years that we've launched. That definitely has improved. Faster payments has helped a lot on the payout side. But there's a lot more to be done. And so I'm sure someone of Lawrence's background would say, well, what about open banking? Surely that's the answer. Unfortunately, my opinion is that open banking for consumer payments, sorry to be controversial, is completely the emperor's new clothes and isn't the thing that will solve the consumer desire for frictionless payments. We actually ran a test with an open banking provider where we put sort of a pay by bank option on our payments page, and we process hundreds of thousands of transactions every month. We left it running for far longer than we would run any other test, and it got less than 0.5% of payment attempts, and then 60% of those payment attempts just abandoned and went back to card anyway. And the reason for that is that a consumer doesn't care about open banking. They literally don't care. They don't care about card payments. They don't care about the tech that we all might sit here and talk about. They just want to get their job done, and their job is to make a payment to their mate via Apple Pay or Google Pay, is because those two things are the easiest thing for them to do at the minute. So unless open banking payments for consumers was put into something like an Apple Wallet, it's not going to happen for consumers, no matter how much money Treasury, government, and everybody else might throw at it in order to try to get fintechs to find solutions. Absolutely think it's brilliant for B2B. Absolutely think there's a great KYC and a data use case for it. But for consumer payments, it's not even flogging a dead horse, it's flogging an imaginary horse. So it's just not a thing. So there's lots of payment innovation, but the problem with payments innovation is that it gets prioritized by where the money is. So and by the money, I mean London's money. So therefore, payments innovation gets prioritized for bank tech or for B2B tech. And that leaves the consumer at the lowest end of the priority.
Great. Yeah, I think we'll swing back to the consumer a little bit more in the future of this. But I think it's also, I don't know if anyone else wants to interject into that and add to that, but...
Yeah, I think I can... I have a different perspective. I genuinely do believe that, open banking brings real value, not only to businesses, but also to customers. For instance, we work with a number of businesses and we have a hosted checkout product so that a business can offer customers the ability to make a payment via card, Apple Pay, Google Pay, alongside open banking during that journey. So interestingly, what we see is that open banking is the second most preferred payment method, naturally behind Apple Pay. But what we also see is that 50% of customers that do make a successful payment then use that going forward as their preferred payment method. So I do think there is value for consumers, but I think the challenge is really how that's kind of communicated in the checkout experience. So we spent a lot of time, a lot of my boss's money, I guess, like doing research, looking at how we can prime and educate consumers on the advantages of using this payment method, so that they feel comfortable, but also confident making payments that way.
Sorry, can I also add on the open banking front? I'm also a big fan of open banking, especially when it comes to merchants accepting payments. We have card payments as a method to accept payments, whether it's point of sale terminals or online payments through gateways. But open banking, I think, is a great channel or rail, and I think it will change over a period of time, where it's easier for merchant to accept payment and also the delivery as well, so the funds get credited into the account instantly, compared to if you are accepting payment via card. And I think it will change as obviously it becomes more structured and acceptance is wider. Open banking will change, I think, the payment space as well.
Okay, I'm going to be controversial. I'm an academic, so work on facts. I think we need to recognise how difficult it is to get consumers to change how they pay for things. We need to be realistic, okay? A long time ago, when I had more hair and a smaller waist, I ran products for MasterCard for Europe. And one of the things I was trying to roll out was contactless. So for all these young people on the front, they've never known a world that doesn't have contactless. How many seconds was it to go across?
72.
Okay, so contactless does 27 milliseconds. It's faster you can blink your eye. It's never been hacked. It's a great bit of technology. And now we all think of that as normal, okay? Honestly, being responsible for it, it was a freaking nightmare. We couldn't get the banks to put the cards out there. We couldn't get the merchants to put the terminals. And in the end, where's the MasterCard lady? Is she still here? Hi. Your boss, Scott, worked on Transport for London. And of course, in hindsight, everyone knew that Transport for London was going to drive contactless adoption. I don't know if you're around, but honestly, we didn't know it at the time. So these things are very, very difficult. And my argument is that we need to start thinking about what the customer problem and what the customer problem is. It's not to say that open banking won't get there. I think at the moment it's 0.4% of payment transactions in the UK. I'm not saying it won't get there. Faster payments, I used to be responsible for faster payments, one of my jobs. At its current rate of growth, it'll be 22 years before faster payments catches up with card. So you just need to be realistic about this, and you need to focus on the consumer. And that's why, and this is my plug, that's why Professor Marcos and I have done some research on digital currencies. And we focused on a central bank digital currency, the digital pound. So we managed to get a lot of money together, 50,000 odd pounds, and we asked 10,000 consumers what they would like for using a digital pound. And we gave them use cases. For those of you who've done market research, if you ask a consumer, do you want to control money more, 90% say yes. And then you give them a tool to control money, and 5% of them use it. So you can't look at stated preference. Anyone seen one of these? It's a payment ring. It's a contactless payment ring. Another one of my great projects. Never went anywhere. I thought it was great. Nobody else did. So you've got to look at the reveal preference. And so we did lots of use cases about, for example, a kind of programmable money for buying a car, P2P. And what we found is that really, by and large, to this lady's point, consumers are pretty comfortable with what they're comfortable with. They've got other priorities on their lives. And so we had a very modest 3.1 out of a 5 scale, so just below neutral, interest in adopting a new digital currency. But what was really interesting, and I think this talks to your point, that once we gave them incentives and we found ways, for example, that government could push the lever, we really saw a much, much bigger uptake. And we've seen that around the world. So if you look at faster payments in the UK, the real-time payment system, it's used by about 9 transactions per customer per year. It's been going since 2013. Prompt Pay in Thailand, the equivalent, is used over 300 times per citizen per year. It's higher than PIX and higher than UPI. And why? Because the government pushed it and they made it really easy. And so my argument about, your point about what's going to drive innovation and what's going to change, I think you've got to start with the consumer and understand that.
Yeah.
I do agree. I think ultimately it always comes down to a customer problem. If I go back to the research that we did earlier in the year, I think often customers aren't aware of what payment methods they're using. I mean, the output of our research for that is quite clear. A lot of them believe that using direct debit because that's the only mechanism they know to collect recurring payments, when in fact the business may be using cards. And I guess the question that I would ask is, ultimately, whose role is it to maybe understand the challenges of that customer? So I think we probably all have direct debits set up today. I would probably ask the audience, are you aware that the business collecting that direct debit payment from your account doesn't know whether that payment was successful for a day or two? They also had to submit that payment in advance. So if you try calling them up to say, look, can we change the payment date? They can't do that if you're calling within, 2 working days. the payment date. It also doesn't work weekends. You can't collect payments on bank holidays. It's old. And I think it's not right that a consumer doesn't need to know that. But then the question that I would put forward would, a business collecting payments from customers should know that. And if they think that they can offer more value to customers by shifting them on to another payment method and better serve them, then should they be doing that? Should they be pursuing that? And I would argue they should. And I think it's probably their role to try and incentivize and push consumers down a payment method maybe that better serves their circumstances, rather than just simply kind of relying on the customer to understand kind of how payments move. So like a slightly different angle to it, I suppose.
So I had a chap on my team called Richard Jones. He was 71 years old, working 1 day a week. And he, when I looked after direct debit, and he remembered decimalisation. That's how old that system is, and he worked on it.
We were just having this conversation as well that, you know, in a couple of years from now, when we say, do you remember when we used to stop making payments over the weekend or during a bank holiday? How ridiculous that's going to sound. You know, when we think about, obviously I'm thinking about this from the perspective of stable coins, but, you know, 24/7 accessibility, programmable, like the idea that we would have waited, like in a few years' time, we'll be like, how did we do that?
Yeah, I also remember refusing to use contactless when it first came out, and I was adamant. I was like, I'm going to stick my card and use my chip and pin every time. And now
one of these rings? I'll give you the link if you like.
And now I just don't even carry cards. And like innovation in payments takes time, and I think that's probably one thing just to bear in mind is that like a decade for a shift in consumer behaviour when it comes to payments is nothing. Just kind of depressing as someone that works in payments, but it's like the reality of the environment that we work within.
But if you get it right, as this lady on the end, how many trillion, billion? If you get it right, the speed of adoption is amazing.
I think that was my point. Maybe just to round off on the open banking, Alan, to take over your chair role. But I think we're all in agreement that you've got to start with the customer and the problem, and that the customer doesn't give a flying fig as to what they're using if it's the most convenient thing. There is a big question around consumer payments protection with open banking. That seems to be an elephant in the room that nobody's addressing, which is one thing. But even if we leave that over there, I think the question we have to ask ourselves is payments adoption. Like when it works, and it spreads rapidly, and the kind of premise or the origins behind open banking as we have it today is tech that came from a regulator to solve a problem via a bank to a business to ultimately the consumer, and we're expecting the consumer to adopt that as a product. I'm not really sure of any regulator thought up tech solution that's ever started with a consumer problem. It was to fix a problem in regulation with a bank, and now it's just the emperor's new clothes with the government's backing.
Okay, so good little debate there, and I think we can all look at it and empathise from different perspectives, and there's ultimately the consumers at the end of the puzzle, right? And then we've got to work through regulations, we've got to work through innovation, and work at the end to fix the right solutions for the customers. So I think, yes, there's opportunity everywhere, and there'll be more to come on that. So on cross-border payments again, Cher, maybe we can just dive in. Cross-border payments remain slow and fragmented in some situations. So how is Frontier Pay approaching multi-currency accounts? Because this is quite interesting from FX transparency and global rails. How is it different from incumbents, would you say?
We as an institution are trying to remove friction which is stopping businesses to operate globally, and providing infrastructure for these businesses in terms of payments which are in real time, FX transparent, and also multi-currency led. When we talk about payments, whether they are local or international, whether they are businesses or individuals, they want these payments to be moved quickly. And we as an institution believe that by allowing or providing the right solution to our clients, will help them to move those funds. And one of the products that we have been heavily working on is the multi-currency account option that we have, which not only enable our customers to move money locally or internationally, and also be more transparent on FX front. For example, if you have a client which is, if you are an institution which is based in the UK and you have a customer which is based in, for example, Japan, and that institution or that customer wants to send you the money, you don't have to have a Japanese yen account to receive those funds. With multi-currency, you can receive those funds in that account. And once you've got those funds in the account, and if you have a supplier, for example, in Japan, you can easily move money from that wallet or Japanese yen account straight to your supplier. So the FX conversion is not really there. And also the other product that we have been working on is our card issuance, adding card to multi-currency wallet, which means that with multi-currency wallet, you can hold various currencies in that wallet. And when card is attached to that wallet or to that sub-account, and when you are obviously making payments internationally, you can use that card to move money from that particular wallet. So that's been quite innovative from our point of view, and also helping businesses to actually move money in a more transparent way, and without being worried about the cost it would incur to move funds from their accounts. And also from regulatory point of view, we are an authorized e-money institution, and that gives comfort to our clients that they are dealing with an institution which is regulated, and the client funds are segregated. They are obviously safeguarded in a dedicated account, so they're not mixed with our funds as well. So these are the innovative sort of solutions that we are currently considering, and enhancing our IT infrastructure as well, launching our app. For example, for the past 18 to 20 odd months, we've been building our own in-house IT infrastructure to come up with a solution, IT-led solution, which will enable our customers to actually move funds in a transparent manner.
And is stablecoins a growing part of that strategy as well for you guys?
Sorry, I really don't know.
And stablecoins, is that a growing?
Stablecoin, absolutely. I mean, I agree with obviously the way industry is shaping, and with USDT and also USDC. They are also obviously creating convenience for consumers and also for businesses. And the speed it is obviously taking in terms of obviously moving funds from one end to the other, it's like moving data from one end to the other end, whether they are local or international. And I think over the years you will see that stablecoin will become obviously a major tool or rail for payments to be moved across, whether they are local or international. We are obviously seeing a lot of B2B payments where businesses are asking for stablecoin, especially the USDT front. And I think once this sector gets regulated, and once we have clarity on crypto-related products, it will help the industry as well.
Quickly, Amy, are stablecoins important for your consumer?
If they are a tech that makes it easier for me to deliver their money to them, then yes, but not to their knowledge.
Okay, so now moving on to the Northern Payments ecosystem. Bit of a quick question for all of you, actually. So we've heard a bit earlier today from the previous speakers on how the growth of FinTech in the North is continuing to expand, and we'd also love to hear your perspective. And I'll start with Abby again. So, yeah.
Yeah, I get to answer first. It's good for me. I mean, I've worked more of my career remotely than I have in an office. So when I think about working from the North, I think, somebody said earlier, the people are cheaper, to hire in the North, and I disagree with that as an approach. I think that, we are able to now attract huge levels of high quality people to come and work in Manchester, in Leeds, wherever. I think, I'm not going to repeat what the last panel said, but I think, we definitely have the foundations. I think we're building great communities. For example, I've been a part of Manchester Young Professionals, mentoring sort of people who are entering into professional work, and so they can understand what that would look like, and speaking with people that are already working in FinTech, I think that's incredibly important. So yeah, I think building a community is already in place. It's something to build on. And also, you know, I work for a company that is global. We have 1,000 people globally. So my location doesn't hold me back anymore, and I think Manchester and the North more broadly needs to lean into that philosophy.
Yeah, and you're remote first, aren't you, as a business?
Remote first, yeah. We have an office in London, but we don't have to go to it, so.
Cool. And what about you, Amy?
Yeah, so for me, I think it probably slightly different take, which is that the Manchester founder ecosystem is brilliant. The sort of the tech founder ecosystem. So, but FinTech is quite high in that kind of broader spectrum of like tech startups up here. So I'm part of a group of around about 45 female founders. We mostly just moan about things on WhatsApp together, which is lovely. We sometimes get together for drinks for wine and wine. But anyway, the point is that within that group is a disproportionate number of FinTech female founders, which I think is great. And I was on the way down to a conference in London a couple of weeks ago, and I was giving one of the girls a lift down, and we got the M6 was shut, obviously. It was cheaper for me to drive than to get a train, obviously. And it took us about 5.5 hours to drive, and we talked mostly FinTech for 5.5 hours. And I thought, isn't this lovely that, like, you know, someone from Liverpool, someone from Manchester can just get in a car and drive and chat.
You should have filmed it. It would have been great marketing.
I'm not sure it would have been suitable for a pre-watershed viewing, but yeah, it's a great ecosystem from the financial services companies. To be honest, they give us so much free food. It's great. Lots of lots of events with lovely sandwiches. So yeah, it's a strong tech founder ecosystem.
I mean, we are a Leeds-based institution. We've been going on for about 16 years. One of the challenge that we have faced as we are now growing and getting more, obviously, our operations are getting complicated as well. One thing we actually found difficult is finding senior talent, where obviously the perception also where senior talent is more in London and people prefer to go to London. That's been the only challenge that we have seen so far. Otherwise, I mean, Leeds has been our home in terms of obviously the growth we have achieved, the regulatory approvals we have obtained from the regulator, and then the products that we have launched. It's been wonderful, and we will continue to grow in a similar space operating from Leeds. So.
Great. Andrew?
So I've already made the argument that I think there's going to be a moment of change, a moment of innovation with this digital currency. And I think there's a real opportunity for the North and outside of London, because my argument is that to make that success, you need to get close to the consumers, the real consumers. And I think that's what potentially people can do in this region, more than, for example, sitting in an office overlooking the Thames. And I think that there's, I say, fortunes to be made or lost, and I hope they're in Manchester.
Yeah, I guess for me, I studied in Manchester, so I was a student from 2013 to 2017, and travelled to London for work. I think that was before this evolution of like remote working. So like if I was in that same situation now, maybe I wouldn't have had to have made that decision. And I think the point about community, like I always felt there's a strong community in Manchester. Like I love it up here. In fact, the 2 years I was in London with my partner, I was trying to convince her to move back to Manchester. And I really do think that is a strength of not only Manchester, but you know all of these cities within the north, is that kind of sense of community that really supports the founders of smaller businesses. They're ultimately incredibly important for the cities and places that we work and live.
Perfect. I think a few of us have been on that journey. I went to uni in Sheffield, went down to London because that's where you went to get a job. A few years ahead of you, though. And now back up north. So I think hopefully more and more senior management will come into the north as well, as a lot more people are moving away from London and changing their lifestyles, aren't they? Okay, so we've got about 5 minutes left. So I'm going to skip over to sort of a bit of a future gaze. So over the next sort of 12 to 24 months, Is there anything in particular that we haven't touched upon already that you really want to highlight, that you think is really going to be one of the biggest shifts in payments and something to look out for as a business? Sorry, go on, Abby.
Okay. No, I mean, we've covered it. I mean, obviously, from our perspective, we really see like the sort of this pivot moment. We see we're very much at the beginning of what's possible, but we really see, you know, more mainstream adoption of stablecoin technology in the back end being utilized for use cases such as FX, for treasury management, and I think, you know, today when I think about who I'm talking to on a daily basis, these are not businesses that you would think are just, you know, going to use crypto assets. These are global organizations that perhaps are not thinking about crypto for their end consumers today, but they're thinking about how do they as organizations move money globally, and they can use crypto and stablecoins specifically to do that. So I think there's going to be a big shift in like what we call payments, what we consider is crypto, and sort of the types of organizations that are leveraging that and the benefits of that. Because if you're not doing it, believe me, your competitors are. So I would get on it.
Okay. Shall I mix it up? Go on, Andrew.
I think something to watch out for is backdoor dollarization. So the ECB have been doing some research on this. So you've got the stablecoin, very successful, USDC, USDT. Some countries are worried that what will happen is their businesses will all start to adopt a US stablecoin and not use the local currency. And so that's something that central banks are concerned about, and there's an ECB bit of research on this. And I think it'd be really interesting to watch out in the next year what central banks do around that, whether they really push to get for example, Circle to have a digital, a GBPC, or whether other people start to issue stable coins. So that's something to watch out for. Don't know if that will happen, but it's something to watch out for.
Maybe just we do have a European, a euro-backed stablecoin, which is doing very well. Obviously not as popular as USDC today, but being backed by the euro. So I think it's a really interesting point, Andrew, and something we should watch for in the UK.
Amy?
Yes, I think from our perspective as a fintech startup, AI has been incredibly useful for us. We're a small team of 9 people. We're at that stage in our journey. We've raised around about 2 million in investment, none from London, from America and from angels. I mean, we could also talk about just America having, like, all founders having to go to America to get money to, you know, build British payments. But anyway, that's probably not the thing. But from an AI perspective, it's been revolutionary to be able to have a lean team and to build out tech that benefits the end customer. We're obviously having to be very careful how we do that, because we have a lot of kind of social data information. And where we've started is from an internal ops perspective. So we've used AI massively to help us in building our own fraud detection and prevention system, because our payments are not peer-to-peer and they're not e-commerce, they're group payments. It's very different. It's not product on the market for it. But yeah, so that kind of, if nothing else, operational ease, I think we'll see a rise of fintechs being able to build more with less. I mean, that goes across the board for other tech companies. And then also interesting use cases for how we help our end customer to be able to essentially manage admin tasks that happen to have payments. Yeah, that will also be, it's quite exciting on the horizon.
Good. Okay, Chef?
From our point of view, obviously over the next 12 months, we will see that movement of funds quicker and easier and more transparent. And we as an institution, we need to prepare ourselves to ensure that we provide those rails for our clients. And we talked about AI as well. AI is also taking, obviously, big part in this, especially when it comes to fraud detection, and also, which includes obviously the onboarding of clients, then ongoing monitoring of the relationship. That is key. So from our point of view, we want to make sure that the funds are moved instantly and quickly. For example, faster payments, SEPA Instant or FedNow, etc. If such sort of, stitching of these rails can be made, where movement of funds takes place easily and quickly, that will also obviously change the shape of the industry as well.
Okay, and Lawrence?
Yeah, I think that the stitching of payment rails is a really interesting point. So, like through our platform, we give businesses access to card payments, like direct debit, open banking payments. And over the past few years at least, often, when we're onboarding a business, we're understanding the challenges, how they operate, recommending a payment method we think would best serve their customers, and then supporting them through that and helping them go live. But something we're seeing more and more is like allowing businesses to like seamlessly blend between these payment methods. So not offering just direct debits or just cards, but ultimately offering a number of different payment methods to serve their customers at different points, all in the aid of kind of providing seamless operations for the business, but also from the customer's perspective, making things seamless as possible and providing a really valuable product and service for them.
Okay, great. So I think we're going to wrap up here. I think the key sort of themes that stood out to me across the panel today was the accelerating push of speed and transparency, desire for testing and stretching our tech capabilities, but also with this growing lens on customer centricity, trust, and a growing need for collaboration. And I think that's key, like between industry, regulators, and academia, like to successfully unlock solutions that actually add value to the end consumer, like we touched on earlier. And as we've been represented today by the North, I think hopeful and excited that the North of England will continue to shape this going forward. So has anyone got any questions? We're going over a little bit. But yeah, if there are any questions for the panel, please put your hand up. I actually can't see these glasses in this light. Is there anyone? No? That's actually really good because I need to go and catch a train. So thanks. Okay, anything else? No? All right, well, yes, just like I say, thank you to the panelists. Thank you to the audience for listening. See you soon. Perfect. Thanks, guys.
Thank you very much to our panellists. Yeah, great discussion. And I guess if anyone has any questions, really welcome you to send them a LinkedIn connection, find them in the next break. So moving on, we've got our next presentation, which will be all focused around mobility payments from one of today's sponsors, Attender. So yeah, I'd like to welcome Steve to the stage. Thanks.
Afternoon, everybody. So I'm from Attender. I'm going to talk to you today about mobility payments. Just to give you a bit of background about who we are and what we do, we're an acquiring business, FinTech business based up in Preston. We manage about £5 billion worth of payments a year, and we specialise specifically in the fuel forecourt sector, so in the petrol stations. And up until about 2 years ago, we traditionally saw our volumes going through the petrol pump and the shop, but we saw a switch as people start to behave differently. And I'm going to talk to you today about what that change is that we've seen, and I've got a video to show you just to show what we actually mean. But then, as the panel was saying before, one of the key things that we're passionate about is understanding what our customers, the end consumer, what's their experience and what's it like. So we've done some research to understand what are the frictions, what are the issues within mobility payments. And I've just got a little bit of headlines to share with you today. It's hot off the press and I don't have time to go through everything, but there's a QR code at the end. And then a couple of thoughts about what's coming in the future around mobility payments. But as I was thinking about talking to you today, I realised actually I've been on this stage before, and that was 35 years ago when I graduated from here. And payments back then was fundamentally different, right? You listen to everything that everyone's talked about today, and as I left this stage to kind of go out into the world and forge a career, which actually was in grocery retailing, I've only worked in payments for 5 years, some of the stuff that's talked about I couldn't even conceive, right? Because this was my world. You know, I'd ring my mum from a phone box because there were no mobile phones. I'd pay with cash because there was no digital payments. I'd ask her for money. She'd send me a check because there was no mobile banking. I'd go to a bank. I'd pay my check in. I'd wait 5 days whilst it cleared, and then I could get my cash and go out to the pub. It was such a different world, right, in terms of what was going on. And we've seen such a shift over the last sort of 30 years in terms of payments. But interestingly, it's accelerated the last 10 years, really. You know, 10 years ago, still 50% of transactions were through cash. Today, it's less than 10%. And I don't kind of share this with you to sort of show how old I am and how things have changed. But it's more to demonstrate that the last 10 years has seen an acceleration in change. And as you've heard through the day, that's just going to get faster. So let me play a video of what I'm meaning about mobile mobility payments. We sent our chair out to kind of experience it as a consumer does, and it'll just give you an overview of what we're talking about.
Mobility payments. It sounds like jargon, but it's actually really simple. It's about moving around the world freely, simply, paying as you go with a single tap. Today, I'm going to take the Mobility Payments Challenge. I'm going to go from Preston to Salford, Media City, trying to hit all the goals in under 2 hours, using every tram, bus, train, scooter I can find with just one tap. So let's hit the road and find out just how seamless it is.
Well, here I am, ready for my first challenge at a bus stop. I feel like a bit of a wally, but ready to go. Let's see how easy it is. Hi, mate. You stop here. Just tap in the body. Awesome. That was easy. Press northbound. Right, now for a quick walk across Preston to the train station. Right, Salford Crescent. Right, I've got to go and find the most random thing I can buy. No. Oh, here we go. This looks good. Who doesn't want Dino Fun? Thanks, mate.
Quite nicely like this.
Bargain. Food on the go, all part of the mobility payments experience. Doritos. Let's do Doritos. Right, how does this work? Select product, buy it. That was easy. How do I do this? Download line. Says for age 4 and above. Just about qualify. Come on, it's taking ages. Sign in. We've updated our user agreement. Oh, I'll agree to that. I'm not going to read it. Scan my driving license. Use this photo. Get started. Flipping heck. Processing my selfie. Still going. Come on. Pay money. That was easy. That bit. Let's go. Be the princess, I'll be the princess. It's a love story, baby, just say yeah.
Hey, it's Sophie. If you don't hurry, you're not going to make it.
I'll be the princess, it's a love story. Here we are, Media City, we made it. So, challenge complete, time to celebrate with a pint.
well deserved. So was it seamless? Not entirely, but it was pretty good. Room for some improvement though.
So hopefully that gives you an idea of what we're meaning by mobility payments. Often when people talk to me about our business, they say you've got a challenge ahead because fossil fuels is declining, right? We believe that people will still fuel a vehicle, just in a different way, whether that's EV, whether it's hydrogen, whether it's synthetic fuels, and they'll still have a requirement to pay for it. But equally, the way people are travelling is changing. So we're adopting our model and our payments model, and now 20% of our volume is coming from that channel. You didn't see everything, obviously, within there, such as EV, e-bikes, car share, etc., but hopefully gives you a good feel. And I think you'd agree, Matt's not a common consumer. So we've conducted some research, actually, to understand better what the frictions from a customer's perspective. And we've made sure that we've got a good demographic. You can see there we surveyed over 2,000 people with a good geographical demographic, a good age demographic. We also took into account sort of salary bands, etc., household income. And the findings are, some of it's kind of common sense. We understood it, but it does put a challenge out to us as a tech business in terms of how we solve some of these things. So the first headline was that actually 73% of our consumers said that they felt that they were actually relatively well set up for mobility payments. However, actually when you look at it, 50% of them have had a bad experience in terms of travel, and it's disrupted their travel. I'm a case in point today. I drove to the train station today. I went to pay for my parking. The machine wasn't working. It told me to download an app. I couldn't download the app because I'm in a rural area, so I've left my car with number plate recognition, and I think I might get a fine. I'm not sure yet, which I'm going to have to fight, right? But that's stressful, and it's distracting, and it's a problem that I've now got to fix when I get home from the conference. And that's the sort of feedback that we were getting from the consumers, is that devices aren't reliable, the tech's not working, there's a problem statement for us to solve. The second thing that we thought was really interesting is that the second preferred payment method is cash, which maybe relates to that point that 50% of them have had a bad experience, i.e. they're using the cash as a safety net. The first preferred payment was card. Mobile was actually third. So cash was still up there in terms of preference, which we thought was really interesting. And we also saw regional issues. So actually the best served regions are London and the South East. The worst is Wales and the North East. So there's definite regional issues, and then actually rural versus urban, which you kind of you'd expect, right? The infrastructure in urban is going to be better than within rural. So maybe there's a call to action here for a tech community. You know, can we solve some of those tech issues that are happening in the customer journey to make it smoother? And is it something around, you know, if we build it, they will come? So why is it important? Well, for us as a business, as a tender, it's an evolving landscape for us, you know, our move away and de-risking our business from just being fuel. But I think for a community, when I look at the payments industry, it's so complicated in terms of facilitating a payment. The landscape is really complicated, from POS providers, the banks, the rails, Visa, MasterCard, card issuers, the acquirers. We all have to talk together better. So we've created a community called ThinkIn, where we're starting to try and find, you know, it's competitive, right? But we're trying to find common areas where we can work together to improve the customer journey. And then finally, sort of three things that we see as room for improvement going forward. I don't know how many of you have got an EV, but it's a common feedback to us that it's just a nightmare trying to charge your car. How do we make it as easy as walking into a coffee shop and buying a cup of coffee? It's not. You have to have different apps for different vehicles, for different charge providers. And you know, we have developed an app actually that is agnostic to the charger. Our next challenge is about integrating it across all those POS and service providers. But ultimately, that's what the consumer wants. They want to drive up, plug the car in, charge, pay, leave. It shouldn't be as complicated as it is today. The other one is around trains. And imagine a world where you can get on a train in Edinburgh, tap in, get off in Penzance and tap out. You don't have to download an app, you don't have to visit a machine, you don't have to buy a ticket. It's all seamless. And I think with what we're trying to do in Manchester around the B network is a start of the journey to potentially including trains within that. And maybe that will be a pebble which will mean that the rest of the networks join that. And then the third one is car tech and car payments. You know, in-car payments is going to be the next sort of big way of paying going forward. Just think of your car as a computer, you know, a big tech platform with the telematics that you can use to read. I know MasterCard and Mercedes are working together for in-car tech. Ford have got a solution whereby you can, as a tradesman, buy a van, you can configure the back of the van, so if you're a carpenter, it's got all your nails and screws in there, and then when you get in the van in the morning, it'll pop on your in-car screen to say, you're low on 6-inch nails, do you want to order some? You click yes, it orders it, Screwfix delivers it to your van, and you click pay. So starting to use your car as a payment solution provider is the next thing. In France, you can drive onto a petrol station, automate the pump, fill up your car, get back in your car and pay from your car and drive off. So a lot of opportunity going forward we see in terms of being able to make simpler payments from your vehicle going forward. My one would be parking. Why can we not drive into a parking space, get out of your car, walk to the conference, walk back to your car, get in, drive off, and the car pays? Because the car knows where you are, and the telematics can tell payments providers where you are, and it can charge the rate. Now, there'll be resistance to that because of the economics of it, but big opportunity, I think, in terms of in-car payments. So, finally, there's a QR code for you. If you're interested in that customer research around what customers are saying about mobility payments, we'll be issuing it in the new year. So if you want to scan the code, we'll make sure that you all get a copy. And I guess the thing is, in the future, you know, if someone else is stood on this stage and, you know, their equivalent of showing you a phone box, I think will be showing you a mobile phone and saying, can you believe people used to tap this to make payments? With the comment earlier about Vegas and, you know, agentic payments coming down the line, it will be a different world in the next 5 to 10 years than what I'm describing today. So thank you for your time. I hope that's useful. If you found it interesting, please get the QR code and we'll send you the survey. Any questions? Oh, good. Thank you.
Thank you very much to Attender and Steve for that presentation. Can I now welcome Josh from Tell Money to the stage for his presentation on VRPs. Thanks.
Hello everyone, I'm Josh Cowan from Tell Money. I'm the Partnerships and Key Account Manager. I am going to be talking about open banking today, so hopefully Amy doesn't throw tomatoes at me, although I think she's gone already. So a little bit about Tell. We were founded in 2020 by David Monty and Tony Poole with a wealth of experience across FinTech, banking and tech, across the board and the senior leadership team. We do have less than 20 staff, but very much a business that punches up. We support over 100 brands across banks, EMIs, PSPs and FinTechs. I've even seen a few of our key partners today, which I'm delighted to see. We sit in the RegTech bucket, so our solutions solve customer needs from a compliance perspective, and we're reactive to our customers' challenges. We focus on being very simple to integrate, providing full managed service, and being commercially friendly. We're very proud that we've never charged anything more than what's in a contract. We're a B Corp, which we're very proud of. Social responsibility, of course, is very important to us. And Pay.UK, so we're a PSP aggregator. So when Pay.UK first launched confirmation in the UK, they realised that onboarding 300 plus PSPs was going to be a tough ask. So they hand-selected 8 companies, of which we were very proud to be the first who were selected. and we're also an EPC-approved RVM in Europe for verification of payee, which launched last month. Appreciate many people in this room will already have a strong understanding of open banking, so not everyone needs to know, but it's always nice to set the scene. So what is open banking? Open banking is the ability for an end user to securely share account data or initiate payments through an authorized third party via APIs. And when we say third parties, we're talking TPPs, so think the likes of Plaid, Tink, Yapily. Examples of data that might be shared are account balance, transactions, standing orders, for example. And ultimately, end users control consents, control usage with consents, which can be revoked at any time. Think of open banking as a messaging platform. What it's not is a payment scheme. What it is just a simple form of messaging that can initiate a payment as well. There are two sides of open banking. So number one is the mandatory side. So under PSD2, account providers must publish APIs for access to information and outbound payment initiation. This includes even prepaid cards and wallets, for example. The information may never be requested, but it must be made available. Number two is the consumption of open banking data and APIs. This is optional, and this can be done through a regulated TPP. We sit on the left side of this diagram and ultimately act as an enabler and work closely with the TPPs because we're complementary to and not competitive to them. Our role is to allow providers and their end users to take part in open banking as well as complying from an open banking PSD2 perspective. Many people don't realize that they're actually using open banking every day. Pay by bank is a common example. So for example, if you use Revolut, you use Pay by Bank, you redirect it to your bank, you select it from the drop-down, redirect it to your bank, click Approve, that's powered by open banking. Trusted credit data. Lenders can now use data to make better decisions on lenders, to go beyond just a generic credit score. So for example, SMEs and small businesses applying for credit cards may not have a lot of history, might be a new limited company. That data on the financials can be essential to them getting a credit limit. The ability to export data to financial software packages. So using open banking, SMEs can connect their accounts and credit cards to the likes of QuickBooks, Xero and Sage to give live feeds and account info which can actually be downloaded. Budgeting apps, the likes of Emma, provide overviews of finances across accounts and can help take control and even help save money automatically. VRPs, variable recurring payments. So there are actually two flavors of VRPs. The first is sweeping VRPs. So what are these? They've been live for 3 years now across the 9 biggest banks in the UK and Ireland. Sweeping VRPs can only be used to send money to another account in the same name. So for example, I could only send money from an account in my name to another account in my name. Rules or mandates can be used or set up. So for example, let's say if your accounts fell below a certain balance, you might use another account to top that account up. Or similarly, you might decide that if it went over a certain amount, you might decide to sweep the excess into another account in your own name. And they can be used across credit, current, and savings accounts. Commercial variable recurring payments, otherwise known as smart debit, which is the name that we prefer, give you the ability to pay a third party. This, of course, would be a business for normally products or services. They can be set up immediately, unlike direct debit, which generally takes 5 to 10 days. Also, unlike direct debit, changes can be made right up until the moment the payment is taken without needing to contact the bank. They can be managed or cancelled via an app, and there's no need to contact the bank in any way. And similar to sweeping VRPs, rules and mandates can be set up in a number of different ways. The first transaction for a CVRP was actually made 6 days ago by Tink, Crew Bank and Utilita, and it's believed that this could be the trigger for the first wave of go live in Q1 2026. So what next for CVRPs and open banking? Firstly, standardised contractual agreements, otherwise known as model clauses, have been developed by UK finance members to govern CVRP participation between payment initiation service providers and ASPSPs. These include important frameworks on things like dispute resolution and mandate parameters. Could CRVs become the first test case for premium APIs? A premium API is a value-added API that goes beyond the basic requirements of PSD2 from an open banking perspective. Premium APIs could unlock investment and innovation in the customer experience and help develop a commercial approach to open banking for the future. But ultimately, who knows? Innovation should always be the driver, whatever happens. One thing we are seeing is a change in narrative, and it's becoming less of a compliance burden and more of an additional feature that account providers are looking for to give connectivity to the budgeting apps, to the ERPs, and accounting software. Thank you very much for your time. The QR code just takes you directly to our website, but if there's any questions, please feel free.
In hands there. And I think that's the one thing that I would say when I observed coming into Bruntwood SciTech is, where are the women in FinTech? We really struggle to find them. And it's not just in FinTech, it is across tech. At Bruntwood SciTech, when I came into the role, I created a female founders incubator to try and address the fact that there's less women in tech. And we're now on our 4th year of doing the Female Founders Incubator. And I stood up at a FinTech North conference in Leeds a couple of years ago and said, where are the women in FinTech? And I'm really, really pleased to say that our Female Founders Incubator hasn't got loads of women in FinTech, but we have found 2. And I just want to give a shout out to Alex at the front and to Suze, who are both alumni of our of our Female Founders Incubator. But I think that, it was to show there is a lack of representation. And what we're going to discuss today is why diversity and inclusion is really critical. Touching on the historical barriers that have faced women and underrepresented groups, but also what's that impact had on financial services and FinTech, and what are the steps that we can all do to drive meaningful change. So if there's one thing that I'd love everyone to do here today is to, once the panel's finished, have a think about what's the one action that you can do to drive meaningful change. What's that one thing that you can do to help someone in FinTech or financial services, be it women or an underrepresented group? So I'm going to come back to that at the end. So it's now my pleasure to take to the panel. Can you hear me on this? Yep. So as part of the intros, I'm going to let everyone introduce themselves, but can you all share a moment that how diversity has led to positive change, either that you've personally experienced or witnessed? And you can go in any order. Who's going to
Why is everybody looking at me? Is this working?
Yes.
Yeah, you can all hear me at the back. Hi, my name's Suze Ferreira. I'm a qualified financial advisor, and before that I was an accountant for years. I qualified in financial advice to try and help women build wealth, and opened a wealth management firm, and then realised that I was only going to reach a small amount of women, so I wasn't going to have the impact that I wanted to have. So I thought, how hard is it to just build a FinTech? So that's what I'm doing. So one thing that I think has really helped, just remind me of the question again. It was around...
It's to share a moment of how diversity has led to positive change that you've either witnessed or experienced.
Yeah, I didn't want to go off on a tangent. So I don't think it's one singular moment. I think it's a collection of moments. So it started actually, and I know it's so corny to say this, but at my first FinTech North event, which was the Leeds conference, and I'm sure it is the one that you mentioned before, Catherine, about asking. And I just thought there's definitely a need for more women in FinTech, but I didn't really see any other barrier. I didn't see my gender as a barrier. I saw the lack of expertise that I had in that certain area. But the more that I spoke to people on that day of all genders, the more I realised that if I wanted to do it, I could do it. So I think it was a collection of moments, then you saying that, and then me thinking, why don't I just give it a go? So thank you.
Oh, thanks, Suze. Kasia.
Hi, everyone. Can you hear me? I'm Kasia. I'm a software engineer at Starling Bank, and I'm also a mentor, coach, and advocate for women in tech and girls in STEM. A quick intro to Starling. We're a digital bank on a mission to change banking for good, and currently have 4.6 million accounts, including almost 500,000 business accounts, of which 20% are women-owned businesses, or majority women-owned businesses, which is 5% higher than the market average. So we're quite proud of that. That's why I'm mentioning it early on. In terms of the question Catherine asked, it's not a moment that I witnessed myself, but I think it's incredibly meaningful and speaks to diversity, not just in the hiring process and leaving it at that, but embedding it within the training in your organization, embedding it within the culture, a culture of empathy towards other people, essentially, I think is important. And that would be when our teams, our customer service teams and welfare support, were able to become aware of a situation where someone was essentially receiving harassment via the payment references, the transactions that they were being sent. And by partnering with Surviving Economic Abuse in 2023, we were able to create a feature called Hide References, which 62,000 customers have used now. So just goes to show that one moment where you take a moment to see what someone else's needs are can serve thousands of people in the end.
Thank you.
Hi, I'm Chloe Fox-Robertson. I'm from the University of Manchester. I'm doing my PhD on FinTech, so the economic geography of FinTech, but then also looking at the gender inequalities that are within the sector. In terms of, I guess, a moment of diversity and on your question, I think when I first came across FinTech, initially wasn't sure what it was, and I looked more into it, and I was really interested in the kind of discourse around it, the innovation, the progression, everything that it was trying to do. It was trying to be a positive force and doing finance better. But then I found it the kind of juxtaposition with actually when you look at the sector, it's incredible lack of diversity there. And I found that juxtaposition just really interesting, but then also frustrating, because FinTech is already doing so much. How much more could it do if we had that diversity there across the sector?
Thank you, Chloe. And your research, you looked at the triple glass ceiling. Can you explain a little bit more about that? What does it mean, and how does it manifest itself specifically in FinTech and financial services versus other sectors?
Yeah, so this came from a paper that was published earlier last year. And from some initial research, we kind of, FinTech sits at this intersection between finance, technology, and entrepreneurship. And we kind of argued that actually the gender inequalities in each of these areas, so in finance, in tech, in entrepreneurship, they combine to what we then term the triple glass ceiling in FinTech. And it's because in each of these areas, there is a long-standing male dominance, continued privileging of perhaps what you would call masculine performances, and also some essentially very rigid gender stereotypes in each of those areas that hamper kind of non-performative action and long-term change within the sector. I don't think a lot of the issues that we have are unique to FinTech, but I think its particular, configuration is such that they are perhaps more so in FinTech, but then on the flip side, because it underlies so many other sectors, there is a real potential if we change it in FinTech, it's going to have a really, really huge knock-on effect in other sectors.
So you mentioned unique barriers. What do you see those as being, and why is it that those particular challenges are for women and underrepresented groups? And I guess that's, if you guys want to chip in as well.
I mean, I don't know if Susie wants to start, as obviously she is a female founder.
The barriers?
Yeah.
It's as if I'm sitting here and not listening, isn't it? I'm listening so intently to what you're saying. I've missed the next question. I am in quite an unusual position that I don't have experience. So I have experience of being in a corporate world in finance. But I think from a FinTech perspective, I'm quite new into it, building my own. And I do feel in a bit of a bubble, so I'm probably not as aware of some of the differences that I'm sure the rest of the panel can touch on. But for me, the barriers that I'm going to try and run through them, as in just ignore it and do it anyway. That's maybe just my mental attitude. I think when I stand up, whether I'm pitching for like potential investment or about when I was trying to find a CTO to help me build it, and I've just gone and done that bit myself, got to MVP stage, I was focusing a lot on the gender wealth gap and the reason for that. And it felt like I was coming from a place of just highlighting, but to the point of pushing it over to just complaining so much about these huge gaps. That we already know all this, so what can we actually do about it? And I think that's where I'm focusing in on the positives and what I can do to help women build more wealth. So I do feel a bit like I'm in my own bubble at the moment and coming from a consumer perspective, just because I know them so well. I know the problem intimately and I know how to solve it. And the FinTech world has just been so helpful so far. I just don't see any other barriers, but I know that sounds a bit ignorant. But I'm quite happy in my ignorance. Thanks.
In terms of the barriers that have come up in the kind of more recent research, so previously when people were speaking about their careers in financial services, they would speak of kind of very explicit harms and discrimination, but then kind of feel unable to report it for fear of them losing their job as opposed to the perpetrator. And it also just being very normalized that was how things were, you just got on with it and you just dealt with it. Whereas when people are talking about their experiences within FinTech, and this goes for women and other underrepresented individuals within the sector, it's much more implicit. So it's much more kind of harder to quantify, let's say, where it largely captured by the term microaggression. So it'll be these kind of little smaller things that in and of themselves do not seem so big and are quite easy to dismiss, or, oh, it was meant as a joke, or little things like being talked over, these types of smaller barriers. But then, of course, if you're experiencing this day in, day out, this adds up and it causes a significant additional emotional labor on top of the work you are already doing. And so this accumulation gets tiring for a lot of people, because there's all very well maintaining resilience, but this is work to do this. And so some people are getting to a point, or speaking to the fact that they've got to a point where they're tired and they've had enough. So I'd say the type of barrier has changed.
And would you agree with that, Kasia, from your own experience within Starling?
Not from within Starling, but certainly from a woman in tech perspective. We've had the Lovelace report released this year, and it's a commonly known statistic that 50% of women over the age of 35 leave the tech industry, and it's often thought that this is around, childcare responsibilities, return to work, that kind of thing, but only 3% of respondents said it was actually due to that, and in fact, the majority was because they just weren't getting progression opportunities, they weren't being considered for leadership roles, and there was just no room for them to grow because they were overlooked for the men in the company.
Just moving on from that around company culture, I guess. Starling is the only British bank founded by a woman, which is great. Woo! Do you think that's tangibly influenced the company culture?
Yeah, I think so. I would be really glad to say so, actually. It is, as Chloe said, for us, it's an app-based bank. It's a digital bank, so we are at that intersection of two male-dominated industries, the finance industry and the tech industry. But I think being founded by Anne, who set out to create a disruptor bank, really has paved the way for a company that holds gender balance at its core and does a lot of work around that. So for me, when I joined the company just over a year ago, when I was going through that interview process, seeing what they have done and the initiatives that they have was really, really attractive to me as a woman in tech. And of course, as a passionate advocate for women in tech, it was something that I was really glad to see and really appealed to me. And then when I came to the company, I was really glad to see that it wasn't just lip service and it was very tangible actions that are being taken. And so we have 42% of senior management is women, and that's a little bit higher than banking in general and much higher than FinTech, 10% higher than the FinTech average. And I think that trickles down to create a really comfortable environment for women and other people from minority groups or underrepresented backgrounds to have a voice. And a lot of the work that we do is very grassroots and very employee-led. So we have a number of employee networks, including the women's network called With Women, which has over almost a third of our employees as members of that, men and women, and they've done a lot of tangible work to create meaningful change within the business. And then we also have a partnership with Code First Girls, which is really, really dear to my heart. I used to teach with Code First Girls, so when I saw that, that was really special for me. But we've now sponsored 2 CFG degrees, meaning that 18 women had access to free training that was 16 weeks free training to upskill, gain the skills that they need to receive a technical job, and then have a placement directly in Starling, and then get support that they need on the role, have mentorship, that kind of thing. And also, even early careers now, we were able to partner this summer with Next Tech Girls, which is a social enterprise focusing on young women around school age, picking their subjects, that kind of thing. And we hosted a careers panel showcasing the roles and the diverse journeys you can take into these roles to these young women, just so that they can see the opportunities are available to them and understand the myriad roles that exist that I simply had never heard of these roles when I was younger. So I'm glad that Starling is taking such a, basically the opposite of performative, very tangible action to make change and have future generations of women join FinTech.
That's really great points, and great that you've got that company culture that you feel proud of as well. I've got a list of questions, and I'm going to jump around because there's some of the points there that you made that I'd really like to touch upon. One was around the employee network. So my previous role, as I mentioned, I've been in banking, and I was the chair of the female network, but it wasn't just about highlighting issues with progression or childcare, menopause policy. It was around actually finding the male role models that are out there that are modelling the behaviour similar to women, doing the school pickups, taking the parental leave. How important is allyship in FinTech and financial services? And I think it'd be great if you can all contribute to that one, because I'm sure you've all got something to add to that.
I mean, hugely is the short answer. The longer answer, what seems to come out of the research is the importance of not just kind of mentorship, but sponsorship, that kind of going that extra step. So not just kind of coaching someone or talking to them about their options and what they should do or what they might be able to do, actually creating that opportunity, putting that person forward for a speaking slot, whatever it might be, kind of turning that discussion into actual actions that you can really advocate for someone, came out as a really kind of important thing that a lot of people can do quite easily as well.
Yeah, I would completely agree. And I would say that successful allyship certainly starts with very conscious self-reflection. And I think if you're, for example, a man who's in a leadership role, or to any man or anyone who wants to be a better ally to any marginalized group, you have to have a willingness to sit with and allow that discomfort of realizing, oh, maybe I have some sticky unconscious biases here, maybe I judge people too quickly for this or this, and having an awareness of that and a willingness to take your own education on the subject as your own responsibility. And so then you can put it into practice within the workplace. You know, if you catch yourself perhaps suggesting to a woman on your team, oh, maybe you take the notes, or maybe you organize the social, and therefore blocking her from spending the time upskilling where a man on her team might be able to. And just taking note of that, making sure that you're not doing that, and maybe perhaps if you start to feel uncomfortable because you feel a woman is being bossy, understanding that you wouldn't necessarily judge her male counterpart for the same reason. So all that's to say is really taking responsibility and having that willingness to come up against your own barriers and then make a change around it.
It's having an open mind, isn't it, like you say? And I think it is our responsibility personally, but then there's also something that all corporations and workplaces can do as well, isn't it? Just to draw our attention to it as an ex-employee. But also something like FinTech North is doing the Our Works, isn't it? The mentoring program, something like that. So if you're a founder and you don't have an organisation that you're part of, what communities are you part of that can create something? So I think that's really important. And I've put my name down for Our Work. So Joe, I better get on that list. Rachel's done a brilliant job of all the interviews. But something like that, them going out and securing grant funding to then having a mentorship programme, and then maybe it'll turn into something like a bit of a reverse mentorship or something like that. I do think we can take personal responsibility, but there's also something that organisations and amazing communities like FinTech North can do to help everybody.
I think the kind of what both of you were really saying in terms of the learning, but then also unlearning those kind of unconscious biases, but then also creating a culture and an atmosphere that's not kind of fearful. Because I think people are concerned sometimes about saying stuff or addressing certain topics, or kind of don't really want to venture into certain discussions because of the kind of fear associated with getting things wrong. And it needs to be, you kind of need to have perhaps the space to get things wrong, as long as you then kind of learn from it as well. Because, you know, there's a lot to understand about different people, and you can't automatically know everyone's needs and what everyone requires within the workplace. So being able to have an atmosphere where you can really ask questions, you can understand, you can learn, is really key to that process as well.
And it's not gender specific.
No, it's
exactly
not.
what you're saying. We can do that with everybody, can't we? Yeah.
And I think the other point, especially in female entrepreneurship and in FinTech, is that role model, looking for those female role models and making sure that they're putting themselves out there so people can see them and see what good looks like. I just want to give one anecdote of what male allyship does not look like when it's good, which we discussed on our call. But I had a male leader who said, oh, I've got a daughter and I really want to push being a male ally. And I'm like, that's great. And he said, so I'm going to give you some advice. So when you go into a room, lower your voice so you sound more manly. Wear high heels so you're taller, so you look more manly, which I'm not really sure how high heels
I'm not
are
sure
make
my high heels make me look manly, to be honest.
I don't think so. But the best bit was, if you're going to wear a suit, make sure you wear a collared shirt, because then you'll look more like a man. But the one bit that I did take away was, if you are the only female in a room full of men and there's tea and coffee to be poured, don't pour it. Let them do it. So that's the one tip that I took from all of that. But yeah, that's what good does not look like. We just touched on collaboration there as well. At Bruntwood SciTech, we're massively into connecting people into the ecosystem and really actively support female founders. And we listen to them and we give up our time to really understand where that business is going and where it's growing. Suze, what you're doing with your app and what you're building, how does it feel to actually build something specifically for females? And I guess, how have you intentionally designed it with a female in mind?
Yeah, it's interesting because I thought that I knew it wasn't going to be a pink budgeting app. We're not going to slap a flower on it and say, there you go, there's your budgeting app, women, now you can be rich. That's not how it's going to work. But as I was building out the features, what I thought it was going to be simple, and it turns out that it isn't. And we were saying on the incubator to build the smallest possible thing. No, I haven't done that. I've built the whole thing, every single feature I can imagine. Alex is nodding in the audience because it just happens like that. To get out of your brain your knowledge to try and put it into something. So I think there's parts of the app that anybody could use, but then I need to have a defensible reason why it's, for women and what parts of it are different. And I just think that the way we approach money is different. I think the chapters of our lives are different, and I don't mean that in relation to age, because I think we all as people, but certainly as women, do our lives a different way round. Like I'm now, how old am I? 41. I have an 18-year-old, whereas some of my best friends are trying to have children now. So it's not an age-related thing. It's life stages. And the considerations that we have as women for, we might be caring. And I'm not saying that men don't go through this, but we seem to take quite a lot of it on as women. The caring responsibilities, and the this, and the just another thing, and just another thing. So I think the way we plan our finances and the thought that we need permission to give it the thought and the proper planning, and then we can go into tactical tools. So I think there are parts of the app that could be used by anybody, and then there's very specific things that I think will really help women. So I just found the whole thing's been fascinating to build.
And just touching on building, I know that you've taught yourself to do some of this yourselves.
I don't know who I think I am. I look at lines of code, my eyes start going crossed, and I think, how do people... It is genuinely like looking at another language. But I think what's helped me is the no-code platform. Like, I don't think, when I've been speaking to other founders or other women in tech, or other people that know people in FinTech, I don't think what I'm doing now could have been possible even 18 months ago, because I just don't think that the tech was there. As in the no-code platforms and everything that can help you at least arrive at an MVP. I'm not saying, and then my CTO will need to do their thing, but you can get to such a level that you couldn't previously, which is amazing, isn't it?
And do you think that's mainly because of AI and all the tools that brings?
Yeah, which is fantastic, isn't it? It's just lowered the barrier to entry for everybody that wants to create anything, and I don't think that's a bad thing.
Just touching on AI, side link there. Women disproportionately hold roles vulnerable to AI automation, yet often underrepresented in AI training and development. And that's something that we looked at. There's a lot of talk of that on LinkedIn at the moment, and like data showing that women are doing less formal training in AI and technical skills. Do you think it's a confidence thing?
No. I think it goes back to the kind of historical dominance that men have tended to have within technology and when there is new tech. And I think from a very early age, and this is kind of to do with more societal and cultural expectations, tend to be moved away from computer science and those types of subjects, even from school. And then when you add in that there's not much representation, although it is growing, there are limitations there. And so it's a less attractive thing to do, I would say. So I think it's nothing to do with confidence. I think it's more a social conditioning, if anything. There is nothing that makes a man innately more able to do coding or to be a software engineer or whatever it might be. But I think the kind of onset of AI is interesting because, as you say, the kind of low code and no code has really lowered entries, really lowered the barriers there. And I think that has the potential to actually support female founders who, as we know, are significantly underrepresented when we look at where VC funding goes. And if you're able to get kind of that MVP without having that funding through these no-code opportunities, then that could actually be also a good thing. So I think it's a very, very complex thing. We can speculate, but I think it will take time to really understand how it is affecting, even specifically within FinTech, the workforce.
Yeah, I would agree. As Chloe said, it's incredibly complex, and I think if you're someone, I think like Suze, who's willing to, you know, grab it by the balls and take advantage of it, it is really fantastic. But I think, as Chloe's already mentioned and referred to, because of this representation and these historical barriers, we have maybe less of a confidence issue, but an imposter syndrome that's ingrained in us from a young age, that we're not financially literate, we don't have technical skills, and that we're essentially told from a young age that we're less than in these areas. And so women are not upskilling in AI as significantly as men are, because they're also having a fear of being judged by their co-workers in the same way that we might be judged for our tone for whatever reason. We might be seen as, oh, she's lazy or she's outsourcing her work, whereas a man might be perceived as very innovative for doing the same. So there's a lot to unpack when it comes to the AI question, I think.
It was just a bit of a wild card thrown in there. This one wasn't pre-prepared. I was just lost my train of thought there. We actually just looking at the time. Has anyone got any questions for the panel? There's one at the front there.
Hello, hi. Claire Black from CFIT, but I'm actually asking the question with my Project Nemo hat on, which is an initiative to improve accessibility for disabled people in financial services. And I just wanted to ask the panel, it feels to me that, you know, I've been around for a long time in financial services, far too long, and have been having the gender conversation, gosh, since the early 90s. I think it's getting a bit better. But it feels to me that FinTech should be able to solve a lot of the problems that stem from, I don't know, exclusion in financial services. It's kind of built for that almost. That you can personalize it, ultra-personalize it. But it still feels that a lot of people are cut out from the system, and it's not just disabled people. It could be elderly people who are not confident or who can't do digital banking. It could be people with dementia or learning disability, you know, anyone who has trouble accessing the system. And I just feel that we don't do enough to have those people included in the workforce, because if you include them, then you get a much broader aspect and sort of input into the products that you're actually designing. And I think this has been sort of tackled a little bit in the recent financial inclusion strategy. But it feels to me that if we can get more people involved in the workforce, but also just start thinking about how we can really use that personalization that's built into FinTech. You know, why aren't we using it? And do you agree with me, or do you think I'm exaggerating? Thank you.
Thank you. I think it's a really good question, and not one I can answer around FinTech, but certainly for financial services. I think having the employee networks is massively important, and we use it not just, I can speak from financial services and from Bruntwood SciTech, but actually having a diverse workforce and having employee networks, you can ask people in those networks, does this work for you, this product or this service that we're looking at? How does it translate to you, and actually how can we make it better? And I think that's the benefit of having a diverse and inclusive employee workforce, because then you can ask, because you've got the people with the lived experience that can really tap into that knowledge and really share that to make things much better for everyone. So that's from my point of view, but we open up to the panel to get their thoughts.
I've got a thought. I don't think you're exaggerating at all. And I was speaking to somebody from Project Nemo, and her name escapes me. She was fabulous. At the last FinTech North event that we did. Oh. Yes, it was. Yes, thank you, Rachel, thank you. Yeah, and she really we were having a really good discussion around, because I'm in this naive stage of they're building the product, but being acutely aware that I need to get feedback really early so that I can build that into the build, if that makes sense. And I'm aware that I need to have a diverse pool of people that I test with. So we were having this exact conversation about how can I ensure that I include as many different groups of people that I can. So that's what I'm planning to do in the testing. And I just think it's so key, because I can only go from my own perspective, and then I tend to go out to people that I know first, or clients, for example, and just risk excluding a lot of people. So I think that's really important.
Anyone else got any thoughts on that? Or any other questions? So I can't see up here.
I've got a question. I was quite surprised to hear the statistic that a lot of females will leave employment for the lack of access to progression and the opportunities, and I wondered why that is, if there's just a real shortage of them. And I think it's a real pity that they should leave the tech industry completely it feels like such a missed opportunity, especially after you have to invest so much in the skills development to get people with that knowledge. What can we do to keep them?
Yeah. So to start, I think this is one of the things that is really key, in that a lot of people focus on hiring, they focus on hiring diverse teams, but actually retention and progressing your talent is just as important, because as you say, it's a lot of energy to train someone, and it's easier to retain someone who knows your business, is very good, has those skills, than it is to hire a new person. So on that point, I think there needs to be more focus on retention and making your workplace making the progression opportunities within the workplace as transparent as possible, both in terms of promotion, in terms of upskilling, and also if you are going on maternity or paternity leave, making the return to work, or if it's you've had to take care leave, whatever the kind of reason for being out of the workforce for a period of time might be, making that re-entry as smooth as possible and supporting that individual to do so.
Yeah, I completely agree. I don't think it's due to lack of opportunity to progress. I think it's just that all of those opportunities are being directed to men. Perhaps there is this unconscious bias around the fact that women may or may not go on maternity leave at some point or another, and therefore they have that block because someone says, oh, well, it might not be worth investing this opportunity into them. But these days it's not a choice that everyone makes anyway, and it shouldn't be something that's factored into it, because your work can continue while you're pregnant and thereafter anyway. But as Chloe said, it's about retention. And one thing that I really value where I work now is that we have a lot of autonomy in terms of our development. And I think it's important to listen to the needs of people in your organization when they ask for something, or when they want to start some sort of grassroots or initiative, something like that. So for example, we have a Women in Technology chat basically on Slack, and through that we've organized a long-running book club to do with technical upskilling. We've also noticed that the opportunity is there for any of us to demo or present in huddles and department meetings, but there was very few women taking these opportunities, and in order to combat that, we came together and started holding demo sessions just to become more comfortable with presenting, because you can't really take that first opportunity if you don't feel comfortable to do so. It's like a very public thing to do. So I think just that willingness to learn peer-to-peer and facilitate growth and allow people to, give people the opportunity to grow within the business, and then give them opportunities to progress and kind of demonstrate that they have developed themselves within and for your business, reward them as such, essentially.
Just to kind of add on that, I think it's easy to assume that certain conversations or certain things don't happen anymore, but actually through the interviews that I've done and a lot of conversations, of course, in the condition of anonymity, there are, comments like, oh, let's not hire her because she's going to go and have a baby, she's going to get married soon, and then she'll get pregnant, and then she'll leave the company for a bit, she might not come back. These are things that are said. It wasn't just one person saying that. These are things that go on, and it might not be, I think, at least before I started doing this, I assumed that that kind of thing didn't happen anymore, but it does, and it's important to really, if you are kind of party to a conversation like that, to really challenge it and make it clear that it's not acceptable, it is illegal, but kind of say, oh, well, why don't we think about this person? Oh, actually, I think this person would be great, and kind of try to shift that conversation, because I think it's naive to think that these things don't happen, and it's important to be aware that they actually do. Not everywhere, but they do still happen.
I think just one thing to add that I've observed through the Female Founders Incubator and through a number of founders that I speak to, and it's not necessarily FinTech, but more in tech, is that women get to a certain point and they're having families, and they find when they come back it's really hard to juggle. They can't walk back into the job that they had because they can't do it part-time, so they're told. So they end up leaving and starting out on their own. So there is a bit of a flip there in that they might not progress in companies, but they might take that leap and set up for themselves. And that's certainly, I've seen that more and more, and you'll have seen that as well. So it's encourage the people that you've got, really take a real interest in their development and retain them, because they'll jump off to do something else. The one good thing is that we are seeing a lot of returners come back and going into tech, because there's government-funded programs, and people like North Coders who've got the tech returners, and then there's a specific one for women returners that have had career breaks. There's stuff out there, so if you are interested in getting really good talent, that are people coming back from career breaks, that seek out these places, because they've got some really, really good programs to help embed them and keep them retained within your business as well. We're going to run out of time, so I'm just going to ask one last question to you all, and that's, what's the one thing that you think the sector could do tomorrow that will meaningfully expand opportunity for women and underrepresented groups in the sector? It's a really hard one, that.
In terms of what we could do tomorrow, I guess is the limiting thing, because I think the sector would need to do a lot, namely investment into women, for an example. But in terms of very tangible things that you could do, it is those kind of small actions, small everyday actions that you can do within your organization that will make a difference. And the kind of the mentorship, going beyond the mentorship and actively advocating for someone and having that sponsorship if you are in a position to do so.
Yeah, I would agree. We can invest in women and all the diverse talent for the future, but if you don't make your organization comfortable for people and a safe space as it is now, then you're not going to retain the talent in the long run. So I think asking your employees what it is that they need, whoever they are, and putting practices in that are like open conversation, for example, around women's health, whether that's menstrual leave or menopause, that kind of thing, having those frank and open discussions so that they no longer become taboo, would have a huge impact.
Mine is not a small thing. Systemic change, please. No, whilst we're waiting for that, which will probably take another 1,000 years, and we're out of time, it was something that Julian had mentioned earlier in the opening address about, I think I wrote on my phone, there was 3 things that he mentioned, and I think the first one was, and I'd love this, but it's not going to happen, but it would be wonderful, is that 12-month salary for, a FinTech founder to start out. Because basically what we need, Catherine, is cold, hard cash. We need money. So whether we have to go and raise that or get a loan, or I think access to funding is what I'm trying to say for founders specifically. But again, that's not just gender specific. If you want the economy to grow and you want us to build more businesses and FinTech's for good, we need to do it on more than 50p. Thank you.
Agreed. I'm going to do a shameless plug now. Our Female Founders Incubator in Leeds and Manchester is open for applications. It closes on the 21st of December. If you know anyone that's thinking about setting up a tech business or a FinTech business that are female-led, then give them my name. Look on LinkedIn. We'll share the links with Rachel to put out. And then the other plug is our newest building, Pall Mall, is opening, and we're offering everyone a free co-working pass for the day. So the link will be coming out to you. But at the start, I asked, what's the one action that you could do to drive meaningful change? And I'd really love it if everyone took an action today. You can either share it with the person next to you or just think about it and actually implement it. But that was the biggest thing, that if we can all do something collectively, then change will happen. So thank you, and thanks to the panel.
Thank you very much to our panel. I don't know if you saw my shadow behind there, but it took a minute for me to come out behind some of the chairs. But yeah, thank you so much to to all of our speakers on the panel. I think it's such an important topic, and it always shines through really strongly in Manchester every year at the conference. So yeah, it's really good to see that that thought that goes into it year on year, and think about all the positive things we can do in the inclusion space. Just continuing the kind of Women in FinTech inclusion diversity focus session, we've got a Women in FinTech showcase which will be moderated by Oliver Cheshire, so I'll welcome him to the stage now. I think he might be, he's come around the easier way, but yeah, take it away.
Thanks, Rachel. Hi everyone, and thanks very much for joining us for the final session of FinTech North, which is the showcase. Is the bit I always love hosting, the sort of speed pitching bit, which I know the late and legendary Chris Sear particularly used to love. And I think something else that Chris was particularly proud of about FinTech North, and I think is a credit to our hosts today, is their relentless pursuit of meaningful change, of this whole agenda, as we've seen this afternoon, towards diversity, inclusion, representation. And even as I stand here, not as a member of a marginalised group, it's a reminder that we all have a role in this meaningful change, and allyship is so important. But my only job, as I said, I'm the founder of Gillibier, the PR firm, the partner PR firm of FinTech North. I am not here to pitch my business today. I am here to introduce those who are pitching. We have 3 female leaders in keeping with the theme. And you don't want to hear any more from me. I'm going to hand over straight away to the first of our 3 showcases, who has already been on stage once this morning. Vipashyana, where are you? Here she is. Please welcome Vipashyana to the stage, who is going to introduce her business. And as per the rules of the game, when the clock starts, please take it away. Please join me in welcoming Vipashyana.
So the panel was great, talking a lot about how the difference is. I'll just talk a bit about it. So 1 in 5 founders are women. While this number is growing, it indicates that the market is still heavily skewed. We are operating in a landscape where we are statically the minority, clearly, which brings both challenges and unique differentiators. Female-led firms often have to demonstrate higher capital efficiency and resilience just to survive the initial stages. Ideally, gender wouldn't be a prefix to the word title founder. Like, we all are founders, be it female, be it male, or any other gender. But because of this inconsistency in the opportunities, there is this acknowledgement that we are taking in place. And however, until the ecosystem balances out, this distinction actually matters. It's not just about identity, it's about a different approach to building companies. The data is really critical here. Less than 2% of VC funding goes to female-led businesses. This is a harsh reality. It means the capital is scarce and the scrutiny is really high. But the flip side is that those who do survive this filter are forced to be exceptionally disciplined with every pound invested. Despite the funding scarcity, the corporate world is shifting. 11% of Fortune 500 CEOs are now women. It's just 11%, but still we are seeing the bright side. FinTech is growing because it's diversifying. We are seeing a correction in the market where female-led fintechs are beginning to outperform despite receiving 6 times less funding in the early stage than their male counterparts. If we drill down further, the numbers get starker. Asian female founders receive just 0.2% of the funding. That's really low, and that's the reality where I operate in. It is a difficult statistics representing a gap within a gap, but it also highlights a massive blind spot in the investment where we have the position to capture it. This context, continuously proving yourself, continuously coming on the board, really kind of formed my operational DNA. I didn't have the luxury of a safety net. I self-funded my entire education, be it undergraduate and then my postgraduate. This isn't a sob story. This is a testament to my belief and financial management. I know how to stretch a budget because I had to do it to survive it anyway. I self-funded 2 degrees, got distinction in both, and recently won Digital UK Startup of the Year in September. I have lived the problems and I have already engineered the solution. That's what I'm bringing to ScholarSaver. At ScholarSaver, we are using AI to solve a critical inefficiency in the higher education sector, student dropouts caused by financial stress. The data is very, very heartbreaking. Every 27 seconds, a student drops out just because of the financial pressure. Not because they don't want to study, not because they're not smart enough, not because they don't want it badly, just because they literally cannot afford it. And here what really breaks my heart is that these are just not statistics or number that we're talking about. These are real people, these are real students with dreams shattering. The numbers are staggering. In the UK, 48% of students have considered leaving due to financial stress. In the US, it's 59%. So, why now? Student debt is soaring past $1.7 trillion in the US. Over 200,000 students yearly drop out in the UK alone, and universities are struggling badly with retention. Gen Z, on the other hand, wants a smarter financial tools, but avoids talking about money. Since launching in last April, we have overcome a long way. Our AI tool has helped students to save up to 60% on daily expenses. We have won the Digital UK Startup of the Year 2025 and have been nominated at various awards nationally. We have also secured backing from Startup Bootcamp, Tech Nation, Hatcher Plus, and Google for Startups alongside others. Global higher education market is worth £71 billion annually. With 254 million students worldwide, the potential is massive. At ScholarSaver, we have built the Duolingo of student finance. Our AI-powered platform helps students manage their money with personalized tools, comparison, and a judgment-free space to discuss and solve financial problems. With features like financial education and a community system, providing automated financial management and tracking with open banking integration. With us, the universities also get anonymous actionable insights into students' financial health, allowing them to proactively support those at risk and to reduce the tension of retention what they're going through. We are uniquely positioned to solve this problem. I personally overcame incredible personal financial challenges to fund my own entire education and my sister's, embodying the resilience we bring to our mission. Ashish, my co-founder who has been in the early panel in the morning, is a great in tech and everything. So he has also built some startups before this and exited, scaling AI and SaaS solutions from zero to profitability. Together we have around 12 plus years of experience, and we have turned this passion into a platform that's just not about money. We have a team of advisors and mentors guiding us to grow and scale rapidly, from founders to university board members to really highly influential people in FinTech and tech around the globe. A degree is about 1,000 days. The real question is, who gets to spend those days learning instead of worrying about money? together, we can transform student finance and keep millions on the path to their dreams. Cheers.
Thanks so much. I love the story, and we do have a few seconds left for questions. If anybody has a question, please do put your hand up now. If not, I have a very quick one, and it's this. Of course, we've met on this stage before, this time last year, and I love the graph that you have with the curve of where you've been in 2024 and where you are now. Can you, in about 30 seconds, tell us where you're going to be next year?
That's a good question. I would say next year we want to help more and more students, because out of the current space, we have a huge wait list with us, but we are incapable as of now because of the other funding and time constraints to put more students into the platform. So we want, like, next year we help like around hundreds and thousands of students already to help, because one student is dreaming to do something. He can be the next, or she can be the next Newton, maybe next Einstein, I don't know, next president, prime minister, I don't know. So we are kind of at the national level, at the society level, losing the potential just because that person is not able to pay the fees and drop out. So I think, yeah, I would like to save more dreams.
Thank you very much. Oh, I don't think this one's on. Thanks so much. Round of applause for John again. Thank you. Next up, we have Ernestina. Here she comes. We haven't met before on this stage, so I'm looking forward to hearing your presentation. Please, everyone, actually join us on stage. Join me in welcoming Ernestina. Thank you.
All right. Hello there. Hello, everyone. How are we doing? Good? Amazing. Yes, incredible. I love the little whoa for 4 o'clock, is it? 4:30 now. Almost done. Let's hang out for the last 30 minutes, yes? Okay, we'll continue on to my presentation. So I think there might be a little bit of a confusion. I do have startups, yes, I do have companies, but I'm also a visiting lecturer and a PhD at the University of Manchester. And clearly, I might have prepared my slides more research-based than my actual startup. But of course, I'm more than happy to talk about my startup as well, if that interests you more than the research. But absolutely. Right, okay. A brief introduction of myself. I'm Ernestina Zhu, born in Beijing and grew up in California, and I moved to a couple of different places. And currently, I'm a visiting lecturer at the University of Law, and my research position is at the University of Manchester, specifically in FinTech. And I think you'll be intrigued about the research topic, though. I do research about NFTs. Okay, as a lot of you might know, NFTs are kind of down in the drain right now, isn't it? Is a lot of people still in the NFT realm at all? Nope. Yes. I can't even see any shake of hand, like shake of. Yes, oh, thank you. Thank you for saving me, yes. As you might know, my research began 3 years ago when it was still the heat time, 2021. As you might know, it attracts billions, millions into the market because of the $6.9 million US of that specific painting, the People's. I'm sure some of you might remember the everydays. But my research, of course, I understand the time has changed. There's a lot of things that happened in the current situation. So my research has focused on the case of China. As some of you might know, China is technically called a socialist market system, which means is half restricted, but half market system, free market system, as they call it. And ever since in 1978, does anybody know what happened in 1978? Nope, not really? Yes? Do you want to go ahead? Can you? Okay, it's okay. I don't think he has a microphone. I don't know we're that interactive yet, but it's okay. 1978 is the open up policy. As you might know, some of the breakthrough of the economic growth has started from 1978 and then 1992. Of the expansion, then the free market, and then, some fun fact, in the 70s, McDonald's came into the Chinese market. It used to be considered a high-end restaurant, as a lot of you might disagree with that right now, but it was a big thing, a novel thing. My research specifically, and I want to talk about today, is NFTs in China. As you might know, it's a socialist market economy, which means it's restricted, which also kind of go against the idea of decentralization, cryptocurrency and Bitcoin, isn't it? So what we're talking about here is how the adoption of the cryptocurrency or NFTs has happened in China since 2021 to 2024. The hype and the downhill. Timescale. We're more looking into, in 2021, the first document, the first regulation published about the ban of cryptocurrency trading. So the government did issue a series of documents and policies regarding trading a cryptocurrency will be considered illegal actions. You're not supposed to do that. You put behind the bars. Basically, that's what they were saying. So what's behind this is an active ban or completely considered illegal action, also within the realm of NFTs as well. So NFTs at the beginning has been very, well, it's technically fundamentally built on cryptocurrency, because you have to trade with cryptocurrency, don't you? But with NFTs in China, they decided to adapt it in a different way. In 2023 and 2024, my research did observe the public discourse, including the media reports, and the policy. Instead of calling it non-fungible tokens, like, oh, it's financial stuff, they decided to call it digital collectibles. What we observed here is it reconsiders this whole technological artifacts, this whole item, into more of a cultural products. It emphasizes more on the collection side. And what's more importantly is they decided to not use the blockchain or the normal cryptocurrency in the universal term or the global perspective or the global market. They decided to use the consortium blockchain. Does anybody know what is consortium blockchain? Yes? No? Not really. Okay. What it means here is basically is a highly controlled system that technically the country could get access to. Of course, when we're talking about decentralization, we're talking about peer-to-peer transaction. We're talking about the central banks or any of the banks or even the governmental regulations couldn't touch any of the transactions. Well, technically, they shouldn't be able to touch. Of course, there are different types. Like there's some of the speakers were talking about the different types of the Eurobase or the USDC and other types. But with this consortium is a lot of the time, if you want to get into the NFT trading, if you observe what is happening on the Bigverse, which is one of the biggest NFT trading platform, which is still available in China, you will have to put your phone number in to register an account. And bear in mind, in China, if you use your phone number, it's linked to your ID number. And in their terms of conditions, if you observe, the terms of conditions clearly said that if there's any illegal trading, which also another thing to mention, secondary trading is not allowed. As some of you might know, NFT trading, secondary trading is the most profitable one. It's what the cash flow is generated, basically. Well, the primary trading is more about, if you can see the precious side of that specific NFT. But the secondary trading is more about the money, right? So the ban of secondary trading and other actions, illegal actions, that has been considered in China, which gives the rights for the Chinese government to trace down your ID, which means everything is documented, which kind of defeats the purpose of NFTs, isn't it? But the question here is, what can we learn from this? What can we take from this? Of course, I understand when we're talking about NFTs, we're more looking into the financial side of it. I'm kind of proposing a new perspective more of. Within the regulations, because we understand, even at the very beginning, when NFT has been recognized, it was partially because Christie's, the big art collection institute, recognized its value. So you kind of need big institutes to come in and recognize the value. Then how do we work within the regulation? How do we work within the structures? So for the Chinese case, we've adapted or abandoned some of the financial side of it, but adopted it in more of a cultural relics, cultural protection, and later on by the authoritarian or the government's wishes or priorities to use technology to promote traditional culture. But how can we apply it to try to revive, or not only revive, but rethink about any of the other technological evolvements and artifacts? A lot of the time, regulations can be used as strategies, as things that we can consider how to expand to work within the regulations. In the case of China, as we just talked about, RMB trading only, it can be interpreted as restrictive, but it can also be interpreted as stop the money laundering. It's a lot of the time where we're talking about this money transaction technology. As the no resale, it can be reinterpreted as eliminating speculations, the public speculations. And how can you expand it? That's the other question. I'll end on this point. When we're talking about specific things, it's kind of a more philosophical thinking, or novel innovations, technological artifacts that have been invented. Like this year it can be cryptocurrency, about next year there's some other protocols, or the DAO system, or the Web3 is going to generate another Web4. I want to raise to the topic, since we can't really run away from the regulations, how can we work around it or work with it? How can we consider structure to be a part of the strategy? Is it going to be culture? Is it going to be tourism? Are we going to rely on retail sales? Even PR? At the very beginning, a lot of the FinTech startups or the AI startups rely heavily investment on the marketing and the sales side, because a lot of people consider, oh, it's a facade, and it does attract a lot of fundings. Do we rely on that, or do we rely on any other spectrums? Anyway, so that's my research, but I do want to mention a little bit my startup, if that's okay. Oh, absolutely, yes. Well, a couple of startups I've started before, based in New York and California. One of them is doing AI agents and mini apps. The other one is doing marketing. I'm more than happy to have a little chat with you all. It's scaled up to 50 employees right now, so it's relatively doing good. And as you can tell, my style of communicating is quite direct. And I am very happy to have a conversation, and especially I truly value cash flow at the end of the day. So anyway, thank you so much. Right.
Thanks, Ernestina. I'm afraid we don't have time for questions on this occasion, but I think if you're going to be around for drinks later, very soon, of course, we're going to be moving into the bar where there is drinks, and I'm sure, like me, you will have questions to ask Ernestina and our other speakers. In the meantime, we have one more speaker to join us. This is the toughest slot of the day, so please join me in giving a warm welcome to Divya, who's joining us on stage now, who's our final presenter. So here she comes. Please welcome Divya. Thank you.
I was going to start with a joke, but I forgot to write it down, so let's start with a dramatic bit. Hello everyone, I'm Divya from Gemba, and it's a pleasure to be here with the FinTech Nerd community. It's great to see so many builders and problem solvers in one room. Okay.
Does this? Oh, there you go. This one's on. Do you want this one?
Okay. Are you guys able to hear me? Okay, perfect. I think it's too late for that joke again, so I'll just... Hi, everyone. I'm Divya from Gemba. It's a pleasure to be here with the FinTech Nerd community. It's great to see so many builders and problem solvers in one room. In Japanese, there is a concept called Gemba. It means the real place. It's the factory floor where the magic happens. It's where the value is created, but for the last 10 years, the real place in fintech has been a nightmare. Let's be honest, launching a regulated financial institution isn't cool. It's a grind. It's a minefield of capital requirements, fit and proper test, consultant and developers who charge you by the breathing minute. The industry standard to launch a bank, it's 3 to 4 years. When we executed our first trade, it took us 4.5 years. Think about that. 4.5 years of audits, of waiting and burning cash. This is the crossroad where most startups die. They run out of money before they run even a single transaction. We looked at that timeline and we said, no. We suffered through the regulations, so you don't have to. Welcome to Banking as a Service 2.0. No-code banking solution. The old way, Banking as a Service 1.0, that was just APIs and broken promises. You still needed a license. You still needed a dev team of engineers. Gamba is different. We built the infra layer for the entire non-bank world. We own the license, we own the stack, we own the headache. Today, right now, a cloud accountant, a community manager, or a fintech founder can log into Gamba, launch a fully regulated full-stack banking application, not in 4 years, not in 4 months, in 7 minutes. In 7 minutes, they can launch an entire banking solution. 6 hours to go live, 0 coding required. We handle the heavy lifting, compliance, KYC, card issuing, payments. Gamba is a UK-regulated financial platform built to remove friction from business banking. We give innovators banking-grade tools without the usual hassle. Our goal is simple: help you launch businesses, bank accounts, payouts, FX, and cards in minutes. And instead of working with multiple providers that don't fit together, you get everything in one place: fast, compliant, scalable, and ready for global use. We spend time understanding what fintech teams face every day, not in theory, but in real workflows. And we designed Gamba to solve those pain points. With Gamba, you can move money globally, fast, and with unmanaged FX with clear real-time pricing. Launch cards quickly for teams, for end users. Basically run everything, from banking to payroll, with full automation. And there's something that truly sets us apart. We don't charge our partners anything. No setup fee, no license fee, no monthly cost. We work on a revenue share model. The more they scale, the more they can earn without the burden of compliance or regulatory overhead. This model fundamentally reshapes how fintechs launch. From onboarding to daily operations, the platform supports the full cycle of global business. That means less time fighting infra and more time building what your customers care about. We are entering a world where almost every company, not just fintechs, will need financial features built into their products: payroll platforms, marketplaces, mobility apps, B2B SaaS tools, and many more. Financial services are becoming a standard part of the experience. But to deliver that, you need infra that's quick to set up, easy to scale, global, and solid on compliance. That's where Gamba fits. We make the financial layers almost invisible so that you can focus on what your customers actually see. To everyone in the building the next wave of financial products, you shouldn't have to choose between innovation and compliance. And you shouldn't have to wait weeks just to open a bank account or get the bases in place. With Gamba, you can launch fast, scale with confidence, and operate globally from day one. Thank you for listening, and I look forward to speaking with many of you today.
What a story to end with. I've never considered launching my own bank before, but you made it sound easy. We have a couple of minutes left for questions before we wrap up, because we haven't gone over time. So if anybody has a question on Gemba, please do shout it out now. If not, same rules apply. We're all going to be moving next door for food and drinks, so there will be opportunities to have a conversation then. So if nobody's volunteering a hand in the sky right now, then all that remains for me is to thank our presenters, all three of them. Another big round of applause, please, for all three. And I think Joe is waiting in the wings now to... Oh, is it Joe? No, it's Ryan, the legendary Ryan. Let me hand over to Ryan. All that remains for me is to thank you all for sticking around and supporting our showcase participants. As always, lovely to see you all today. I'm going to hand over now to Ryan to wrap things up. Thanks very much again.
And a big round of applause to Oliver as well for hosting that. We did so well. We got to the last session of the day and then had a technical difficulty. Oh well. Sorry about that, Divya. Where are you? Can't see anything actually. Cool. Right. So that's the end of the Manchester conference. Just want to say a big thank you to our sponsors, our headline sponsors, Oak North, our brand sponsors, Pulsant, RSM, Attender, Mastercard, Cyber Alchemy, Intercash, and Barclays. Our ecosystem partners, Bruntwood SciTech. Our exhibition sponsors, Merge, and of course the University of Manchester for hosting us today in a not a bad venue. As I say, that's the end of the event, but we have got our Manchester, our FinTech social to end off the night, which would be great to see you all there. It's hosted at Gorilla in Manchester City Centre, and that's the address there. It's only about a 15-minute walk from here, although it is cold outside. It'd still be good to see you all there. Checking I've not missed anything here. I think the final thing to mention is the lanyards. Please keep a hold of your lanyards, otherwise you won't be able to get the drinks token, which is drink tokens, which is obviously a very important aspect of a social. So yeah, don't forget them. Joe, anything else to add? Yeah, and if you're not coming, you can leave them, obviously. But yeah, big thank you for you all for coming. A big thank you to the speakers, and a big thank you to our sponsors again for making the event a success. So yeah, thank you very much.